given that the company has received an order of around 1,400 crores approximately. So this takes the total order book now, order inflow actually for the company to around 22,800 crores. This is on a YTD basis for FY26. That's the total order inflow that the company has seen. And this order is mainly a T&D project order in Middle East, Africa, as well as America, where they'll be executing this order. The other stock on my radar is going to be Omnitech Engineering. They've received an order of around 920 crores. And so on the back of this, we could see some green here. Indotech Transformers, the company's customer, one of his customers have said that the company they've cancelled the order for the customer. And from the customer, there's a cancellation of order. I beg your pardon. So that's an around value of 65 crores. So red could be seen here. Borosil, the company has said that the OMCs have restricted LPG supplies, and because of that, one of the Jaipur facility that has limited or stopped the production for some products, while for Opal gas furnaces the production is at a very low capacity and low level. So red could be seen on Borosil Limited as well. And lastly, Dalmia Bharat, green expected here as the company's wholly owned subsidiary, which was going on under some investigation and case that was going on in the ED. Now the proceedings or the criminal proceeding amount that they're to pay has been reduced from 792 crores to just 92 crores, so a reduction by 700 crores, and that's why some positive news at least coming in for Dalmia Bharat.
Right, Vinny, thanks a lot for that. So those are some of the stocks that one should keep on your radar in case you missed it. Let's recap all of them for you. The oil explorers, the upstream oil companies are ones that may benefit from Brent being at around $100 per barrel. Order wins coming in for KC International. Omnitech Engineering and Dalmia Bharat also have positive news flow, whereas stocks with negative news flow are downstream companies, that's oil marketing companies, users like paints, chemicals, and then we have Mahanagar Gas, Indotech Transformers, and Borosil, which have not so good news backing them.
All right, get into a break. On the other side, we'll connect with the management of Happiest Minds. The shares of Happiest Minds have surged over 20% in the last 2 days on the back of the guidance raise. We'll get chatting with the management to know more.
Presented by Standard Chartered.
Associate sponsor, Reliance Industries.
This is Network 18, and you're watching CNBC TV 18.
स्टॉक्स में एक्सपर्ट हूँ, पर कोटक नियो 300 स्टॉक्स में।
Stay Tez with Kotak Neo and get access to daily trading ideas. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
And as you can
Welcome back. Happiest Minds technology has been gaining over the last 2 days as the company revised the FY27 growth expectation to 12.5% from 10% earlier. The company says the AI-first strategy and broader portfolio strategic initiatives are generating measurable traction. We have with us Joseph Anantharaju, co-chairman and CEO of Happiest Minds, joining in. Thank you very much for joining in. So Joseph, let's begin with this guidance raise. 12.5% for FY27, 15% for FY28. What changed in the last 2 months that gives you the confidence to upgrade your outlook now?
Sure. So, Rima, at the beginning of the year, when we announced our 10 transformations, we had also said that these transformations would lay the foundation for 10% growth. And when we announced our AI first strategy in January, we had said that this should lead to accelerated growth and that we will look at what kind of traction we're getting, and we would get back on what that number would look like. So the last month and a half, what we've done is we've done our revenue plan for the year. We've gone to market with our AI first initiative, started talking to customers, and based on the revenue plan that we put together and the growth in pipeline and the revenue plan we presented to the board earlier this week. So once we finished presenting to the board and got the approval, is when we made the announcement, because we thought that's the right thing to do, as we had given a commitment that we would get back when we had announced the AI first strategy. So it's based on the revenue plan that we built, the traction we're getting with AI first, and also a few deals that we've closed that were quite large in size and that would contribute to revenues in FY27.
So, Joseph, can you elaborate on this revenue plan, which gets you to 12.5% next year? How much comes from where? For example, AI and even the other initiatives that you're taking, break that down for us, 12.5%. And what's the AI contribution going to look like? What is the pipeline? Is there a number?
So, Rima, on the pipeline, we've not done that. But what we're going to do is, and we're in the process of kind of making sure we have a consistent approach, both for TCV and for order booking. Because we did feel that at a smaller size, that wasn't a very, and the kind of EN that we have, existing business, we didn't think it was a very representative number, but we're going to start announcing that. But in terms of the revenue plan, what we did is we did a grounds up revenue plan where we had each and every BDM and the respective IG heads work on each account. And based on the discussions we've been having with customers, the visibility that we have, we projected out for each of the accounts. We've also looked at last year's, the number of NN logos that we've closed, the kind of revenues that they're giving. We've projected that out. And we made some assumptions to arrive at what kind of revenues we'd expect on a quarter-on-quarter basis, based on which we've come up with this 12.5%.
That's the methodology, Joseph, by which you've arrived at the revenue plan. What we wanted to know is the details. How much will AI contribute, for instance? What about the other initiatives?
So if you look at AI, and I'll break it up into 2-3 reasons that really got us to increase this growth, Rima. The first one is, I think, for us, if you look at AI, we have generative AI, and I think, and then I'll take AI and also the other components of AI, that's AI-led, that's your data engineering and all of these things. Now, if you look at generative AI, we will be doing around $5 million purely from generative AI for this year from GBS. Next year, we are targeting close to $12 million from GBS. And if you look at the broader AI only, that is generative AI, AI NLP, and things like that, we are looking at something like 15% of our revenues to come from that. And if you look at AI-led, which would include all data engineering and other things, that should be around 25% of our revenues for next year. So that's one thing that, the component that has gone into this. We've closed a few large deals during the quarter for one of the institutes or management institutes in Southeast Asia. We've closed a $3 million deal. Again, that's AI-led. The core of it is AI, the transformation. For another customer, we've closed, we've won a 3-year, $12 million TCV deal using AI for transforming their support.
Joseph, if I can come in, sorry, we just sort of, good morning, Prashant here. And it's good to see, the market's, of course, happy about it. But just a quick point, right? If I look at the last 5 years, profit growth actually has been absolutely flat. And this is even before all these fears of AI, etc. Right? Margins came down from 25% to about 16, 17%. And this is before this new, this all this talk of AI and what this is going to do. And AI generally at the margin perhaps is going to be a little deflationary. Maybe the volume of work will expand. So sales growth is fine over this period. But point is, profit growth has been absolutely flat, stagnant, 5 years now. Joseph, why is that?
So, if you look at the results that we announced, Prashant, our EBITDA is around 20.5, 21%. So again, we have to compare apples to apples. It used to be around 24.5%, and it's come down. And we always have maintained that our range for EBITDA is 20 to 22. So we are within the range that we've been committing and targeting right from when we went public. Right now, if you again look at our margins and EBITDA, there are three factors that have come into play. One is we made quite a bit of investment on our generative AI business unit, because right off the bat, we allocated 100 people. We put in a solid senior leadership, and some of that is beginning to pay off. And I think over a period of time, it will contribute to our margins. Second is we bifurcated our sales team into NN and EEN, account managers, client partners. So that was a huge cost or investment. I would call it investment for last year of close to $3 million, because we hired a totally fresh set of people.
All these initiatives, Joseph, are over the last couple of years, right? Last year or so.
Yeah, last couple of year and a half, 1 year to 2 years.
What I'm saying is, for 5 years, profit growth has been, actually the CAGR has been about minus 4-5%.
No, Prashant, if you go back and look at the our EBITDA percentage till 2.5 years back when we started GBS, it was in the 23 to 24% range, and that's come down only over the last 2.5 years. And as far as the Gen AI being deflationary, again, it depends on how you price it, right? If you're looking at fixed price, and if you factor in your productivity increase from Gen AI, what we've been doing is that we've been splitting the benefit that comes from productivity increase, and where it's more of extended engineering or T&M, it's based on rates, so there is really no deflation. In fact, if you look at GBS and our analytics COE, their rates are much higher than what we command for the rest of the services. GBS would be around 20-25% more, and analytics and AI would be around 10% more from a rate realization standpoint.
Okay.
So do you get back to the 22-24% margin band? You're currently at 22%.
I think, we would, if we get there, I think that'll be good, Rima, but we would be comfortable with 20 to 22%, as long as, we are investing for growth and making sure that
at least till the Vision 2031, where you get to $1 billion of revenue, your plan, the business plan, is the margins stay between 20 to 22%. They don't expand.
Yes. Oh, so we are looking at the the $1 billion based on the 12.5-15% aspirational growth that we project for 28. Looking at the market, so we're trying to see, will it be 2031 or would it get delayed by a year? Because when we made the statement of $1 billion by 2031, market conditions were a little different. But we're hoping that we can get there. But we will. The goal is to get to $1 billion, Rima.
But it might get delayed on account of the current situation right now, the markets. That's what you're trying to signal.
We need to work those numbers out. Yeah.
Thank you. Thank you very much, Joseph, for
very much. Bye-bye.
Thank you. Dipan Mehta, Director of Elixir Equities, is now joining in. Dipan, increasingly, many analysts are saying that, yes, growth for IT is going to remain subdued, but valuations are now increasingly looking very attractive. So maybe they grow at, 3, 4, 5%, but the stocks are currently pricing in 0% terminal growth. So in that sense, there is an opportunity there. Would you concur?
Good morning, Rima. No, I think there's complete confusion when it comes to software services stock. And, we don't know who the winners are going to be because of this AI disruption which is taking place. Could be a large cap company, could be a few small cap companies, could be product companies, could be platform companies. The exact answer is not known and may not be known for many quarters. So keeping that in mind, I think it's best to just keep the entire sector on hold for the time being. The time to sell software is gone, whether it was TCS, Infosys, or Happiest Mind or whatever. The time to sell is gone because they've collected as much as they have. So now, some of the stocks which are looking a bit dicey, you can consider selling on line. And then wait for which are the companies which are really outperforming, like, quarter after quarter, they are managing the AI disruption better. And you'll come to know through the con call transcripts of the performance, the quarterly performance, you'll come to know. And those are the companies that one should target and migrate towards them at the cost of the companies which are not able to manage this AI disruption.
Right, which is exactly why, the safe haven nature of IT and because of low growth, that of FMCG have been under question, which brings the third one back, which is the pharmaceutical space. It did well in an otherwise wobbly market yesterday as well. There are a lot of triggers going forward. typically, not a nice thing to say, but post-war, the demand for medicines, etc., all of that increased too. All these factors, do you think, put pharmaceutical in a decent place right now for one to hide their capital or protect their capital as against get adventurous?
Mangalam, I think that in these market conditions, certainly pharma is a safe place to be in. And one should increase exposure to pharma stock. And there's a huge opportunity when it comes to weight loss drugs, which is coming across all pharma companies. I think every pharma company has got some strategy behind this weight loss drug. And then there is Sun Pharma, which is following a completely different strategy of specialty product, which also we kind of endorse. And then, of course, this Biocon on the screen, which has got many molecules, which can get scale, but although it's disappointed so far. And there's a Wokhart, which is into kind of new chemical entities or new molecules, which also can be, can have fantastic growth over there. So I think one has to go a bit deeper into the pharma industry. There could be a few good winners over there. We were very bullish on contract manufacturing companies, but the results this quarter were quite disastrous, to say the least. Negative growth rates. And although the management commentary is confident, but on the ground, I think there are certain challenges. Could be interim, but let's wait and watch.
All right, we will wait and watch. In fact, on Monday itself, we did a big, town hall on semaglutide, the opportunity, and the numbers that threw up were fairly impressive. Over $1 billion worth an opportunity in India itself, and a lot more globally. We'll take a short break. Stay on, Deepan. We'll have a lot more questions for you. But on the other side, we'll also get Sudarshan Sukhani and Mitesh Thakkar for some technical trading ideas. Welcome back. Yesterday was a painful day if you were a bull. The Nifty down 400 points, the Nifty Bank down 1,200 points. The mid-caps not doing very well as well. And looks like the start could be equally painful given the sort of weakness that we've seen overnight and the uncertainty, the rise in crude prices. But amidst all of this, there were a bunch of stocks that saw big moves on either side, some of them backed by delivery and heavy volumes as well. The GIFT Nifty indicating a 227-point downtick, Hormaz, what do you have on your list of movers?
Morning, Mangalam. And one big name that was making headlines yesterday for its down move was Colgate-Palmolive, and as the top F&O loser in yesterday's trading session, among the top losers on the Nifty 500 as well. It was the biggest single-day drop in 6 years for the stock, and volumes too were the highest in 4 months. At almost 20 lakh shares that were 15 or 16 odd lakh shares that were traded. The 20-day average is just 3.5 lakh, and a quarter of those shares were marked for delivery, around 4.5 lakh shares, which is also higher than the 20-day average. And the stock, after yesterday's down move, is now back towards its 52-week lows. The other one that was selling off sharply yesterday was Bajaj Finance, and it was the top Nifty loser yesterday, the biggest single-day fall in 4 months. And over the last 11 sessions, the stock has gained only twice. There's the kind of pressure that you have seen on the stock. Wednesday's volumes also were the highest in over a month. Over a crore shares were traded yesterday. The 20-day average of 75 lakh, and 60% of those were marked for delivery. Is around 65 lakh shares, also above its 20-day average. And from its budget day low, the stock had moved up to levels of 1,000 plus, and it's given up all of those gains, and it's now back to those budget day lows of around 890. And lastly, Happiest Minds. At the start of the trading session yesterday, the stock was up another 12%, but then cooled off substantially from the highs, ended just around about 2.5% higher. Volumes yesterday were a triple that of the move that the stock had seen on Tuesday. Almost 7 crore shares were traded. The average is only 17 lakh shares. Even the delivery volumes were double that of Tuesday. Only 5% of those shares traded yesterday were marked for delivery, but 32 lakh shares traded. The 20-day average only 3 lakh shares, and the third most traded stock on the Nifty 500 in yesterday's trading session. The turnover yesterday was around 85% of its free float market cap.
Yeah, no, absolutely. And we just had the management with us. Thanks very much, Hormuz, for that. Well, let's talk about brokerage calls of what we're focusing on. Sud is here with that list. Good morning.
Morning, Prashant. So Nomura has initiated coverage on some of the NBFCs. First one is Piramal Enterprises, have a buy call and target price is 2,150 rupees per share. Buy on L&T Finance, target price 325. Buy on Tata Capital, target price 400, and has neutral call on HDB Finance, and here target price is 760 rupees per share. And so that some of the segments are ripe for transformation, and all these 4 NBFCs will deliver high teens to 20% plus loan growth CAGR over FY 26-28, and 3 of these 4 NBFCs to deliver ROE expansion of above mid-teens by FY 28. Next one is Maruti Suzuki. Motilal Oswal maintains buy call and target price is 17,406 rupees per share. It says recent underperformance in relation to relative to the auto industry has been mainly because of 2 reasons. First, near-term underperformance in the wholesales, and second, disappointing Q3 performance. But Motilal also believes that these concerns seem to be overdone because retail demand from Maruti Suzuki remains healthy, and wholesale is likely to improve from the month of April. Expect company to post 16% earnings CAGR over FY 25-28. Last one is Titan. UBS maintains buy call with a target price of 5,300 rupees per share. It says store checks suggest growth momentum has continued, and it's a major compounding story, and it has mentioned few reasons. First, it's still midway into compounding journey. Second, consistent operating performance and margin delivery continue to surpass the expectations. Third, it will be a key beneficiary of the long-term shift from unorganized to organized sector in the jewelry segment. And fourth, should see 15 to 20% revenue growth trajectory for next several years. Fifth, lab-grown diamond foray allows Titan to shape value proposition of studded jewelry. And last one is Damas could unlock another engine for growth and value creation over the next several years.
All right, Darshan, take your point. Titan has been doing well. It's in this market just about 5% away from its all-time high. So valuation's not particularly, comforting. But then again, the growth path of the company stays ahead. Deepan, your view on Titan at these levels, and at the same time, if you could give us a sense on what do you think of Maruti? Because you've in the past liked it. The stock is now available about 22% lower than its all-time high.
I think, no, Titan, as a measure of disclosure, both Titan and Maruti, we are invested in. I think great long-term stocks to we remain invested in. Amongst the few nifty companies which can grow at kind of mid-teens kind of growth rates, and there are very few within the Nifty 50 or the top 100 for that matter. But within the jewelry space, although Titan has been a great wealth creator, I think some of the stocks they're looking at which can give higher returns but have a higher risk profile are also the smaller companies like, say, Kalyan Jewelers, or for that matter, there's a company B2B called Sky Gold, So like that, there's so these are the companies, smaller companies in the jewelry industry may outperform Titan once present market stabilizes. When it comes to Maruti, the preference for M&M and Eicher Motors is better than Maruti. So although you may remain invested, I think incremental capital into the auto industry has to be in these two outperforming companies. And even as we speak, I think their model rollout, their EV strategies in the case of M&M, the export opportunity which say Eicher is facing is far better than a Maruti. So I would prefer to go with the other two players within the auto space. Even the CV players are looking very interesting, whether it's Tata Motors or Ashok Leyland. I think they're entering into a nice upcycle over there as well. So there are a lot of choices in the auto industry which I think are better than Maruti.
Bharti is a stock which has been struggling since the start of the year. There's an interesting note from Jefferies, and they're saying the chances of a June tariff hike are low now because of the potential rise in inflation on account of rising energy prices. So therefore, the ability of a telecom company to increase tariffs, at least till June, July, which was the street expectation, looks difficult. So that is reason number one, that the potential tariff increase could be delayed. And secondly, even the Jio IPO, they're saying could be delayed, because they're saying that even 6 months after the SEBI approval for reducing the minimum stake sale requirement for large IPOs to 2.5%, the final Gazette notification has not yet come, which means this could potentially, delay Jio's IPO. And that's perhaps the reason why we've seen the stock struggle a bit. From the start of the year, Bharti Airtel share price is down nearly 15% and about 16-17% from its recent highs. Dipan, you were looking at stocks which could offer very strong earnings growth over the medium term. So Bharti Airtel was considered to be one of them. Now you're seeing a bit of a correction in the stock price. Does it make it attractive?
Right now, Rima, we're not looking at any stock in an attractive zone. Let this war settle, let the market settle. I think we are in for another brutal day. So, in my experience, when the market is falling the way it is, there's no point, looking at anything which is attractive or which is cheap. Something which is cheap can get cheaper. Yes, but I think I still maintain that Bharti can have relative outperformance over the medium to long term. And there is scope for tariff to move up higher. Also, I think a lot of value and growth is coming in from its subsidiaries, from its African operations. So that also will certainly benefit Bharti Airtel. And all the capex is well behind them, and it's a great play on operating leverage as well. So we would remain invested in Bharti, but as I said, fresh investment, I'm a bit catchy on any counter for that matter. I mean, look at the way the markets have been trading. Yesterday also, kind of the floor fell through the market, and today in the morning also, we're in for another knock. So that I think, does kind of put investors away. The sentiment is quite poor.
Yeah, no, absolutely. And I think it's coming on the today, whatever happens, I mean, if the GIFT Nifty, just pull it up. If it comes up with a 200-point cut, that's on the back of yesterday's 400-point sell-off. So a little respite, right? I mean, that's the kind of market we're in. So very quickly, we are back at about 23,700. That is the implied open. 23,697 or so was the low. And then from there, we got that sharp bounce on Tuesday, which continued for a while on Wednesday. But of course, I mean, I think all of that now, of course, reversing. We'll take a quick commercial break here. Deepan, thank you very much for being with us. Always appreciate it. Let's just come back with Manoj Gori of Equirus Securities. And of course, we'll put the spotlight on the hot summer, which looks like it's going to be hot. And some categories like air conditioners, etc. It's a kind of a seasonal trade, but it does take place and it's happening. I think we saw some of that yesterday as well. The other, of course, story is induction cookers, right? I mean, I think sold out. Just go to Amazon, Flipkart, wherever, and try and buy an induction cooker. I mean, I think sales have gone through the roof over the last 48 hours, maybe a little more. Stay tuned, coming up.
Welcome back. It was a brutal 1,300 points sell-off on the Sensex yesterday, 400 points lower on the Nifty by close. Sudarshan Sukhani and Mitesh Thakkar are now joining in to tell us that if we have a gap down opening, what should the trade be? Gentlemen, good morning. Thank you for joining in. Sudarshan, you want to go first? If we start lower, 150, 100, 150, 200 points, what would the strategy be?
Yeah, good morning. Well, yesterday when we broke down from 24,000, that confirmed that the rally was a dead cat bounce, a small bear market rally, let's put it this way. And that rally exhausted itself. So this decline is the intermediate trend of the market. It's very difficult for traders to catch downswings. So for that reason, I think the trade is step aside and do nothing. But under any circumstances, do not buy. If you best play today is to do nothing.
Best trade today is to do nothing. Well, that's zero is always better than negative. Mitesh, your call?
We've been trading with some kind of negative prices. I'm saying that at least, if not directly shorting the index, you can do put spreads, you can do buying to put options. I think today's gap down in that sense will be a good time to take some profits off. I think 23,600, 500 zone is a minor pivot historical charts if you look at it. And therefore, if you open around this 23,650 odd zones, then the downside, could be slightly limited. Plus, let's not forget that we're extremely oversold on the daily and the intraday charts, which means that the stop losses are far away and the immediate reward could be in danger. So my first reaction would be to take some profits on the short position and see how it goes from there.
Do you think the 23,700 mark will hold, Mitesh, since you're going short?
No. We've been short since I think last 1.5 weeks. But I think it might hold in the short term. But I was looking at the medium-term charts, and I've commented this yesterday and day before yesterday as well. For both the indices, the Bank Nifty and the Nifty, the medium and the long-term charts have weakened, which means that eventually I think we'll keep making much lower lows. What can happen is that from every support pivot, and because you're oversold as well, you might see a short covering rally like we had possibly on Tuesday, a bounce back, which will be a slight pullback to the short-term moving averages. I think that can keep on happening, and that's why tactically you need to figure out where to cut your positions and then re-enter them again on a bounce back, etc.
Let's talk stocks then. Mitesh, what do you have?
I have 3 sells and a buy call. On the selling side is AU Bank. Yesterday we had, I think, Induction Bank and Federal Bank before that. AU Bank is also getting into negative mode. Sell here with a stop at 931.5 for a first target of 890. Marico had a very big red candlestick pattern and a lot of indicators kind of turned negative. So that is a sell with a stop at 773 for targets of 740. A sell on Motherson with a stop at 124.5, and I would look for targets close to about 115 here. And one buy call, that's Astral. Stock closed at a fresh swing high. The setup is still very positive. In case you get it slightly lower in the opening gap down on the index, buy around 1730.35 with a stop below 1699, and look for a target of 1790.
All right, so those are a bunch of stocks on your radar. Sudarshan, what about you? No trade on the index, individual stocks. Do you go long, short, mixed approach?
So it's mainly short. 361 is a short with a stop above 1065. Eternal is a short again with a stop above 229. Tech Mahindra is a short with a stop above 1355. My only buy is Glenmark. That sector is doing differently, which is a buy with a stop under 2230.
I'll take that point. Pharmaceutical has been an outperformer. But Sudarshan, positionally, what's your call on the index? If even one does not trade today, at what important levels should one look at a trade on either side, maybe long or short?
If you are a positional trader, you could actually buy put options and then look for a decline towards 23,000.
Okay, decline towards 23,000 by buying put options. The pre-open rates are, just trickling in. Obviously, we have to wait some settlement out here, but it's not looking particularly good. Down 264 to 265 points on the Nifty. Early days in the pre-open rate itself, because there's a big disparity between both Nifty as well as Sensex. But among the stocks that stand out on the way down, and it's basically ones that we expected them to open lower. HPCL, BPCL, IOC are the ones, oil marketing companies. So HPCL comes up for you down about 5% straight off the bat. And we are seeing a big up move come by in a couple of these cooker makers as well. Once again, that, the trade of induction cookers, etc., playing out. At least in the pre-open, we will await some sort of settlement. But let's shift focus to the cooling category. They're seeing strong traction while the early onset of summer has come by. We'll also watch out for demand trends in induction cookers as LPG supply disruptions trigger concerns. Remember, Vijay Sales told CNBC TV18 yesterday that it expects a make-up season after last year's loss due to rains. To discuss this and more, we do have Manoj Gori, who is the Associate Director, Equity Research at Equitas, who joins in. Manoj, good morning. You know, same time last year, I remember the clamor around higher demand for cooling products increased because there was a heat wave. What happened immediately thereafter was there was pre-seasonal monsoons, and then the industry never recovered through the course of the year. Do you think that is likely to play out today, this season as well, or this time is different?
Yeah, thank you for having me. See, if you look at this year, I think situation seems to be very different as compared to last year. Last year was one of the outlier year, which we believe, based on various analysis, most of the retailers at pan-India level had highlighted like it's one of the outlier year. Summer, which was probably one of the coolest summer in last 4 to 6 decades. And it's very unlikely that it might get repeat in current calendar year as well. Also, if you look at the weather forecast, what we believe is that during the month of March, and especially for the first 3 weeks of April, which remains a key summer month for cooling product categories. So there, if you look at, we are seeing hardly any rainfall, especially in the month of April, in most of the larger markets at the country level. So this gives a lot of confidence. Probably April, which is the largest month for cooling product categories, is likely to witness very strong demand at pan-India level. And we have already started seeing some of the initial traction for summer product categories at pan-India level right now. Yeah.
So.
Okay. Got that. What is your own projection then in terms of the revenue growth for the companies? You would have had a chat with dealers, with the companies. What are the numbers going to look like for this summer season in terms of sales? And there's also been a price increase on account of the rupee depreciation. To what extent have prices gone up? And is that curtailing demand? What is the feedback?
See, currently, if you look at from a demand standpoint, somewhere we believe that volumes are likely to grow by around 20% for calendar year 26 versus calendar year 25. So volume growth will be roughly around 20%, and this will be further supported by roughly around 8 to 10% kind of price hikes. Now, over last couple of months, especially in February, what we have seen is roughly 4.5% kind of price hikes were already initiated by the brands for room ACs. And recently, in last few days, there is another round of price increase of approximately 3%. So cumulatively, if you look at 7.5 to 8% price hikes are already taken, and those are being absorbed in the market. Brands actually require close to around 10 to 12% kind of price hikes, given the RM inflation, B rating change, and your INR depreciation. In this scenario, 8% price hike has been taken. Couple of percentage will be will be coming from your cost rationalization measures by the brand, and then there might be another round of price increases if the demand continues to remain strong.
What's the inventory at the dealer level, and what's the kind of growth that you are anticipating this summer for all these players?
So roughly, if you look at, given that last year was a washout year, we believe like a 20% kind of growth in volume terms seems very much possible. And in fact, last year, not only summers were impacted, but in fact, the second summer, which normally comes into West and South markets during September and October period, there was hardly any demand during the second summer. So considering the summer season and the second summer, we believe 20% growth, volume growth number seems to be very much possible for the industry.
Best placed stock in the room air conditioning market, if you have to buy right now, Voltas, Blue Star, Havells, LG, who would you go with?
We believe like probably over last 4 to 5 years, when you look at the strong execution track record, Plus, if you look at the continuous market share gains, Blue Star has demonstrated strong execution capabilities.
Okay.
We continue to like Blue Star in the space. And then we look at Voltas. We believe like the market share losses, which we were seeing for last 2 to 3 years, probably those concerns are behind us. This year, we might see Voltas gaining up at least some ground on the market share side as well. So Blue Star, Voltas, and LG, we believe like relatively a better place for the current season.
Right. Manoj, do you track some of these, cooker companies, maybe Stovecraft, TTK Prestige, and some part of Crompton Consumer, Butterfly, etc.? All of them, are seeing this massive surge in induction cooktops, etc., because of the fear of LPG shortage. Do you believe that this is a tactical bet?
See, if you look at over last few days, given that there has been uncertainties on LPG supply, there has been significant rise in demand. Over last few days, probably one can easily say that demand would be 2x, 3x as compared to last year. Now, when you look at the demand, probably brands, market leaders like TTK Prestige, or followed by Philips, or even Pigeon and other brands that you highlighted, are likely to benefit. Unfortunately, we believe like brands were not prepared for this kind of growth. And if this kind of growth continues for another 10 to 15 days, we might see some supply challenges also from the brands. So yes, there has been a sharp spike in demand as of now, which is roughly around 2x, 3x versus last year. But we need to also look at how the supply chain is managed by the respective brands.
And do you see any fear if, for instance, demand continues and companies align their supply chains and suddenly things go on the mend, and as a result of which they are stuck with inventory? Is that a risk as well?
See, this year player channel, if you look at, is playing very smartly. Last year, there was a pure mismatch between primary and secondary sales. Eventually, if you look at the secondary level for room ACs, the demand was not so much impacted for CY25 as a year as a whole. But there was a mismatch between primary and secondary sales. This year, channel also has been very smart. They are not just trying to be very aggressive. They are just playing in a phased manner, tracking the end demand and eventually looking to buy. But somewhere when you enter into April, May and June, the base for brands is very favorable. And accordingly, we might see very strong growth from April, May, June quarter onwards till at least third quarter of FY27. So probably the roadmap or the estimate that we are currently building for FY27 continues to remain very strong.
Just have you been tracking the KEI polycap? Some analysts are pointing out that the demand has been weak in Q3. Is that the feedback on the ground? What's the extent of the demand erosion? What is driving it? Is it the copper price volatility? How bad is it?
So if you look at copper prices started to increase from roughly around November end and majorly into December, where we saw copper prices move, LME copper prices moving from close to around 9,500 USD to roughly around 12,000 USD. Now, channel was anticipating this trend should continue. Accordingly, they went very aggressive to build inventories to stock up low-cost inventories. Now, if you look at, they were already sitting at higher inventories, and currently, when you look at the LME copper prices, are very stable at close to around 13,000 USD. So in this scenario, now channel also, given that there has been some uncertainty at the or from the end demand point of view, channel has definitely taken a step for inventory correction, and that has led to some impact on primary sales for the respective brands. So this is a temporary phenomena, we believe right now. Probably this might continue to impact probably till March or maybe till April. But somewhere from May and June, we believe like the underlying demand trends continue to remain very robust, and we expect the demand to improve gradually from there on.
All right, take that point, Manoj. Thanks a lot for that. Just a final word on margin outlook for all these companies, given the sharp spike that we've seen in raw material prices?
See, I think the best part for room ACs right now is that there was GST reduction from 28% to 18%, which led to 7.8% of net saving for the consumer. In this scenario, when you look at 7.8%, brands were easily able to take the price hike and pass on the impact, and without impacting the affordability index for the consumer. So we believe somewhere there will be marginally here and there on the marginal impact on the margins, but not anything significant, especially on the negative side.
Take that point.
And
thank you so much.
If the current demand trend continues, we believe like even margins can surprise positively also.
All right, take that point. Thank you so much for joining in and giving us your views on this entire space. Not particularly good news for all of us when we feel hot, but obviously good news for all these cooling products. It's 9:10, and let's get in Sudarshan and Mitesh back again for their 9:10 calls. Sudarshan.
Well, Glenmark, by Glenmark, the initial stop is 22.30. You may adjust it depending on how the gaps work out.
Mitesh?
I'll go with the sell call on AU Bank.
All right, a sell call on AU Bank and a buy on Glenmark are the calls from Mitesh and Sudarshan. Let's talk about Britannia. There has been an initiating coverage on the stock. Antique has initiated coverage. They have a target price of 7,000 rupees, buy rating obviously, and they are saying it's biscuits and beyond. Obviously, the thesis is not very different from what Britannia's thesis has been in the past itself. A compelling medium-term investment opportunity within the FMCG space. What they like is the company's premiumization push within core biscuits category, scaling of higher margin adjacent categories, the likes of cake, rusk, and all the other dairy products that the company is putting out with cheese, etc. Distribution expansion in under-penetrated markets, the likes of Hindi states and a lot of the rural areas where the company has increased its distribution footprint. GST rate cut from 18%, it's come down to 5%, 18 and 12%, it's come down to 5%, so that's a positive. And as of now, stable raw material prices, which keeps margins in check as well. The big difference here is that they valued the company at 50 times FY28 price to earnings, which is actually a 16% premium to its 10-year average. And that's how they come up to that 7,000 rupee target price. Will be very interesting to track because, a lot of investors on the street are calling for structural derating of the FMCG pack given low growth projections. But if you're valuing that company at a 16% premium to the last 10-year average, it'll be very interesting to see whether the street takes that or not.
Well, I think, we're just, less than a minute away from market open. So we'll just stick with prices and look at where we land. I think it's sharply lower, about 200 points, just under 200 points lower is where the pre-open session is settled at. And 23,675 is that what that translates to. So once again, I think as it happens when oil spikes, all the oil sensitives, of course, take a bit of a knock. But it's not just limited to that. Across the board, the pain is being felt of course, the problem is that the supply of oil through that strait, which remains disrupted with no real end in sight. All actors there talking in different tones and saying different things. 23,600, 630, 640 is where we're at. So basically, we've broken below the this week's low, which was about 23,697 or so. So it's a full 1% gone, straight to the word go. The Nifty Bank is down 1.5%. And this is the newer kind of worry, banks, and which you didn't have to worry about till about 10 days back. That perception has changed, and maybe there is a perception that there is stress coming here as far as the banking space goes. 54,875 on the Nifty Bank as well. Mid-cap index is down 1. Small-cap index perhaps will come up on your screen. And there as well should be in line with that a third of a percent cut on the small-cap index. So 2:1 declines to advances is what you have so far. So there's a lone stock in the green, and that is Coal India. Everything else is down, and Indigo and ICICI and Eternal, L&T, Kotak, basically 49 down and 1 up. That basically tells you the state of affairs. We're at 23,600, on the verge of breaking 23,600 as of now.
Just a word on Coal India. You said the lone stock in the green is Coal India. That stock is up by all of 1 rupee. So it's obviously not as big a gain that we're seeing. And now we're seeing some bit of a smidge of a spike in ONGC, which is also higher by about 50 paise, but by and large, a weak day. Rima?
Well, 48 out of the 50 stocks in the red, and deep cuts on Interglobe Aviation. That's the top loser, 3.5% lower, 4,200 on Interglobe Aviation. Then come all the banks. So let's start with ICICI Bank. That's 2.5% down. Kotak Mahindra Bank slides 1.7%. Auto names are not spared. Yesterday, autos were the biggest drags. M&M, Tata Motors, passenger vehicles, Eicher Motors. Across the board, you are seeing cuts. Bajaj Auto, where there is fear about the auto rickshaw sales in the state of Maharashtra as new permits have been halted or paused for now. Bajaj Auto continues to slide lower this week. Bajaj Auto is down nearly 6-7%. Eternal has been the weakest link in the market from the start of the year, now 22% lower from the beginning of 2026. So Eternal continues to see pressure. Induction, stuffed tops have been completely sold out on all the on Amazon, Blinkit, Big Basket, etc. L&T has been under pressure. L&T is lower by 2.5% today. I think there's no place to hide. Shriram Finance has been weak. You've got even PSU banks like State Bank of India. Trent is down 1.5%. Pull up a Bharti Airtel, where Jefferies is highlighting the possibility of tariff hikes gets pushed further down the road, may not happen in June as per their earlier expectation. So that's under pressure. Reliance Industries, 0.5% lower. IT is in the red, but not falling as much. You've got an HCL Tech Mahindra in the green, but you've got mild downticks of about 0.5 to 1% on the other large cap IT names. Infosys, TCS down close to about 0.8%. And now it's only Coal India, which is flat, not even in the green.
Not even in the green. The only places to hide right now in the mid-cap end of things are Adani Total Gas. Yesterday was a big surge that we saw in the stock, up almost 20%, and right now, straight off the bat, it's up 13%, taking the last 2-3 sessions gains to over 30% on that stock. So Adani Total Gas is the one which is actually, catching everyone by surprise on the way up. The other group of stocks are the Induction cooktop stocks. So you have TTK Prestige, another 13% higher today. Stovecraft is another 9% higher today. Butterfly, Gandhimati, the one that we spoke about earlier as well, up 7%. So all these stocks this week itself up anywhere between 25 to 30%. HOEC has an element of upstream, has both oil and gas. That stock is up around 6% as well. Bajaj Electricals also has some bit of electrical appliances out there, so that stock higher as we speak too. Bajaj Electricals is the one that I'm talking about. But on the obverse side, we have a lot of stocks which are declining. So Astral down 6%, Borosil down 5%. Pipes, the ones that did well yesterday are selling off as well. WeWork is the other one which is lower. Aether India, the chemical stock, down around 4% too. Then you have HPCL, Mahanagar Gas, IOC, PG Electroplast, Jubilant Foodworks, Dixon Tech, you name it, it's all lower. And as we speak, the mid-cap index down nearly 1,000 points, and the Nifty Bank swiftly getting there as well. Broken below the 55,000 mark, now on the verge of breaking 54,800, down 920 points for the Nifty Bank, and the Nifty is down all of 300 points at the open itself, well below the 23,600 mark as well, and good 100, 200 points below the Monday low that we hit of 23,700 thereabouts.
Yeah, absolutely. Let's we'll of course look at prices and how they move, but they're all down for now. So 23,565 with very little exception as of now. Sridhar Sivaram is with us. He's investment director at Enam Holdings. Sridhar, good morning. Great to have you with us. Thanks for joining us. I just want to start with banks, Sridhar. So that's a relatively newer area to see a fair bit of damage, private banks especially. What's the worry? Is it there's a thinking that what's happening in the rest of the economy will show up in banks as well, or this precedes the latest Iran issue? What's the underlying worry?
So actually, I've been having a non-consensus view on private banks for a while now, and I put out a lot of data on my LinkedIn on why private banks, especially the large ones, have some issues. I think what has happened is, if you take the last 12 months or even 18 months, PSU banks have become very aggressive on the retail space, which has been like the bastion for private banks. Last quarter numbers were a bit staggering, that the PSU banks, if you take the top 6 PSU banks leaving SBI, their loan growth, the retail loan growth was almost 23%. And compare that with the top 3 private banks with roughly similar assets, which is 60 lakh crores for these 6 PSU banks, and top 3 private banks also roughly loan book is 60 lakh crores, the overall loan book. Their retail loan book grown single digits. Mortgages for the PSUs were about 17-18% growth. And this is about 6-7%. Vehicle was even more shocking, almost 20% for the PSUs. And it was single digit for almost 1 or 2% for the private banks. And what has happened is that you're seeing full page ads from PSU banks, home loans at 725, vehicle loans at 775, 8, which we have never seen. The earlier view was stray loans people will take, but on size, nobody goes to take an auto loan from a PSU bank. That has flipped. So when I speak to the PSU banks and I question the profitability model for them, their point is, my guidance is 275 to 3% NIM, 1% ROA. I'm able to reach with this. A 1% ROA for a private bank is a no-no, right? So basically, in our view, the profit pool for the banking sector has shrunk because the same technology that earlier was something unique to the private sector banks. Now, most PSU banks have invested in technology. The CIBIL score is common for everybody. And they use all the other tech. If you speak to SBI, they'll tell you what all technology measures they use. So I think that's what has happened. The profit pool for the banks are shrinking. It is difficult for them to then move out of such a large segment and find newer segments. So if you see the loan growth of private sector banks, the larger ones, they were disappointing. So I think that is the issue that we are facing, that will they be able to... Heydays, private sector banks used to give you 20% profit growth. We are now in the 10% profit growth band.
But
so
just to complete that, and that's, I think, beautifully explained, the entire thesis. And you're absolutely right, and you got it. You were early on this one, and the market, of course, is now reacting. So it's a profit pool question.
Yes.
It's not a asset quality issue.
It's not an asset quality issue. Yeah, it's not. It's just a question of reset. That what is the profit pool for the banks? The earlier thesis was private sector banks keep chipping away, taking market share from PSU banks. That has flipped. So it's now the PSU banks bouncing back, taking market share from the private sector banks, and that too from a pool which was very profitable for the private sector banks because they were making very strong ROAs on this. They're literally vacating a mortgage space, a vehicle loan space, because they think there isn't enough profit. But the PSU banks are happy because their ask is much lower. They're
so classic, your margin is my opportunity sort of question.
Exactly.
But, you know, I take your point completely, but all of that perhaps is, how much of that is in the price? The reason why I ask this, and you know, the director will pull up both the Nifty PSU bank and the private bank index over the last 1 year or so. It's not that HDFC Bank has done much in terms of returns over the last couple of years. Neither has ICICI Bank or, you know, even if you look at Kotak Mahindra Bank as well. The last 1 year, the PSU Bank index is up 51%. In, you know, the comparison with that, the private bank index is up just 9%. So it's already seen a near 4 times outperformance. So it's, I mean, the thesis, while intact, it's also showing up in the price. How much more from here on?
So, you know, large part of the selling in the private banks is coming from FIIs. And when I speak to my, you know, friends in New York or in Hong Kong who run large FII funds, the point they're making is that exactly this, that why would I want to invest in a private bank which is giving me a 10% profit growth with a 2.5 price to book? I'm getting similar growth banks in XYZ region at half the multiple. So that is the question here, that if you're going to grow at 10%, is a 2.5% price to book multiple justified? I'm not here to justify any of this. I have a view, and in fact, within our firm, people have differing views. So what I'm saying is all my views. This is my view, that, you know, I don't think it makes sense. I've seen these banks grow at much faster rate. There is something structural that is happening. These banks have to change their business model a bit, maybe lower profitability, and maybe lower price to book multiple, which market's already doing right now. Maybe there's an opportunity, but this is my view. That's how I'm.
I mean, if the thesis is right, the difference in price to book is still quite a bit, right?
It is.
There is. I mean, the difference. I mean, if it's got to go that way, there is a long way to go. I mean, if that thesis is right, is what I'm saying.
Yeah, but keep in mind that they still make reasonable ROAs despite all this. So your lower growth is because you're trying to protect your ROA. So for the ROA, maybe there's a case. So many of these private sector banks, if you take the last 5-year performance, have not been that spectacular. They either have been just in line with the market or in some cases even below. What if this were to extend to another 3 years? That is a question people are asking, that if they are going to give suboptimal returns in terms of market returns, then should I stay invested in this or should I look for other opportunities? My personal view is that they will give suboptimal returns. So it's not like they're going to collapse, but you can use them as a funding source. If you find better opportunities somewhere else, use them to fund your opportunities.
Do you have a view that if private banks continue to grow at 10%, what is the appropriate price to book multiple? Your own view.
So it becomes very bank specific, right? So every bank, a smaller bank can possibly grow slightly faster. If you're very large, it is difficult. But SBI has shown that despite being large, is growing faster. So I think it is very stock specific. I will not be able to give an exact answer what should be the price to book multiple. But if your growth is in the 10-12% range, then it seems like these price to book multiples, in my view, look slightly more expensive.
Okay, let's talk about the markets then. You know, if you look at the price action, Sridhar, it just seems that now maybe the markets are realizing that this is going to be a prolonged conflict. It's not going to be a quick couple of days, Trump declares victory, etc. Have you all started talking about the worst case scenario?
See, honestly, we are not geopolitical experts. None of us are.
But you look at the tape,
Yeah,
you look at the ticker every day, and you'll have views on this.
We were not trade experts. We have to now suddenly look at a lot of things. But my own personal view is that this drags longer than what most experts are anticipating. And it has a lot of cascading effect. We are just looking at crude and oil, but it just extends a lot because the fact that crude or LPG or LNG disruption has impact in, say, mining because of sulfur, it has impact in plastics, it has impacts in refinery, it has so many impacts. It's very difficult for us to, literally go and figure out what exactly will be the impact. We were expecting that we'll get about 15% earnings growth for the market next year. We think at least maybe 3 to 4% percentage points will reduce from there.
Wow.
So
if at this juncture with 2 weeks of war in, or if this prolongs, then 3 to 4%?
Yeah, at this juncture, because 2 weeks of war is not just 2 weeks.
Yeah.
To get restoration of normalcy is another month.
Right.
So you're talking of already, almost 45 days of disruption. So that impacts your first quarter already. So we think that this can impact by about 300 to 400 basis points of earnings for next year, provided everything comes back to normalcy in that period.
Where are then the opportunities? Because, I'm just going sector by sector. Banks, you've said, there is that private sector versus public sector bank sort of problem here. IT has its own AI-related challenges. Then you have FMCG, where obviously growth isn't coming by. And if you think banks should not be trading at the multiples that they are for the growth that they're showing, then FMCG is a different can of worms out there. A lot of the new age companies which are growing extremely fast are trading at near triple-digit price to earnings as well. Where do you find opportunity?
This is exactly the conversation I'm having with somebody, my ex-colleague in New York.
Okay.
That why should I invest in India on the large cap? I'm not saying that this was the answer, but obviously there are stock-specific opportunities. Keep in mind that Asia is going through an earnings super cycle as we speak. So I'm removing the war-related issues.
Yes.
Korea will grow at 100% earnings this year. Taiwan
is up 3x already.
Yeah. Despite all the volatility,
still, I think, at 10 times earnings, huh?
Yeah, it's at 10 times earnings. Korea is already up 30% year to date, despite all the volatility. It was down 15% one day. You can just adjust all that. Taiwan earnings are growing between 25 and 30%. Even China earnings are growing between 15 and 18. This is pre-war. Obviously, you will have to adjust some of it, and they are all at substantial discounts to India. So when fund managers tell me that FIs are selling, they're making a mistake, they'll have to come back and buy at a higher price, I mean, you have to be an asset allocator sitting in New York or Singapore to understand what they're doing. I mean, this is not the only market. So there are other markets available. Having said that, these are cycles. I've seen many cycles. Those earnings are cyclical. They will turn. Our earnings are low. They will also turn. So there are opportunities in the market. So I'm not painting a doomsday scenario. I'm just saying these are cycles. And we live through these cycles. We find opportunities. So maybe there aren't enough opportunities in the large cap space as we speak. Maybe pharma is a large space where we find a lot of opportunities. As we come down the large cap, there are enough and more opportunities. And as you know, that mid and small caps have literally got decimated. We don't invest so much in the small, but in the mid cap space, which is slightly larger, there is enough and more opportunities, which is more stock specific. That's the point I'm making. That it may not be sector. Yeah, so you can say power sector, there are opportunities because you need the power demand is constantly going to be there. There are manufacturing opportunities which are coming up because of China +1, some opportunities in the chemical space. When you dig down deep, there are enough opportunities. But for somebody sitting in New York or Hong Kong, when you're looking at top down, in heydays, it used to be just buy IT, buy financials, buy some infrastructure, and then you're done, and everything moves up. That has changed. That's the point I'm making.
You can, but in the broader space, Sridhar, you're still saying that you can make a reasonably 15, 20 stock portfolios, choosing single stocks. I mean, if you were starting a small cap fund or a small and mid cap fund,
you can make. You can easily make. As I said, I may not be bullish on, say, large private sector banks, but there could be opportunities in slightly niche banks or NBFCs. So it's not like everything is in danger zone. Some have their own challenges, and the market has to adjust to those challenges. If it is already priced in, if they're priced in for a 10% growth, I mean, like in heydays, we used to be bullish on PSU banks, not because they were growing at 20%. They were growing at 10%, but the market has mispriced it. So there are a lot of mispricing in the market, which may not be there in the large cap space, because you also know that in the large cap space, there's so much of money coming in. On a one-year basis, Nifty is still up. So we're talking of doomsday today, but the Nifty is still up on a one-year basis. So that's the point I'm making, that the opportunity seems to be below the Nifty.
And from the highs, I think today we might have hit the 10% mark as of today. Well, I think wonderful interview, very sort of wholesome, I should say, and you explained it very well, the private sector bank thesis. And we'll see what happens, but always a pleasure speaking with you.
Thank you.
Appreciate it. Thank you very much.
All right, let's move on now. Sandeep Poundrik, Secretary of Ministry of Steel, is now joining in, and the conversation with him will focus on 3 points. One, of course, West Asia war-led disruption. This point number 2 is CBAM and decarbonization challenge, and the way forward for NMDC Steel and RINL. Thank you very much, sir, for joining in. This is Rima here. So top of mind for everyone today is the Iran war. It's disrupting supply chains, it's driving up input prices, curtailing gas and other supplies. How is the government looking to mitigate these issues, given that gas is critical for secondary steel producers, coking coal, etc.? And what have the companies themselves also told you?
So, thank you. Good morning. Basically speaking, as you said, that like any other industrial sector, steel sector is also impacted by the present situation. There are 3 or 4 things which are basically impacting the steel sector. First, obviously, is the propane. Now, most of the steel industry, especially the ISPs, use propane for different units. And the scarcity of propane may affect their operations. The second is natural gas. Many industries use natural gas. Third is LPG, especially for small steel producers, because many of them use LPG for industrial use. And the last is, to some extent, limestone, a large quantity of which is imported from Middle East, especially UAE and Oman. Now, you asked how are we looking at it. So it's a issue. Companies and steel sector is trying to find solutions or alternatives. So, for example, limestone, if I take, they are trying to see that whether they can source it domestically from Rajasthan or other industries, other mines. As far as propane is concerned, There are not many alternatives, so they are trying to use it optimally to the extent possible. Natural gas, again, they can use some alternatives, but not much. So this is a real problem for steel sector, and as far as government is concerned, we are trying to see that they are provided what is possible within the circumstances. And we are also talking with the steel sector that they are able to take alternative solutions to the extent possible. We have held consultations with steel sector to see what is the extent of the problem. And
Mr.
we are
Pondrik,
in consultation with MOPNG. We are trying to find.
What is the, good morning, sir, Prashant here. What is the cut right now that we've seen coming through for the steel sector?
So till now, I would not say there is cut. Like you know that most of the steel plants have supplies. So if I take about sale, talk about sale, they have about 20-25 days of supplies of propane with them. Similarly for limestone, they have supplies. So it's not as if the production is being cut today. But if the problem continues, then raw material supply or gas and propane supply may become a problem in coming days. So to date, as per our available information and as per what we have held consultations with the industry, today there is no production cut. All steel plants are running full ISPs. There may be some problem with the small steel producers who are dependent on LPG. That we are looking into.
Would, I mean, just to take that example of sale, Mr. Pondrik, would they calibrate production? Because you said they have propane for 20-25 days. So in that sense, they will in turn, decide who to sell steel. I mean, essentially decide the order of priority, like the government decided the order of priority for gas. Go on.
So, as I said, as of today, they are not looking at scaling down the production, at least for a few days. The production of ISPs is going full throttle. But if the problem continues, then they will have to see how to calibrate the production. Because as I said, propane is a vital input for them.
Perhaps that, Mr. Pondrik, with what's taking place in China as well, right? If you look at China, in Jan-Feb, their steel exports declined by about 8%. Now, with us having to face a possible production calibration, not immediately, but maybe if it prolongs, then do you think the risk of China dumping their steel into India is real? And what protection measures are we taking for that?
If we look at this year's numbers till now, from April to February, our overall imports have in fact gone down by about 37% as compared to same period for the last year. So imports have significantly gone down especially after the safeguard duty imposed by the government. I don't see in the short term any impact of imports, because even today our domestic production capabilities are more than the consumption. So our consumption has increased this year by about 7.2% from April to February, while our production has increased, finished steel production has increased by 10.2%. So our production capabilities are there domestically. If this problem continues for a long time, then we will have to see how the consumption and production are matched. But then I would presume that if this continues for a long time, it will also have impact on the consumption, not only on production. Right. So there is an impact for both.
And were that to happen, would you consider then any sort of additional protection measures for the industry, if that was to happen, hypothetically?
I can't comment on that now. That's something in the future. For now, we are going with the present safeguard duty and other measures.
So you said some small steel producers have been impacted. Could you give us an indication to what extent, how many have shut shop or have been impacted? And then I'll come to the next question.
So we don't have the exact numbers now, but we have received representations from associations of small steel producers saying that they are feeling scarcity of LPG. So I can't really give you any clear number or a proportion, but they are anticipating problems because of shortage of LPG. That's what they have communicated to us. We are just still holding consultations and looking at the problem.
So one issue you said is the supply of propane natural gas. For now, it's okay. We've got about 20-25 days of supply. But the other is also the price. To what extent are steel producers feeling a surge in the overall raw material basket for them? To what extent has been the inflationary cost of this?
So as far as propane is concerned, and I'm talking only about SAIL right now, I don't have the numbers for other ISPs about the raw material supplies they have right now. But the price of propane has not increased because that is domestically produced. It's only could impact because the oil companies or refineries will produce more LPGs. It's not as if propane is coming from outside. Natural gas, on the other hand, may have impact on price because it's imported to a large extent. So we will have to see how, but I don't see that as a major cost implication for steel because while these inputs are important, they are not a large chunk of the price basket. So they are very small as in terms of cost of production. So that should not be a major problem. More important is the supply assurance.
Mr. Pondrik, in terms of end product, right, it impacts, this shortage disruption impacts all end products equally, or specialized steel more, or, if you were to sort of look at this from that angle, could you clarify? Yeah. So basically, see, if you see propane is majorly used for cutting off slabs in the continuous casters. So that's a general, means it impacts almost all mills where it is being done. So that's a general product. I don't see this propane to be sort of product specific unless it is being used somewhere in a special mill. On the other hand, the natural gas is being used by some mills, not by all mills. So that will have impact on it will have partial impact on mills and producers who are using natural gas. So, for example, SAIL doesn't use natural gas, but many private producers use natural gas. So it will have different impact on different producers. And as I said, limestone should not be a problem because we have domestic supply. So but I don't see too much variation as a specialty steel or steel. It will have a general impact on the sector if it continues for a foreseeable future. So this time, in terms of timeline, in your assessment, internal ministry timeline, you earlier said if it continues for a few more days, maybe they will have to think about calibration. So obviously it's all fluid and dynamic, right?
Yeah, as I said, SAIL has 20-25 days of supplies. Others also have supplies. So let us wait. Maybe if things continue for 2 more weeks, then we will have to see how to proceed. But for now, things are under control.
What about coking coal availability right now? How important would that be to the value chain? Because that is nearly all of that is imported.
Yeah, that's correct. But then coking coal mostly comes, roughly 60% comes from Australia. So that's not a problem for now. About 30% comes from USA and Russia. So that's again not a major impact for now. And we also have domestic coking coal availability, though it is only about 10%. Again, almost all steel plants have enough coking coal supplies. Every plant has roughly a month of supply with them, always, normally. So coking coal, I don't see any problem
Okay.
for now.
So one final question then on Europe. Because Europe accounts for, I think, close to about half of India's steel exports, and Europe imposed those CBAM, Carbon Market Adjustment Mechanism, from 1st of January, via which there is a tax on exports from India, 25 to 30%. Has there been a loss in sales to Europe? If yes, on account of that? And two, is the government looking to take steps to address that?
So I will take it means first about the exports. So if you actually see the numbers, this year our exports have increased by roughly 36% as compared to last year. So there has been increase in exports, and most of our exports go to Europe. As you know, a significant portion goes to Europe. Now, in terms of impact of CBAM, yes, it will have an impact. But if you see the numbers, there means for first 2 months since January and February, there has not been much impact, but it will have an impact if means the CBAM will have an impact. Now you said what are we trying to do about it? So as you know, there are discussions going on on the CBAM issue with European Union. We are trying to find out a solution. What our stand is that whatever carbon tax or indirect carbon tax is being paid by the producers in India should be taken into account when that is calculated for export of steel to Europe. That is a technical discussion still going on, and we will have to see how means what decision is taken on that.
Yeah. Mr. Pandrik, I just briefly on LPG, sir, which is where the situation, I guess, is the most delicate. What's the, it's so obviously a topic of conversation, discussion, deliberation within the government. Where are we at, sir? I mean, that of course also is what is the public is most in that sense concerned about, right? So just your thoughts.
I don't think I am the right person to answer that question about availability of LPG. I can only talk about steel sector. As I said, to some extent, small steel producers are impacted.
Okay.
ISPs don't use much of LPG.
Yeah. Okay, fair enough. My question was obviously slightly broader, but I understand. And thank you very much for coming on. Clarifies a great deal. And thank you for joining us here on CNBC TV 18. We'll take a quick commercial break here. We will, of course, focus on exactly that, the energy shortage the shortage which will emerge, as Mr. Pandrik also said, if this goes on for the foreseeable future. We'll be joined by M.K. Surana, former CMD of HPCL, and Sandeep Kumar Gupta, former CMD of GAIL, to talk about these disruptions. Stay tuned.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
Welcome back. Still down about 1% on the index, but we've managed to recover from a low of 23,556. So from that level, there has been a recovery of close to about 75 odd points. But let's turn our attention now to commodities. Manisha is joining in with more on crude. Manisha.
Well, thank you so much for that. It continues to be very, very volatile each day when we are looking at $10 to $12 of a move coming in on every single day. It has been between 10 to 15% of a move as well as that we've seen in the last couple of sessions as well. And today is no different, where you are looking at nearly 9% of gains. We are back above $100 a barrel, and this is after 82 of a low that we saw just a couple of days ago. Well, gasoline also is trading at a 4-year highs. You have heating oil prices, which are up 6% in the Asian markets right now, and that also is at 3.5-year highs into the markets there. Supply disruptions caused by Iran war is one of the major reasons that we've seen markets continue to react in this way. And then Iran conflict has entered day 13, and the Gulf producers have cut output anywhere between 6 to 12% as per whatever report that you're reading there. It also has to do with the reports about 2 international tankers being attacked in Iraq waters. That has led to premium coming back in case of prices there. And Iran conflict, remember, has just about continued, even despite claims from US that war is close to an end. Take a look at the IEA numbers and the reaction of that into the market. So IEA, after that discussion in last 3 or 4 sessions, has finally approved largest ever release of reserves at around 400 million barrels. This is double of what we saw in 2022 at 182 million barrels therein. Now, IEA members hold emergency stockpiles of around 1.2 billion barrels. And in addition to that, there is 600 million barrels, which that is held as an industry stock under government obligations as per 90 days of holdings therein. So what the markets really are looking at is US releasing 172 million barrels out of this 400, and Japan is wanting to pitch in with 80 million barrels as well. Interestingly, the street believes that 400 million barrels is something that the markets have already digested and factored in. And also the fact that this is going to be a one-time release with the kind of holdings that IEA and the G7 countries have, they may not be able to do something like this yet again. Apart from that, it is also about the crude availability to refiners, which would be at various destinations. So as early as next week is when we will see Japan start to release these stocks. The other IEA or the G7 countries, what is the timeline, what areas, what destinations is still not clear. Apart from that, this is about crude oil. The issues of the gas shortages are not resolved, and that seems to be weaving its way into the markets as well. Apart from that, Canada, which is also part of G7 and within the IEA as well, says that they are already at record high levels of oil and natural gas output and exports, and they will not be able to add anything more. Canada regulator in Sense of Energy also says that Canada has minimal short-term ability to further increase production. So that member and various other members like that are perhaps out. Interestingly, when you look at the crude oil price forecast going ahead, the first week of January, most of the markets believe that we are going to a surplus area, and you could be looking at bearish crude oil prices. But some of the banks and brokerages are actually now talking about a deficit in the first and the second quarter as well. Take a look at Bank of America report that came in last evening, which says that the second quarter average for crude could be at $80 a barrel, but prices could surge to $100 or even $130 a barrel in case of a severe scenario going forward. A report from JP Morgan Chase also says that the Brent could see $120 a barrel on strained or suspended disruption in case of a Strait of Hormuz that we already are dealing with. Citi also says that the Brent will continue to trade between that $80 to $90 a barrel range for the next 1 to 2 weeks. Nobody clearly is giving you a long-term sense right now, because once we see what the next 2 weeks bring in is where we will see more reactions coming in. But there also is a report from Barclays which says that they have various scenarios in the markets right now, but there's a 10% scenario which implies that the Brent could go to $150 a barrel before the end of the month of March itself. So it's all over the place right now, with most of the banks and brokerages suggesting that we are in for higher crude prices.
Absolutely. Thanks very much for that, Manisha. So important details. Well, let's talk about the energy security and potential energy shortages. Mr. M.K. Surana is former CMD of HPCL, and we have Sandeep Kumar Gupta, former CMD of GAIL, now joining in. So thanks very much, both of you, for joining us. You know, Mr. Gupta, you would, of course, when you joined earlier this week, you were absolutely prescient when you said that the situation is delicate for LPG. I think this was Tuesday morning. And since then, I think we've heard the government come in, talk about that particular issue. We've heard it from, specific ministries. We've had this priority of gas allocation, etc., which has been put out. If I can start with you, Mr. Gupta, where are we at now with regards to LPG?
Yeah, good morning, Prashant, and good morning, your colleagues also. Good morning, viewers. Good morning, Suranaji. Thank you for bringing me here again. At the start of this war, the oil companies had estimated that they have about 3 to 4 weeks of supplies of LPG available with them. And I believe they must have factored in all that is filled in tanks, in cylinders, what is in transit beyond the Strait of Hormuz, etc. So even if we consider that it is on an average, say about 25 days on an average basis, from that level, actually some supplies to industries and commercial establishments has been rationed or cut. So that provides additional cushion for domestic consumers, definitely. As I said, about 13% of the consumption goes to C&I, 9% to commercial, and about 3 to 4% in industrial. So a rationing of that supplies to C&I segment provides additional comfort to domestic consumers. Besides that, the government has mandated 25% increase in production from refineries. So presently, the yield on an average basis is about 4% of the crude processed. So 25% increase from that level will provide additional cushion. So in my estimate, I've done a back of envelope calculation. I think up to 31 days a month, there should not be any problem. So I think by end of this month, there should not be any problem for domestic consumers. Yes, we have to see what is the decision of the committee which has been constituted by the OMCs, 3 OMCs, about the supplies to commercial and industrial establishments. But I think for the general public, for the households, there is no reason to panic. And I believe they are comfortable for next 10 to 15 days, definitely. And beyond that, we will have to see, we will have to review the situation.
Right. Yeah, so that's very, very helpful. But because you're saying that till the end of the month, right, 31 days, but that is basically from the start of the war, because we're already 10 days in, 11, 12 days in.
Yes.
So there should be no problem in LPG availability till the end of this month.
And fresh cargoes have also been sourced. So at least 2 cargoes yesterday, the Joint Secretary from Ministry of Petroleum mentioned that 2 cargoes are on the way. And I'm very sure that there is no dearth of LPG worldwide, and more cargoes will be sourced shortly, which will further shore up the stocks in India.
But I can tell you, I mean, and you did say no reason for households to panic, people to panic on LPG. And I think that should come as a reassurance, because you must have seen, right, the sales of induction cookers, etc., through the roof. And people, of course, anticipating and preparing for what can happen if this continues for an indefinite period of time. Mr. Surana, your own thoughts, sir. As Mr. Gupta said, I mean, some of the from the refinery output side as well, there perhaps will be more diversion towards this. But you heard, Mr. Gupta, your own assessment of the situation?
Yeah, good morning, Prashant and Gupta ji and all viewers. I fully agree with what Mr. Sandeep Gupta is saying about the situation. But I also want to add one thing, that what you are seeing the queuing today is basically not purely because of the shortage, but it is also because of the psychology which works on the people. And we have seen it happening in the past also. Whenever the people think that there are going to be shortage, people start keeping the second cylinder full, people start hoarding, even some nearby cylinders are available, they will try to take that. And especially the industrial, the hoteliers, the restaurant people, they also try to garner some of the domestic cylinders in the process. Otherwise, nothing would happen in 2 days, which will make all of a sudden a shortage. So the queues which you are seeing right now is more because of the panic which has got created. And maybe in today's digital world, the things work whole 24/7 and the negative news run faster. So the fun part is that the long queues, etc., which you are seeing may not be purely because all households are having a shortage of the LPG. That's number one. So this rush goes on for 2, 3, 4 days in the initial stage, and then it subsides. The second thing is availability. Of course, the situation is unprecedented, so it is not a business as usual. But the LPG as such is available in the world, so it is only to get it because you might be having the sources which were more near to you, and now you have to get from further distances. So it may take time, but you have got the LPG from US, from Australia, from Canada, and you can source it. So you have to manage the intermediate time. And In that process, government has taken some proactive actions like repurposing or giving prioritizing to domestic sector compared to the industrial sector, and diverting whole of the propane and butane and C3, C4 components purely for the LPG purposes. So you will hear the noises from the industrial customers and the commercial customers in between. But these are the situations which we need to deal. And I think government has taken what are the actions are required to be taken. And I can tell you, being in the part of the industry, that the topmost priority on the oil marketing companies and the government, which remains, is the ensuring the supply. Everything else comes subservient to that. So I'm sure that the people are working overtime to ensure that. And but one thing which we need to be guarding always, that it cannot go on forever, which I have been mentioning since last week, that the intermediate measures can give you a reprieve to tide over the situation, but it cannot solve the problem forever. And more you continue with these constraints, more and more problem will you have an escalating mechanism. So while I'm sure that the government is doing, and yesterday Joint Secretary has mentioned all the measures which they have taken, so people need not panic. And in the past also, we have always ensured, whether it is flood or famine or lockout or riots or anything, the domestic cooking gas was provided. And I'm sure that it will be done this time.
You know, just to complete that point, and as our colleagues are pointing out, Mr. Surana or Mr. Gupta, if you want to come in, the problem also, there is, of course, I mean, if this goes on for the foreseeable future, there perhaps is an actual problem. But the problem also is that the booking system for LPG seems to be not working as well. So while dealers are saying that we have supply, but we can't give it out as the system is down, the tech is not working. I mean, that's something that's some feedback that we've got from across the board when we've done channel checks. Mr. Surana, you want to take that?
No, there may be two components to it, because government has said that there will be a cooling time of 25 days between the two booking cylinder, and people may not be aware of it. So even if the people who have booked the cylinder just less than 25 days, they are trying to book it again, it must be blocking. That may be one part of it. The second part of it is too many people rushing in to book it together. There may be some issue. But that part, technical problem can be looked at by the industry. And the third part is just to create a panic. The miscreants will try to ensure to see that the system doesn't work, so the black marketing happens. So we need to take care of all the three things.
Mr. Gupta, very quickly, you were there in, I think, IOC, when in 2022, when the IEA decided to release strategic reserves to the tune of 182 million. Now, once again, they're planning to do that, 400 million. India is not participating this time, the last time they had. To what extent do you think, and how will it benefit India and the shortages that we are seeing? What are your thoughts?
No, the question is that release of barrels in the market will definitely bring that much supply. So let's say 20 million barrels were not coming from Hormuz for almost 13 days now. So 400 million is equivalent to 20 days of supplies from that. So it definitely cools off the market. Is it a solution forever? Answer is definitely no. But it definitely gives a reprieve. And the country like India may not be participating in it, but the oil is a world commodity, international commodity. So if the oil barrels are available in the market, it does help, because wherever it goes, the remaining barrels will come to us. So it does help. Now, the question is that whether it will happen immediately, it will take some time, because the mechanism of it is that these are held by the countries concerned and their governments, and they have to have the mechanisms of release from various places. There may be some issues related to infrastructure to release that all of a sudden, and where it gets reached. But definitely it will help. There is no doubt about it. But this is one-time solution. Then we have to hope that within the next 1 week we have a solution to the problem.
Oil itself, crude oil, sorry, Mr. Gupta, go on, please.
Yeah, Prashant, I would like to supplement.
Yes.
One, the East-West pipeline of Saudi Arabia, which leads crude oil to Yanbu port in the Red Sea, that can also provide additional 5 million barrels per day to the world. And on the top of it, this 400 million barrels. So put together, I think this is about a month's supply to the world, which has been ensured. So definitely this will have an effect on cooling of the prices, and also while India may not get, but India will be getting the rest of the crude which is available in the world. So definitely every country will be benefited by these moves.
Yeah, absolutely.
In fact, Saudi had started that Yanbu pipeline, and I understand that some cargoes are coming from the Red Sea on that.
Okay.
And also some of the cargoes can start from Fujairah of UAE, which is down the straits, and So that gives a reprieve of around 6.5 to 7 million barrels a day.
But this, Mr. Gupta, have you heard of Mr. Surana about, there were some reports of Iran hitting commercial ships, etc. But there were some reports that ship Bangladeshi cargo, etc. is passing through. I mean, have you heard whether we are able to strike an agreement with Iran for safe passage, or not really? Any of you?
I do not have any idea about it.
Mr. Surana?
No, there will be some back channels work must be going on, but I don't think that we should be discussing those part of the things here. Because if something works out, it is good for the country, but it will always have some diplomatic connotations.
Yeah. Mr. Gupta, you gave us the estimation on LPG. Do you have a similar estimation for natural gas, sir?
Natural gas, I mentioned earlier also that the natural gas position is not that critical, considering that almost only 60 million standard cubic meters per day passes through Strait of Hormuz, which can be managed through cuts on non-essential sectors. And thereafter, on 9th of March, there has been a natural gas supply regulation order from the government, which has rationed the natural gas supplies to industries and various consumption centers. So while there is 100% priority to the domestic consumption, but for fertilizers have been restricted to 70%, and the C&I segment of CGDs and the industries supplied by the pipeline operators directly or the marketeers directly is also restricted to 80% level. So with these measures, I am very sure that on natural gas front, there is not going to be any problem for quite some time.
Got it. Thank you very much. We'll leave it there, gentlemen, and thank you for joining us with your expertise. And we look forward. Yes, Mr. Gupta.
Since there is a panic, I must tell again that on an average, on a country basis, there is a consumption of only 4 cylinders per household on an average basis. Even if we consider liberal users and those who have got large number of family members, even then I do not assume that a cylinder can be consumed more than once in a month. So there should not be any reason for panic. And again, while ministry has already instituted mechanism that there will not be any booking before 25 days of last supply, I believe the oil company should create that message also whenever the booking is being attempted, so that it does not create a panic situation. But the general public should not panic, and they should also start alternative measures like maybe installing electric stoves or induction cookers, etc. To ease the situation. Yeah.
No, absolutely.
So in that situation, we all must collaborate.
Absolutely, absolutely. Well put, sir. Thank you very much, Mr. Gupta, for joining us. Mr. Surana, really appreciate your time here, and hope we can sort of, come back to you as the situation develops and hopefully improves. Thank you. We'll take a break. We are back with, an eye on the markets, which have recovered, by the way. We are back about 23,600. So that's the focus on the other side.
मेरा रुतबा है मेरा सिग्नेचर दुनिया की सोच से ऊपर बेबाक है मेरा सिग्नेचर सिग्नेचर फाइनेस्ट सिल्वर इलायची a premium product from दिलबाग ग्रुप
अरे टेंशन किस बात की सेंचुरी प्रोबूट का प्रीमियम प्लस है ना लो एमिशन है हाई डेंसिटी है वाटर रेजिस्टेंट भी टर्माइट एंड बोरो रेजिस्टेंट भी है यानी ये है जहां नो टेंशन वहां
प्रीमियम प्लस बाय सेंचुरी प्रोबूट
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
Welcome to Market Masters. We can't steer away from markets, can we? Because today the Nifty has officially entered correction terrain. The index is down 10.5% from its February 1st high of 26,328. So, do we bottom fish on the hope that the war won't be endless? Or should we brace for even bear market terrain, correction leading to bear market terrain? Of course, the rupee is also at a fresh new low. Again, after the Gulf War, we are going to be impacted by AI, and that will be upon us. So what do investors do at this point in time? I have with me someone who routinely answers these questions. I have with me my former favorite colleague and right now CEO of Ashika Institutional Equities, Rahul Arora. Good morning, Rahul. Welcome back.
Thank you for having me on the show, Lada, man. It's a pleasure to be back.
Okay, well, we have to discuss serious questions now. Can't indulge in the luxury of nostalgia. Well, at this point in time, would you tell your investors, tell your clients, don't invest at all?
Yeah, I think, Lata, we're not catching a falling knife. I think the one thing people need to understand is why this is happening is Trump did not have the House in his first term. He has the Senate and the House in this term. And the midterms are still a good 9 months away. Yes. And our assessment by speaking to people in the United States is that the geopolitical threats are not going to recede because he needs these distractions for reasons well known. And so this is probably going to be a very turbulent year for equity markets. So we were I think, Lata, when the year started, people were looking at an earnings revival in FY27. I think that has got overshadowed. Now, the question is, most investors were not expecting 24,000 to break on the Nifty. They thought it would be a range-bound year, 24, 27. Now that has broken. So while we don't look at technicals that closely, but our sense is that if this heads another 500,000 points lower, better prices will be available. Valuations are certainly attractive, Lata, I think, especially in the IT sector, which have come off so dramatically because of the other news points, Anthropic and the likes. But I would not be rushing in to catch a falling knife at this point.
Okay, so I wanted to come to that. You know, it's a falling knife in many areas, but some places may already be attractive. Mm-hmm. And they may get more attractive, but it is still a good place to buy. Are there sectors like that?
Absolutely, Lata. So I think let's start with IT services, right? I think if you look at the cash balances of IT companies in India, they have very high free cash flow and dividend yields. My sense is when you talk about reskilling employees, particularly above the age of 35, 40, it's not easy when you're talking about AI and stuff. So if they reduce their cash balances, which will have a very positive impact on the ROE of the companies, and you actually buy out talent and companies, my sense is that IT could be a very good contra buy. People are not thinking of it in that sense, but I think certain companies is, whether it's $100 million or $1 billion, I think Coforge recently made a very large acquisition as well. So I think if you look at TCS, Infosys, the bellwethers, I think most of them are 16 to 18 times, which was 26, 27 times when this started. Even in mid-caps, I think if nothing goes wrong, Coforge Persistent will still grow by 25-30% on sales, EBITDA and PAT. So I think that could be one contrarian. We're literally sitting at the start of March, Lata, and you're already seeing the heat wave that's there. I think companies like Blue Star, Voltas, obviously the optical valuations are not that cheap at 40 times, but if you do have a situation where these companies can grow north of 20-25%, which is a very strong possibility, then I think there is a case for some of these valuations to inch up closer to 50 times. Defense, which is probably a no-brainer in the current environment, but even stripping this environment out, the finance minister made her highest allocation to defense in the union budget. It was a 15.5% increase in the defense budget. So I think that looks like an interesting theme. And I would
their valuations are rich.
Absolutely, I think.
HAL, BEL, by their historical standards, they are rich.
Yes, but I think, Lata, the challenge there is that there is a scarcity premium. I think there are only 9 or 10 defense stocks where you can really, no disrespect meant to any company, but if you go out of the top 10 defense companies and let's say an ICICI Prudential or SBI wants to build a 500,000 crores position in a defense stock, it's very, very difficult. So they chase those stocks and optically. I take your point. Most of the valuations are 2x the ROE, ROCs. But I think the way we look at it, Lata, is even if there is no incremental order win in the defense stocks right now, the kind of backlog that they have in the order book to bill ratio, they should be able to sustain a 20% growth. And I would be a contra buyer in everything that is going wrong because of what's happening in the world. Consumer discretionary names like aviation, you've had some positive news for around liquor recently. I think that looks like an interesting space. Beer is anyway consumed in summer. So UB, UNSP could be interesting contra buys. And you do have the release of Dhurandhar 2 that is on the anvil. And there are many other, there is Ramayan and stuff like that, Animal 2. So this could be a good year for the return of PVR Inox, which has been a stock that no one's spoken about. So there are certainly pockets in the market, consumer discretionary, consumer durables, defense, IT, and your favorite sector, Lata, I would be a blind buyer in BFSI. I have the courage to go in and buy today. If your viewers don't, they can wait. But I think if you strip out the subsidiary valuations of most banks, including HDFC, Kotak, etc., they're trading close to 2 times. Of course, with the subsidiaries, there'll be 2.4, 2.6,
I think,
whatever.
over there, the worry is, for instance, HDFC, ICICI, when you speak to fund managers, the problem is that where will foreigners sell? These are the stocks they have. So it's not because the companies are doing badly, but because foreigners have Taiwan and Korea and China to buy. They will have to liquidate Nifty stocks.
The only counter to that, Lata, and that's a point well made and well taken. The only counter to that is if you see the last month's numbers of the scheduled commercial banks, if you look at the non-food credit growth, that's already at 13.5%. It's inching towards 14.5%. These are numbers we've not seen for a very, very long time. So there is genuine growth that is coming out.
15.
Exactly. Right. So, when you are in that situation where NIMs probably have bottomed out, I don't think we'll get many more interest rate cuts from here. Asset quality, and you'd remember the last time we had this asset quality blowout 15-20 years back, with some of your younger investors may not have been around at that point. None of those exist. We are talking about digitization and AI, so cost to income ratios will obviously come down. So I think you are looking at a situation where banks could compound earnings by 15-18% if credit growth hovers in that 13-15%. So while I understand selling pressure could be there, but they may be tempted with the growth rate returning. That are there any other pockets, so to speak, where they can probably liquidate from? Because, I mean, Lata, the valuations are very, very tempting in the BFSI sector right now. And the growth rates become better when you look at the NBFCs, the AU, Avases, and the Aptises of the world. Then you grow at 20% plus. So, of course, their valuations are about 3 times, but still nowhere close to the highs.
There is a bit of an asset quality scare.
Sure.
We heard about the ceramic industry getting hit in Gujarat. You will eventually hear of other victims of shortages, hotels, gig workers. There are pockets which are getting impacted. So, the consumption cycle, which depends on people having jobs, is at the moment in a bit of a jitter. And that's hurting banks in terms of fears of asset quality. It perhaps may not come true. Well, when you spoke about air conditioners, I was thinking of another set of consumer durables, which is the staple conversation we have these days. Induction stoves. So is there a TTK purchase or is there a Havells buy? Those are the companies that make these. It must not be a big part of their product portfolio. But do you think consumer durables of that nature also make for buys?
No, absolutely. I think it may be transient. It may be a couple of quarters phenomena because it may then recede once, the LPG gas production numbers come back. But you missed out another very popular name, which is Pigeon, Stovecraft.
Okay, yes.
So I think that's another one that's, predominantly into these kind of businesses. But yeah, I think the one thing that's changed, Lata, for a lot of these consumer durable and electrical companies, if you go back, say 10, 15 years back, they had one area of specialization. And this holds true for even companies that are in washing machines, AC. Now everyone's entered everyone's territory. They've added capacities, and I think what's the one person who's really benefited, or a couple of people, are the people who are technically doing the conversion work or the white labeling, which is Dixon and Amber. So I think if you look at Dixon Technologies, for example, I don't remember the last time Dixon's valuations were this low for a company that has 30-35% return on equity and capital employed, still 30% growth, and you're getting it at 30-35 times 1 year forward. So to me, that is a screaming buy straight up, maybe followed by a Blue Star. I would look at trading Stovecraft, to your specific question on induction tops and so on and so forth. And I think Havells looks like a good play. I think Lloyd is genuinely turning around. When we've interacted with the management over the last 1 year, there is a certain premium to positioning. I think when we speak to retailers like Chroma and Vijay Sales and the way they're retailing Lloyd, so wherever there is a touch and feel, we do tend to go on the ground and figure it out. We do go to the Chroma next door.
Would you look at asset allocation differently now?
Absolutely.
Do you think debt needs a better look?
Absolutely, Lata. I think this is a year where, let's take a profile of someone like me who's single, not no dependents and no kids. I would still say maybe 50 to 60% in equity. That number may have been closer to 70-80%, a few months back. I do think there is a genuine case for gold and silver even now. Government securities, fixed deposits. So I think maybe 50, maybe if you have a little more gumption, 60% equity, I'd say 20% gold and silver. That takes you to 80, maybe 15% government securities, FDs, and 5% cash. And if you want to do real estate, Lata, I think commercial real estate, I've been talking to some of my friends, banks are paying very well for ATM. If you have a 300, 500 square foot commercial, I think commercial real estate allocation, if you have that kind of capital. But I think more than sector and stock allocation, you've hit the nail on the head. I think this is going to be a year of asset allocation. And I think the people who go down that route. I mean, look at it, Lata. You're getting the US 10-year at what, 4.2, 4.5, right? And if you look at India, for example, if you have a 12% earnings growth next year, post LTCG, post 3-4% rupee depreciation, plus inflation in their home country, you're looking at what, 5.5-6%. So that's the challenge FIs have in India. For 1.5% delta on the US 10-year, is it worth taking a risk on the Indian market right now? So that's the way I'm looking at it. I'm sure foreign capital will return at some point, but I think we'll probably have to navigate the next 3-4 months, with a little more turbulence, is my sense.
Okay. Yes, and that will give you enough time to set up your own team, which I believe is on the anvil.
Yes.
Thank you very much, Rahul, for joining us. And as always, you will go out with flying colours in whatever you undertake. All the very best for your new
Always a pleasure, Lata, ma'am. Thank you so much for having me.
Well, that's one word coming on how you should look at asset allocation as well as allocating within the equity space. I hope you enjoyed that as much as I did, because Rahul is an old friend. Wrap up on Bazaar and Market Masters. On that note, Chartbusters coming.
स्टॉक्स में एक्सपर्ट हूं, पर कोटक नियो 300 स्टॉक्स में।
Stay Tez with Kotak Neo and get access to daily trading ideas. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
This is Network 18 and you're watching CNBC TV 18.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation with a commitment to doing it right.
The Indian market opens with a gap down. Crude rallies back above $100 a barrel with no sign of de-escalation in the West Asia war. The Nifty gives up key levels to trade below 23,600. Autos are the top sectoral losers. Broader markets worse off.
Crude rallies are back above the $100 a barrel mark as Strait of Hormuz remains shut for energy transit. Explorers trade flat. Crude sensitives like paints, stocks as well as oil marketing companies take a hit.
Kotak Institutional Equities cuts its target on L&T to 4,000 rupees a share as the crisis in West Asia threatens to hit financials in the short term while medium-term prospects remain uncertain.
Uncertainty in West Asia also weighs on Indigo. Citi cuts its target price as higher fuel prices, airspace disruptions and weaker rupee could hit financials just as operations were normalizing after the December disruption.
Fears of an extended gas supply shortage result in a surge in sales of induction cookware, electric cookers and other related items. Stocks of TTK Prestige, Stovecraft and Bajaj Electricals continue to rally.
Hello, good morning. You're tuned into Chartbusters on CNBC TV 18. We're coming live from the CNBC TV 18 Motilal Oswal studios. I'm Vinny Motiwala. With me is my colleague Sonal Putra. Sonal, a very good morning to you, but not a great morning coming in for the markets. Continue to trade below 24,000. Yesterday also it was there. Now today it's 23,600 right now. Above that level as we have just gone in the last half an hour, but before that we were trading below that level as well. Broader end of the market that also continues to be under pressure. Banks also seeing a decline. So today also a bit of a red again on the screens, though from the day's lowest point, some bit of a recovery is what we could highlight, but not much, at least is what we're
seeing. You know, that recovery came by at 10 a.m. as well, but that was sold into. So there's another attempt to recover from those lows of the day. We were at 23,556. That's the low of the day. We opened at 23,674, but it continues to be a down day. A bigger worry is what we are seeing in the broader markets because the mid-cap index, that is indicating the advanced decline ratio at 1:4. So yesterday we were, so basically we started yesterday with more advancing stocks versus declining stocks, but by the time we ended the trading session, the situation had reversed. But for now, we don't see any relief as far as the mid-cap index is concerned. Autos continue to be the biggest laggard today, followed by metals and realty names. So it's a good time to get a technical check on the markets. Let's welcome Sachitanand Uttekar of Trade Bulls for just that. Sachidanand, there was some recovery that we saw at 10 a.m. that got sold into. Now there's another attempt to recovery above the 23,600 mark for now. Do you think we could sustain it, or there could be another sell-off from there?
Good morning. Look at the overall setup. I think the level at around 23,550 looks very promising. We already have a confirmation of a rebound here, and we are expecting that this particular rebound may stretch towards 23,820 kind of a zone. If you look at the daily RSI, it had been we've already seen a positive.
All right, Sachidanand, we'll try connecting with you again. There's some technical issue, but these are important levels that we'll be watching out for, considering that 23,600 was the one that we broke today, but recovered from those levels.
Absolutely. Important to keep an eye out on the key levels now and where we're going to be headed in the second half, or most of the trading session that's left as well. But a lot of stocks also that are moving around in the trading session as well. So whether you look at something like an Interglobe Aviation that's under pressure, we have L&T that's under pressure as well. So we'll watch out for those individual names as well. But we have Sachidanand who's back with us as well. Sachidanand, you are talking about the levels in terms of the markets. Could you take us through that as well?
Good morning, Vinny. I think this particular support at 23,550 is very durable. We already have a confirmation of a positive divergence on the 60-minute scale, indicating a pullback towards 23,830 kind of a zone. So what we are recommending is to buy this particular dip, at least from a bounce back perspective. From a level perspective, I think one can keep a stop loss at 23,560 on closing base. Review their positions close to around 23,840, 830 kind of a zone. When we look at Nifty Bank as well, the level at around 55,000 looks very promising. We are expecting a relief rally there towards 56,000, 56,200 in a day or so. If you look at the constituents, ICICI Bank are holding on.
Okay, all right. Sachidanand, looks like the technical issue continues. We'll come back to you, but for now, we'll slip into a short break. When we come back, we'll talk about specific stocks that are making news in the markets today. Stay tuned for that. Welcome back. Well, there is some recovery now. Nifty is above the 23,700 mark. So a lot of these banking stocks which are contributing to the recovery that we're seeing from the lows. Even the mid-cap index has recovered. So watch out for that. But there are individual names which are on our radar, and India's power sector continues to be in focus. There is, after subdued summer and winter in FY26, focus has shifted to FY27 trends in anticipation of a better year. Morgan Stanley flags multiple triggers for renewable power. Let's go across to Vivek for more. Vivek.
Well, that's right. You know, FY26 was a year which was extremely unusual in terms of power demand, actually being quite subdued. In a couple of months, you actually saw degrowth on a year-on-year basis. What are the reasons for that? Like you highlighted, a very strong winter and also unseasonal summer, where you did see rains come about even during the months of summer. On the back of that, you did see power stocks derate and see quite a bit of selling pressure emerge over there. Now, FY27, you know, it appears as though the tide has turned. Multiple parts of the country are, in fact, facing heat waves, and it's expected to be a strong summer this time around, flagged off by multiple weather forecasting agencies as well. Along with that, on account of the ongoing conflict as far as West Asia is concerned, there are risks of lower supplies from gas as well as hydropower generation in FY27, at least in the first half. So Morgan Stanley today has come out with a note. What they're saying is that thermal coal-based power generation could now face or need to take incremental load in terms of generating electricity. They see higher risk of solar power curtailment in specific pockets. They also say that the move could support a smoother ramp-up in thermal power plants. They say that gas and hydropower generation accounted for close to 2 and 9% of India's power generation in FY26. Almost 11% of India's power generation could be under risk on account of the ongoing conflict. In terms of stock impacts, what are the stocks that they are looking out for? First one, of course, is Adani Power as well as JSW Energy. They say that on the back of merchant power capacity, both of these stocks could do quite well. They are saying that any Mundra plant settlement as well as Section 11 imposition on Mundra power plant for Tata Power could lead to a short-term demand spike as far as Tata Power is concerned. They're saying Torrent Power could see merchant gas sale profits where physical cargo access is possible. And lastly, NTPC, India's largest thermal power generator, they say that there could be a multiple rerating over here in case the current scenario persists. So overall, a very positive note coming in on the power space, and most of the stocks on the back of this particular report doing quite well.
Okay, thank you so much for that, Vivek. Power stocks are something that are powering away in trade, but something that continues to be under pressure, especially since the West Asia war started. That's Interglobe Aviation. Now, today we have a brokerage note that's coming from Citi. They're maintaining their buy rating, but they have again cut the target price to 5,100 rupees per share. Obviously, what they are highlighting that Indigo will be impacted by the negative developments that are going on. Obviously, West Asia war, but before that, there were concerns that came in the month of December due to the flight duty timelines that came in, the norms on that front. So that was a big issue for the company then, geopolitical tensions. So overall, Q3 earnings could also see that impact coming in. Do not forget, fuel costs that have gone up, crude prices going up impacts the fuel cost of the company. Fuel accounts to around 40% of their raw material. So that is also an impact that comes in for the company. So what Citi further highlights that international flights, they've been affected right now as well. They're saying that domestic market, Jan market share was good, but now again that is something that they'll be keeping an eye on going forward as well. So they've trimmed their target EV to sales multiple to 2.4 times from 2.6 times, which was their previous target, and that is reflecting the growing uncertainty that comes in from the international routes as well. They've been focusing on expanding that international routes, and do not forget, just yesterday we did have that notification that came in that the CEO of the company, Peter Elbers, also has resigned. And in his place, the interim CEO that's going to be coming in is going to be Rahul Bhatia. So because of that, you know, we've seen the stock price under pressure in the last couple of trading sessions. And Sonal, since the war started, we've seen that the stock is down almost 14-15% as well. So since 27th of February, it's down 14-15%.
One of the biggest casualties of the war that we've been seeing, right? So that's Interglobe Aviation. But let's talk about L&T. It has slipped in trade. Kotak Institutional Equities has cut the target price to 4,000 rupees a share. Of course, the concerns again around crisis in West Asia. Let's go back to Vivek for more details. Vivek.
Well, you spoke about Interglobe Aviation being a casualty. The other big one, of course, has been Larsen & Toubro with direct exposure as far as West Asia is concerned. Today, it was the turn of Kotak Institutional Equities to go ahead and make an assessment of the impact that they fear that the company could face in case the conflict does drag on. While they have a buy rating, they've cut the target price to now 4,000 rupees a share. They're saying that the crisis in the Middle East will now test companies' near-term financials on varied counts that may get partly shared with the customers. They're saying that the direction of the medium-term impact of the war on spending in Middle East is difficult to assess at the present time. However, they're saying that the uncertainty on the pace of capex in Middle East, coupled with the fall in the fair value of the company, given the fact that a lot of technology subsidiaries of the company now face lower multiples, does increase the risk and also increases the reliance on the value increment investments to create compounding stock returns from this point onwards. They're saying that the requirements of scale of investments and on incremental investments now has improved dramatically, and that is something that has led to significant uncertainty.
Okay, thank you so much for that, Vivek. L&T is another one that's been under pressure as well. But a quick look at the markets, right? When we started the show, we were at 23,650, 670 levels. Now we are at almost 23,700. Sonal did mark that as well. But that is going to be important where we're going to be headed. But in the last 15-20 minutes since we started the show, we're seeing some bit of a recovery that's coming for the markets as well. But on that note, we're going to slip into a very short break. We'll come back and we'll get you more on markets, more on stock-specific action. Stay tuned in.
Welcome back. Well, the war in West Asia has disrupted the global flow of energy, and India too has been staring at a gas supply shortage. Addressing the media on India's energy sourcing strategy, the Joint Secretary at the Petroleum Ministry said India has already diversified its energy sources and has also managed to secure additional LNG supply. Listen.
The OMCs have secured various crude cargoes from different sources, and as a result of this diversification, about 70% of our crude import is now coming from routes outside the Strait of Hormuz, compared with about 55% earlier. आज जब मैं आपसे बात कर रही हूँ, तब भी लगभग 2 कार्गोस भारत की तरफ चल पड़े हैं, and within few days they will arrive, which will further strengthen the crude supply position in the country. आज हमारी refineries are operating at the highest capacity utilization. Gas companies have procured LNG cargoes from their new sources, and 2 LNG cargoes are on their way to the country.
Rakesh Kumar Sinha, Special Secretary at the Ministry of Ports and Shipping, also said that the government was ensuring the safety of its ship and sailors in the Persian Gulf. Listen in.
वर्तमान में 28 इंडियन फ्लैग वेसल्स पर्शियन गल्फ में ऑपरेट कर रहे हैं. इसमें 24 वेसल ऐसे हैं जो स्ट्रेट ऑफ हॉर्मुज के वेस्ट में है, उसकी पश्चिम तरफ है पर्शियन गल्फ में, और उसमें 677 इंडियन नाविक हैं, और 4 वेसल स्ट्रेट ऑफ हॉर्मुज के पूर्वी तरफ है, और उसमें 101 इंडियन नाविक हैं. ये सारी वेसल्स और क्रू को हम एक्टिवली मॉनिटर कर रहे हैं, उनकी सेफ्टी के लिए, उनकी सिक्योरिटी के लिए.
Very important comments coming in from the ministry on West Asia crisis and energy availability as well. But it's time to shift focus to our special segment where we will get you a few ideas for profit from Money Control Pro. Anand Chaudhary of moneycontrol.com joins us now to talk about a stock that he's tracking closely, V-Guard Industries. Anand?
We are looking at V-Guard Industries, a strong brand in the electricals and consumer appliances market, and a clear leader in South India. So over the past 4 decades, the company has expanded its product portfolio from a single product stabilizers to more than 22 products today. It remains the market leader in stabilizers with around 42% share in the organized segment, while also having a strong presence in water heaters, fans, pumps, and wires and cables. The electrical segment continues to grow rapidly, led by strong demand in wires and cables, which has benefited from sharp rise in copper prices. At the same time, summer-driven categories such as UPS, inverters, and fans are expected to perform well. Management also expects a rebound in AC stabilizers and air coolers, supported by a low base after a period of sharp degrowth. The company is increasing its focus on in-house manufacturing, with new plants coming online, which should improve margins and operational control. At the same time, V-Guard is expanding beyond the southern region, with non-southern market becoming an increasingly important growth driver for the company. The Sunflame acquisition strengthened its kitchen appliances portfolio, and a dedicated sales team is being built to accelerate growth. The stock trades at 32 times on FY28 earnings, which appears reasonable to us.
Thank you so much for that. But looking at the markets, a slight bit of a recovery, not much, but still near the 23,700 levels for the Nifty 50 is what we're seeing. Broader end of the market still down almost 1% in the trading session. But that's all the time we have on this edition of Chartbusters on CNBC TV 18. Thank you so much for tuning in. Up next, your Trading Hour.
You're watching us here on Trading Hour. We come to you live from the CNBC TV 18 Motilal Oswal studio. I'm Mangalam Malu. With me, as always, Hormas Vatakia and Ritu Singh joining in. The market's lower today. The Nifty is down about 125 points. The Nifty Bank down 450 points. But the only silver lining, if one must, is that there has been a strong recovery from the lows. In fact, the lows of today, 23,550 thereabouts on the Nifty, and for the Nifty Bank, a lot lower. We've recovered about 186 points from the lows on the Nifty and over 400 points for the Nifty Bank. The mid-caps still under pressure, but then off lows. Hi, Ritu.
Hi, good morning, Mangalam. I mean, in the last half an hour or so, we've seen a bit of a recovery, and we hope, that continues on an upward trend. But, as has been the case for the last few sessions, it's Bank Nifty that's been dragging, the markets lower. Today, it is trading down almost 400 plus points. We'll pull that up for you. And market breadth very much in favor of declines. There's almost 3 stocks that are declining for every 1 stock that is advancing. In terms of sectoral losers, again, like yesterday, auto is the top loser, followed by FMCG, the metal pack, media pack, realty, of course, the banking pack. But on the flip side, you have energy that is doing marginally better. ICICI Bank, the single biggest dragger for the markets today, followed by M&M, L&T and others, while Reliance, for a change, is lending support today. But let's go across to Hormaz, who's standing by to put a spotlight on the top movers in trade today.
The recovery from the lows of the day, at least in the first couple of hours of today's session, and the 2 primary reasons why the market has recovered, particularly the index. One, of course, is the recovery in the Nifty Bank, as Mangalam just highlighted a couple of minutes ago, and that index has recovered from the lows of the day, and that has had an impact on the index recovery. The Nifty Bank at one point was down almost 800-900 points, and the other one is, of course, Reliance Industries. That's the other major reason why the market has recovered, and it is it's possibly the only index heavyweight that is holding out in today's session. So now at the highest point of the day is Reliance, 1.5% higher after opening in the red. Now, a couple of gas stocks were up yesterday, were up in today's session as well, but they are coming off the highs. Adani Total Gas is still up 11%. Gujarat Gas at one point was up 9%, so it has trimmed its gains by half. And Petronet LNG has moved to the highest point of the day as well, 3.5% higher for this stock. But what has hit a speed breaker though today has been auto names. They were under pressure yesterday. They continue to remain under pressure today. Be it TVS, be it Mahindra & Mahindra, be it Ashok Leyland, all of them seeing losses of anywhere between 3 to 4%. The increase in demand for induction-related cookware has put these stocks in the spotlight. TTK Prestige was up 10%. It's up 6% today as well. Butterfly Gandhimati is one such name as well. So these names continue to do well in today's session, although the other names such as Stovecraft and all have come off significantly from the highs of the day. The index may have recovered, but the broader markets are still under pain. Take a look at these small cap losers. Oswal Pumps is down 5. Borosil is down 5 as well after the announcement it made yesterday. Apollo Pipes, Precision Wires, all of them seeing losses of anywhere between 4 to 5%. And that broader market pain is reflected on some of the other big names as well, which are at 52-week lows in today's session. CE Infosystems is below its IPO price now of 1,033. Lemon Tree has, a 52-week high of 150, 160. It's now down to 100. And Varun Beverages too at a 52-week low as the country stands on the cusp of summer, but the stock down 3.5%.
Take that point, Hormaz. Thanks a lot for that. Those are a bunch of stocks which are on our radar, but fears of an extended gas supply shortage result in a surge in sales of induction cookware, electric cookers and other related items. We do have those stocks which are abuzz in yesterday's and today's trading session as well, though they've come off the highs. TTK Prestige at one point was up 14%, now sitting with a gain of 6%. But this week itself, they've put behind them a 15 to 20% sort of rally. Stovecraft marginally in the red. Upasna joins in with more details on this. Upasna.
Well, certainly these stocks continue to remain in focus even today following the yesterday's uptick. Now, they are higher because of the higher induction cooker sales due to LPG crisis, as what is known. And this kind of unprecedented demand is mainly driven by soaring cost and shortage supply of LPG. Now, Flipkart says that the induction cookware sales have tripled in the last 4 to 5 days. Even Amazon has reported a 30x surge as household and hotels look for alternatives following the panic buying. But the key concern here remains is the inventory. Now, inventory and supply chain is a big concern for these brands, as these brands were not prepared for these kind of demand uptick. Now, Vijay Sales joined us earlier this morning, and they said that they have seen a sharp spike in the induction cooker sales in the last 2 days, but they will be in for a shortage if such a demand continues going forward as well. Equerris also said that the induction cooker sales have seen a sharp spike in demand, mostly 2 to 3 times as compared to the last year, and they fear supply chain challenge if demand continues to remain strong. So certainly if we look at the overall proportion of induction cookware as the percentage of sales of these companies, it is marginally much lower, less than 5% is what I know. And this will certainly not lead to a re-rating is what I believe.
All right. Thanks very much for bringing us that. We have to slip into a short break, but up next, we're going to focus on the bond market with Manisha Gupta in just a bit.
योर एग्जिट का टाइमिंग परफेक्ट होना चाहिए, इसलिए कोटक नियो का स्ट्रैटेजी बॉट.
Stay तेज with Kotak Neo and automate your trades with Strategy Bot. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर. Signature Finest Silver Ilaichi, a premium product from Dilbar Group.
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
Welcome back. You're watching us here on Trading Hour. Now, if you look at the markets, there have been recoveries from the lows. That's exactly what we've seen on the Nifty Bank. And the recovery from the Nifty Bank and the fact that Reliance is doing extremely well has meant that the Nifty has curtailed its losses just to about 120 points versus a bigger cut that we were seeing in the earlier part of the morning. So if you look at today's low for both the Nifty and the Nifty Bank, that becomes another panic low reference to track. Because remember, Monday's low was breached easily, and now today's low is 23,556 on the Nifty, 54,760 on the Nifty Bank. The advanced decline still fairly in favor of decliners. So that's a line that I will be monitoring as we move along towards the course of the day. But even from the open, where nearly 400 stocks were advancing, the number of stocks which were gaining have doubled to 900. So that is something that the bulls would take with both hands. There has been just a moderate spike in India VIX. Remember, yesterday there was an 11.5% sort of jump, and now it's just a 3% jump. In fact, that too is coming off high. So those are things that may feel bulls a little better now than what they were feeling in the morning itself. So the market may be settling in as of now, and which is why we've seen a lot more put writing. So 23,600 put and 23,700 put, both of them have seen writing. 23,600 put has a premium of 200 rupees, 23,700 put has a premium of 234 rupees. Again, telling you that between 23,450 to 23,500 is where support lies right now after today's panic low. But on the way up, we need to see whether there's supply that comes by at some point in time or not, because particularly in the second half, there would be the Sensex expiry that will be playing out. 23,700 call has a premium of 300 rupees, telling you that 24,000, which was earlier a psychological support, does that turn into a resistance or not? So as of now, the range has moved lower from around 23,700 to 24,200. That range has come down to 23,500 to around 24,000 on the frontline index. But a lot of stocks over the last hour or so have seen some spikes, and Petronet LNG is one of them that stands out, up nearly 3% with long positions being built up out there. Tata Power is the other one, which is up 3% as well, with some long positions being added. We're down, but not necessarily out after the panic that we saw this morning.
Down but not out. You take that for starters, at least in the first couple of hours. The bottom line being that there has been a recovery from the lows of the day, although the trade continues to remain extremely choppy. And just as we were speaking, the index has cooled off some 20-30 points, just as Manglam was about to finish explaining his FNOQs. Saumil Mehta from Mirae Asset Share Khan is joining in now for a quick chart check. Saumil, good morning. Thank you for joining in. Do you now use this recovery to trim your positions down further because of the distortion that is on your charts right now? Or do you believe that, okay, stay on the sidelines, wait for a confirmation once the Nifty goes past 24,000 and then we take a view? Your call on the index and specific stocks recommendations as well.
Good morning to everyone. Yes, we are in a downtrend, definitely. There is no doubt. But at this point of time, I can see that there is a 5-wave decline completing today. If we get a positive close today or tomorrow, I think there is one leg which is completing today. And what does that mean? it means that we are ready for a bounce on the upside, and I'll be playing for this bounce. And this bounce could be, a big one, because we've seen large correction, big corrections in index, in stocks as well. So I'll be playing for this bounce. I'll be expecting markets to hold on to these levels around 23,500, 23,600 levels, and start a bounce from these levels. Now, this panic or the gap down opening which we've seen today, I think this should be filled, and there is one more gap around 24,400 that becomes a resistance again. So we'll be playing for a bounce till 24,400 levels, and I'll be positive on the markets now from here. I have two stocks which I think should play well from here. BHEL, BHEL looks great from here. It has been consolidating around 200 daily moving average, and it has started moving up today. It's great momentum today. Trading about 220 and 40 daily moving average. A small trend line has broken on the upside. So great setup. Stop loss would be 254 and my targets would be 285. The second stock which I have chosen is from the power side, PFC. PFC looks great as well. PFC been consolidating above the averages, about 200 daily moving average. A small triangular pattern has broken on the upside. Looks great to me. Stop loss would be 395 and target would be 445.
All right, Somil, thanks very much for joining in with your calls. On that note, we have to slip into a short break. Don't go anywhere. We're back with more on the markets and, of course, focus on our big story, which is the banking and financial services space after this short break.
ये हैं कोटक नियो के तेज ट्रेडर।
Nikkei index dips and snaps back.
ये ट्रिगर गिरावट का है। कसम कैंडलस्टिक्स की।
बेचो और बचो।
ये करते हैं शोर को इग्नोर, और ये हौसला जानकारी और तैयारी से मिलता है। Stay तेज with कोटक नियो. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोवुड।
मेरा रुतबा है मेरा सिग्नेचर, दुनिया की सोच से ऊपर बेबाक है मेरा सिग्नेचर। सिग्नेचर फाइनेस्ट सिल्वर इलायची, a premium product from Dalmia Group.
This is Network 18, and you're watching CNBC TV 18.
Welcome back. Let's get you a quick check of all the macro signals for the day. For the markets, of course, it's still down about 170 points cut on the Nifty. You have a 560 point cut on the Sensex. Very much pressured by the Bank Nifty, which is still down 1.1% as we speak. But some of the macro forces in play, the rupee, for instance, we saw another record low against the dollar today, primarily because of that massive spike in global oil prices overnight. It fell to an all-time low of about 92.32 to 92.36 per dollar in early trade, and currently it is about that level. Oil prices, they've surged nearly 9% today, with global benchmarks also crossing that psychological $100 mark. Once again, the WTI crude also surged by almost 9% at about $95 a barrel after reports said that there were fresh attacks on oil tankers in Iraqi waters and near the Strait, despite the IEA's decision we were telling you about to release a historic 400 million barrels of emergency reserves. Now, on the back of that, and of course the liquidity tightness on account of the advanced tax outflows that are happening, and despite that, OMO being announced by the RBI, the 10-year benchmark government bond yields, it spiked up as much as 5 basis points earlier in trade today, compared to the previous close of 6.63%, and now they're about 6.64. That's where they're at. So that's as far as the macro setup is concerned, but we'll take a short break on that note. Up next, we're going to discuss market fundamentals with Amisha Vora in just a bit.
Every recovery that is coming in on the index is getting sold into, at least momentarily. The 23,700 mark on the Nifty now back, and 23,690 where we stand. So that's about what, a 70, 80 point cool off from the highs that were made just a few minutes ago when Mangalam was explaining his FNOQs. And since then, the index has seen a bit of a cool off, and that's been led by the Nifty Bank, which is also sold off from the highs of the day. So that too is now back down around 650 points as well.
You got to feel for the ticker team. I saw a flash which said market off lows, and that is when the market was actually off highs. And now within a span of microseconds, they've gone ahead and they've called it market volatile, because that's what it totally is. Hormaz and Bajaj Finance, that was a top Nifty loser yesterday as well, and it's coming in for a lot of selling right up top right now. And we have Axis Bank, that's the other one, which too has moved to the low point of trade. So any sort of recovery is seeing some supply, and the market is seeking even lower levels, even though there is recovery from those panic lows that we made. So, it's all happening.
Bajaj Finance, on the 1st of February, the stock had made a low of around 885 odd. And then from there on, it went on to levels of 1,000 plus, 1,040 odd within the next 2-3 weeks of around Feb 20. And since then, the stock has cooled off. You pull up a 1 month chart, you get a better picture of how Bajaj Finance has moved in that. So it has given up all of those gains that it made in the month of February. There you see around 1,030 plus, and now it has gone back to levels of 870. Take the conversation forward with Amisha Vora, Chairperson and Managing Director at PL Capital, who is joining in now. Amisha, good morning. Thank you for joining in. What do you do in a market like this, right? Every time when you see there is some hope of recovery, that recovery gets sold into, there is absolutely no conviction whatsoever to, well, if you could call it the proverbial catching a falling knife. What do you do in circumstances like these?
See, the current circumstances, as you know, has happened never in the history that the most delicate, that route was ever closed in the history. So, and on the top of it, the gas supply, which has been cut. So right now also, I feel, despite market correction, none of us have really fathomed what kind of repercussions this 25 to 30% gas curtailment can really have, of course, on India, but at the same time, it will have repercussions globally also, which will in different forms, in different raw material chain, in different production chain, in job losses will happen. At the same time, even if we assume, as what my analyst says, that everything becomes peace right now, the real recovery to take place in gas will take still 1 month from any day there is a complete no war situation. So I think that, though any war is a temporary event, but the repercussions are going to be really wide. And it will ultimately not only culminate into, inflation, etc. But that means inflation or bond yield going up. But I think it will also have impact on job losses also.
Right, we take that point, Amisha, but what do you make of the big decline that we've seen in banks over the last few trading sessions? Because if you ask anyone or any fund manager, any asset allocator over the last 1 year or even before that, what would your top sectoral allocation be? They would say that it has to be banks and financials because, it's domestic in nature, it's linked to the Indian economy, not very prone to external shocks, and even the asset qualities aren't particularly bad. In fact, they're the best that they've been in a very long time. What explains the weakness that we've seen?
Exactly. So all the assumptions that you narrated have been challenged by the current crisis as the best asset quality, of course. But if you see this gas crisis will lead to so much of MSME production getting impacted, so much of on retail side, the jobs or the incomes getting impacted. But above all, that is 60-70% of their balance sheet. And the rest of the 30-40% of the balance sheet, which is bonds, was assuming what? A probable one more rate cut. And so the entire bond portfolio, whether held to maturity or held for short, was tuned accordingly. Now, this crisis will not only, I think the rate cut is negated, those chances are very limited. And as we see, the bond yields are going up. So the entire assumptions on which we were thinking that banks are very well placed temporarily are totally challenged. And that's why, and it was, as what you said, our overall very well owned sector, both domestically across mutual funds and otherwise. So it is taking a bit on its chin right now. You also asked me one question: where should one go at this juncture from portfolio perspective? Not that we can just do and a larger portfolios a little underweight and little overweight, but we still continue on a broader basis on our thesis that defense, capital goods, power, entire.
We seem to have lost that line.
I think the consumption will take little impact, and the other better places could be both pharma and metals. But in metals, of course, which will get impacted where in terms of production globally is a little question mark. But overall, the price trend will continue to remain broadly stronger. So I think that these are the sectors which would go a bit on overweight, and the rest of the portfolios or sectors will go on underweight.
So what about IT then? Since the kind of news flow that you have seen over the first 2 months of the year, almost a doomsday sort of a narrative for Indian IT. Yesterday, there was a note saying that, oh, the reports of my death are greatly exaggerated, quoting Mark Twain of the sector. In which camp do you lie on? Do you believe that Indian IT, the service providers are here to stay, or they need a structural shift to be in that fittest will survive camp?
See, they're here to stay, no doubt, because they are hugely cash generating as of now. But over the last decade, we saw that growth rates were coming down and margins were slightly steady to coming down. Over the next 5 years, we think that the growth rates could be, deflationary, and margins could still probably be protected. So it will be more a cash cow, kind of a cash generating, unless a few of them really innovate, renovate their business models. And we have seen in India, a lot of large nifty companies have also completely renovated or innovated their business models. So who's going to do that? We don't know. But in the same business model, just because they are becoming cheaper and dividend yield, it could be at best protection, but not a growth at all.
Take that
Making
point.
some significant money looks difficult to me.
Take that point, Amisha, out of time, not out of questions, and hope we got you on a slightly more, smoother line, and we could hear all your views without a lot of lag. But as we speak, the market continues to sell off, though there has been some amelioration in the mid-cap end of things. The ones which declined earlier are seeking lower levels. So Stovecraft for one is really the one, one that stands out. As Upasana said, that this may not cause for a significant re-rating for all these stocks. It's just temporary spike in demand, which could actually face supply side issues as well, because once they're stocked out, they're obviously not going to immediately sell that up. And as a result of which, that stock is down about 14% from highs. We've also seen a drop in TTK Prestige and the others. FMCG is the one which is selling off quite vehemently right now. Varun Beverages is down 4%. We are seeing Godrej Consumer, which is at lower levels as well. Yesterday, Colgate was the top loser, and HUL too is at the low point of trade. So amidst all of this, there is a positive note that has come in for Britannia, and that's one that's from Antique, where they've initiated coverage on the stock, and they have a target price of 7,000 rupees, which is why Britannia is perhaps falling a lot lesser than the others. But then again, the report does not say anything new when it comes to the thesis, because they call it, a premiumization play within the core biscuits, the company being a total food company, scaling of high margin adjacent categories, distribution expansion in newer, underpenetrated markets, which include rural and Hindi belt, coupled with the benefit of GST rate cut and currently stable raw material prices. None of this is entirely unknown to the street. The interesting part, however, is that they valued the company at 50 times FY28 price to earnings, which is a 16% premium to its 10-year average. And remember, the last 10 years were very strong for Britannia under Varun Berry's leadership, and now the next 10 years belong to Rakshit Hargave, how he grows the company. But the last 10 years were also very strong for FMCG as a sector, where we saw multiple re-rating. Now there is clamour for multiple de-rating for FMCG. And in that, if you're valuing a company at 16% premium to its 10-year average, then they better outperform the industry a lot more. And let's see whether that happens or not. So that's the call that Antiques making. The stock, however, is lower. We'll take a short break, come back, we speak about the big story of the day. Let's tell you what it is after this break.
Welcome back. Markets in the red, and the heaviest drag there is coming from financials, your banks, NBFCs, the entire ecosystem under pressure. And the trigger more recently has been West Asia, but the vulnerability was already there. Let's get you the top story. Then the West Asia conflict is putting Indian financials under pressure. And if history is anything to go by, the extent of the impact will be very divergent. Now, the historical playbook says that typically when your oil prices surge, they lift credit growth because working capital demand increases. Bond market stress also pushes borrowers away from those markets towards banks. But now a Jefferies note points out that the current oil supply shock is stronger than the past episodes, and that is threatening the production capacity and commercial cash flows. So if the stress persists, the government may have to step in with guarantees or even restructuring. So what happens to bank earnings from here? They estimate that a 5% hit on the top line, and large banks' FY27 earnings can take a 7 to 10% beating. In a scenario where credit costs are up by 5%, the damage will then be contained at 1 to 2%. For the mid-sized banks, both the numbers are significantly worse, 15 to 20% hit on the top line and 2 to 6% hit on credit costs. SME, commercial vehicles and overseas books, that's where the pressure points really is. And as per Jefferies, AU Small Finance Bank, State Bank of India, Bank of Baroda and Induction carry the highest exposure. Now, on valuations, the Bank Nifty is already 1.5 times the forward book. The historical floor outside of COVID and the global financial crisis was 1.3 to 1.5 times, and the conflict resolution from here on will be the re-rating trigger. Now, for NBFCs, there is a triple drag, though. First, the asset quality risk. MSMEs, CV operators, EXIM-linked businesses are all vulnerable. Second, there is a cost of funds squeeze because rising bond yields and commercial paper rates will push up the borrowing costs. And Bajaj Finance, Manappuram, SBI Cards could be the first in line to feel the heat. Third, a growth slowdown as well, as lenders are already tightening filters. Now, the bright spots are housing finance companies and gold financiers, which are the least exposed to this particular conflict. On valuations for NBFCs as well, the sector is just above the recent lows, and like banks, the re-rating needs a resolution to happen first. Finally, the second order impact from job losses that could also have a wider impact across banks and NBFCs. So that's one key risk to watch out for. But it's back to you guys in the studio for more.
Exactly, that's what has been the story of the banks. Sridhar Sivaram of Enam Holdings also gave us a very detailed explanation of why is that. So we'll hear him out in just a bit, but go across to Gaurav now, who's here to give us a comparison on the private banks versus the state-run lenders. Gaurav.
Well, yes, if you look at the historical trend, we are seeing some pressure which is there in the financial segment. But specifically, if we compare PSUs versus private sector banks, PSUs are the banks which are actually outperforming not only private sector banks, but the broader market as well. Because you look at the data. If you look at Nifty PSU data, the one-year return is around 50%. It is much higher than Nifty as well as Nifty Bank. Whereas if you look at Nifty bank data specifically, in 1 year it has only given returns of 14%. If you look at the top performers, SBI, PNB, Bank of Baroda, Canara Bank, all of these banks have gained more than 30% in just last 1 year. Whereas on the private sector banks, if you look at HDFC, ICICI, Axis, Kotak, in fact, all of these banks have given just single digit return, barring the Axis Bank, because we have seen some underperformance in the Axis Bank in the last year. And there are certain reasons. First is that if you look at the valuation, the bank, Nifty Bank itself is actually trading at below the 5-year average that they were trading at, whereas Nifty PSU Bank is above, and the reason being that there is structural change as per experts. Now this structural change is coming up because of the technological advancements that the PSU banks are showing, and at the same time PSU banks are also gaining market share. As a result, if you look at EPS growth, for the top 4 private sector banks, we are seeing EPS growth was in single digit, barring the HDFC Bank, which reported 11% EPS growth. But on the other hand, if you look at the PSU banks, they have actually consistently reported double-digit growth, near double-digit growth for the last few quarters. Second is that if you look at ROAs, private sector banks are somewhere trying to protect their ROAs. In fact, in few cases, we have seen ROAs actually declining for private sector banks in the likes of ICICI and Axis Bank, whereas for public sector banks, that 1% mark, which was considered as an achievement for the banks, is not an achievement anymore. It is a new normal for public sector banks. All of these banks, almost all of these banks, have been reporting ROAs above 1%. Third is that if you look at the pressure from FII selling, for the last few months, we are seeing FII selling, and financials is usually the forefront of the selling when FII comes in picture. Now, if you look at the data, Nifty is still trading at 19.7 times price to earning. But if you look at other competitive emerging markets like Korea. Korea is also trading at 19.5 times, and experts suggest that the growth of EPS is going to be higher for Korean markets and other emerging markets if we compare it with the Indian market, and that has been a trend in the last year as well. So that is also something which is a macroeconomic headwind for financials, not only for private sector banks but all the financials. So all in all, although there is a pressure in financials, we are seeing some heightened pressure in private sector banks if we compare it with the PSUs.
All right, we take that point. In fact, important points both Ritu and Gaurav have made. And this morning we had an insightful conversation with Sridhar Sivram of Inam Holdings as well. This is what he had to say on the banking sector.
Having a non-consensus view on private banks for a while now, and I put out a lot of data on my LinkedIn on why private banks, especially the large ones, have some issues. I think what has happened is, if you take the last 12 months or even 18 months, PSU banks have become very aggressive on the retail space, which has been like the bastion for private banks. Last quarter numbers were a bit staggering, that the PSU banks, if you take the top 6 PSU banks leaving SBI, their loan growth, the retail loan growth was almost 23%. And compare that with the top 3 private banks with roughly similar assets, which is 60 lakh crores for these 6 PSU banks, and top 3 private banks also roughly loan book is 60 lakh crores, the overall loan book. Their retail loan book grown single digits. Mortgages for the PSUs were about 17-18% growth, and this is about 6-7%. Vehicle was even more shocking, almost 20% for the PSUs, and it was single digit for almost 1 or 2% for the private banks. And what has happened is that you're seeing full page ads from PSU banks, home loans at 725, vehicle loans at 775, 8, which we have never seen. The earlier view was stray loans people will take, but on size nobody goes to take an auto loan from a PSU bank. That has flipped. So when I speak to the PSU banks and I question the profitability model for them, their point is, my guidance is 275 to 3% NIM, 1% ROA. I'm able to reach with this. A 1% ROA for a private bank is a no-no, right? So basically, in our view, the profit pool for the banking sector has shrunk, because the same technology that earlier was something unique to the private sector banks, now most PSU banks have invested in technology. The CIBIL score is common for everybody, and they use all the other tech. If you speak to SBI, they'll tell you what all technology measures they use. So I think that's what has happened. The profit pool for the banks are shrinking. It is difficult for them to then move out of such a large segment and find newer segments. So if you see the loan growth of private sector banks, the larger ones, they were disappointing. So I think that is the issue that we are facing, that will they be able to, heydays, private sector banks used to give you 20% profit growth. We are now in the 10% profit growth band.
But
so
just to complete that, and that's, I think, beautifully explained, the entire thesis. And you're absolutely right, and you got it. You were early on this one, and the market, of course, is now reacting. So it's a profit pool question.
Yes.
It's not a asset quality issue.
It's not an asset quality issue. Yeah, it's not. It's just a question of reset. That what is the profit pool for the banks? The earlier thesis was private sector banks keep chipping away, taking market share from PSU banks. That has flipped. So it's now the PSU banks bouncing back, taking market share from the private sector banks, and that too from a pool which was very profitable for the private sector banks, because they were making very strong ROAs on this. They're literally vacating a mortgage space, a vehicle loan space, because they think there isn't enough profit. But the PSU banks are happy because their ask is much lower. Large part of the selling in the private banks is coming from FIIs, and when I speak to my friends in New York or in Hong Kong who run large FII funds, the point they're making is that exactly this, that why would I want to invest in a private bank which is giving me a 10% profit growth with a 2.5 price to book? I'm getting similar growth banks in XYZ region at half the multiple. So that is the question here, that if you're going to grow at 10%, is a 2.5% price to book multiple justified? I'm not here to justify any of this. I have a view, but keep in mind that they still make reasonable ROAs despite all this. So your lower growth is because you're trying to protect your ROA.
All right, very interesting comments coming in there from Mr. Shivaraman. The profit pool for the banking sector, that is shrinking, and PSU banks are coming with all their might for this shrinking pool as well, with their wide reach and their wider branches. And perhaps the days of 20% plus growth for the private sector is something that's behind. On that note, we're going to wrap up this edition of Trading Hour. Thanks very much for joining in. From Manglam, Hormaz and me, it's goodbye. Stay tuned. Halftime report will take all the action forward.
Stocks open with a sharp cut but see some buying at lower levels, though declines continue to exceed advances. Utilities and energy notch gains, while autos, healthcare, financials drag. The mid-cap index recovers over 900 points from the day's low.
Stocks of companies making induction cooktops climb after retailers report a multi-fold jump in sales following fears of LPG shortage. Power stocks too amp up on a likely energy switch and an expectation of a hot summer.
Steel Secretary Sandeep Pondrikar says that steel industry could be impacted by supply disruptions in propane, LPG, natural gas and limestone. He adds that SAIL has enough supply of propane to last about 25 days.
Oil flares up after two oil tankers near Iraq are struck. IEA's decision to release 400 million barrels from strategic reserves, with US contributing 172 million over 120 days, does little to dispel fears of a long supply disruption. Hello and welcome to Halftime Report, live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra, and with me as always Vinay Motiwala. Yes, it is a down day, but there has been some recovery that we are seeing. So far now, Nifty is up, is above that 23,700 mark, Vinay, and very close to 23,750. We started with lows of the day, 23,555. That was the low, but we have recovered from those levels. In fact, if we look at the advanced decline ratio as well, those lines are merging by the minute. If that chart will come up for you on the screen. So even the mid-cap index is recovering from the lows of the day. Yes, they are getting narrower, so we'll see whether we have it merging, and we'll see more advancing stocks versus declining stocks. But there's a definite recovery which is underway. But yes, Bank Nifty continues to sulk, and that continues to be the pain point for the market.
Hi. Good afternoon, Sonal. So yes, surely a recovery that we've seen in the markets as well. More than 200 points from the day's lowest point. As of now, the sectors which is managing, or only one sector is managing to hold on to green right now, is the Nifty Energy, up 0.7% in the trading session. So pull that up. Apart from that, all the sectors are trading in the red. Energy is at the day's highest point, but we have autos, metals, realty, clearly under pressure. But we have a lot lined up for you all on the show as well. And we'll be focusing and starting by focusing on the buzzing stocks, power stocks that are moving around in the trading session. Apart from that, other big movers, so stay tuned in for that. We'll bring you excerpts from our exclusive conversation with the SEAL Secretary on how the government is looking to mitigate supply disruptions and fresh challenges due to the war in West Asia. Also, we'll get you excerpts from our conversation with Sayan Mukherjee of Nomura to talk about the semaglutide opportunity as it goes off patent.
Okay, let's talk about the big buzzing stocks of the day. We have Vivek on the big wall to take us through the stocks that are moving around in trade. Vivek.
Well, thank you so much for that. You know, while the benchmark indices, while the headline indices are showing quite a lot of red, actually inside, when you look at the internals of the market, there's been quite a bit of a recovery, especially in the broader end of the markets. One specific sector that stands out today, of course, has to be the power as well as the energy space. Now, within the power space, remember, Coal India supplies coal to most of the power companies. Higher demand, strong summer, along with that, you know, higher dependency on thermal coal, given the fact that you will see significant shortage as far as gas supplies are concerned, has led to quite a bit of a recovery. Coal India was the top Nifty gainer, and along with that, most of the power companies, especially those that are dependent on coal or supply thermal power, are doing quite well. NTPC seen as a re-rating candidate as per Morgan Stanley, and most of the other names that you can see on your screen, some with merchant capacity, doing quite well. When you're looking at DOMS Industries, that's the other stock on the radar. The top NSE 500 gainer, up almost 9% on very good volumes today. But on the other hand, quite a few laggards as well. Well, yesterday, close to market close, we had highlighted both Astral as well as Astral Futures. We told you about how there was almost a 100 rupee difference between the spot price and the future price. There has been a significant narrowing of that, but despite that, almost a 40 rupee arbitrage still exists in both of these names. Ultratech Cement was the other stock on the radar, continues to languish in the session. Higher input costs, street worries about margin erosion, and on the back of that, most of the large cement companies have seen quite a bit of a de-rating in the last few trading sessions. The entire auto pack, auto ancillary pack, tire stocks, all of them under pressure, all of them hit by higher input costs, especially in the form of companies that depend on gas for various manufacturing processes. Look at Apollo Tyres, TVS Motors, Ashok Leyland, M&M, all of these stocks under significant pressure today. And the entire private banking space, especially within the banking pack, private banks are seeing quite a bit of selling pressure today. IndusInd Bank, the top laggard, AU Small Finance too, under quite a bit of pressure. And lastly, FMCG, again, spiking input raw materials costs. The street is extremely worried about margin protection in this particular season. Look at Warren Beverages, down almost 3.5%. Colgate continues to fall for the second straight session and down by another 2.5% after the sharp fall we saw yesterday. So overall, a lot of laggards, but a bit of recovery is what we've seen in the broader end of the markets.
Okay, thanks so much for that, Vivek. But let's move on to a CNBC TV 18 exclusive. Steel Secretary Sandeep Pondrikar says that the steel industry could be impacted by the supply disruptions in propane, LPG, natural gas as well as limestone. Now he adds that SAIL has enough supply of propane to last for about 25 days. Listen in.
Till now, I would not say there is cut. Like you know that most of the steel plants have supplies. So if I take about SAIL, they have about 20-25 days of supplies of propane with them. Similarly for limestone, they have supplies. So it's not as if the production is being cut today. But if the problem continues, then raw material supply or gas and propane supply may become a problem in coming days. So to date, as per our available information and as per what we have held consultations with the industry, today there is no production cut. All steel plants are running full ISPs. There may be some problem with the small steel producers who are dependent on LPG. That we are looking into.
Would, I mean, just to take that example of SAIL, Mr. Pondrik, would they calibrate production? Because you said they have propane for 20-25 days. So in that sense, they will in turn, decide who to sell steel. I mean, essentially decide the order of priority, like the government decided the order of priority for gas. Go on.
So as I said, as of today, they are not looking at scaling down the production, at least for a few days. The production of ISPs is going full throttle. But if the problem continues, then they will have to see how to calibrate the production.
Right.
Because as I said, propane is a vital input for them.
Club that, Mr. Pondrik, with what's taking place in China as well, right? If you look at China, in Jan-Feb, their steel exports declined by about 8%. Now, with us having to face a possible production calibration, not immediately, but maybe if it prolongs, then do you think the risk of China dumping their steel into India is real? And what protection measures are we taking for that?
If we look at this year's numbers till now, from April to February, our overall imports have in fact gone down by about 37% as compared to same period for the last year. So imports have significantly gone down especially after the safeguard duty imposed by the government. I don't see in the short term any impact of imports, because even today our domestic production capabilities are more than the consumption. So our consumption has increased this year by about 7.2% from April to February, while our production has increased, finished steel production has increased by 10.2%. So our production capabilities are there domestically. If this problem continues for a long time, then we will have to see how the consumption and production are matched. But then I would presume that if this continues for a long time, it will also have impact on the consumption, not only on production. So there is an impact for both.
And were that to happen, would you consider then any sort of additional protection measures for the industry, if that was to happen, hypothetically?
I can't comment on that now. That's something in the future. For now, we are going with the present safeguard duty and other measures.
Okay, excerpts of a very important conversation with the Steel Secretary. With that, we'll slip into a short break. Up next, we'll connect with management of Gopal Snacks on the ongoing impact of energy supply curbs, usage of gas for commercial use. Stay tuned for that conversation.
स्टॉक्स में एक्सपर्ट हूँ, पर कोटक नियो 300 स्टॉक्स में।
Stay teज with Kotak Neo and get access to daily trading ideas. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर। Signature finest silver elaichi, a premium product from Dalmia Bharat.
हाथ। ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
This is Network 18, and you're watching CNBC TV 18.
Welcome back to Halftime Report on CNBC TV 18. Markets 23,700, about that mark, holding on. Is that going to continue? What are the levels that are important? Let's bring on board Manish Hathiramani, proprietor, trader and technical analyst at Deen Dayal Investments, joining us right now. Manish, good afternoon. As of now, the Nifty is at 23,700. What is the key level that you are keeping an eye out on today? Is it, if we close about 23,800 that we've been talking about, then where do we see it headed?
Good afternoon, Vinny. Thank you so much for having me on the show. Well, the last time when we spoke, we were resting at 24,300, and we discussed that if we break that level, we could see 23,850, 23,900. That got achieved. We are now again at a very crucial support of 23,600, and we can only pray that it holds on a closing basis. If we have to bounce, we need to bounce from here, and that move can take us to the next resistance level, which is at 24,000. If we break 23,600 on a closing basis, we can slide down to 23,200.
Take that point. What about individual names? Anything that you are betting on now in a market like this, Manish?
Working with two sell calls. The first one is on trend, which is for a target of 3,300, stop loss of 3,850. This stock today triggered the lows of 2nd February, which was 3,645. This is an added sign of weakness which can lead us to a new low. The second sell is on Kotak Bank, which is for a target of 355, stop loss of 400. From a structural point of view, this stock is mirroring the Bank Nifty chart. 380 is a strong support which has broken this morning. If we close below this level, we can slide to 370, which is target 1, and then 355, which is target 2.
Manish, could you maybe check the charts for Coal India for us as well? How is that holding up? Because given in the recent times, that's the one that's managing to hold on to a bit of an up move. So on the charts, what's the indication or what's the level that one should watch out?
Well, Coal India has just triggered its intermediate top of 461, which was recorded on 29th of January. That shows a target of 475, which should be the next level of stiff resistance.
All right. Thank you so much, Manish, for joining us as always. So that's a technical check on the markets. But what's happening with the F&O space? Mangalam is joining us now to tell us more. Mangalam.
Well, the market is fairly volatile. You know, if moments ago you said that, okay, the Nifty is holding above that 24,700 mark. And building on that, you would be right. And then if the market falls in the very near future, you would be right on that as well. So it's just cutting both ways. Both the Nifty as well as the Nifty Bank have been significantly off lows, but at the same time, they are finding supply at higher levels as well. The mid-cap index, that's the one which has shown the most amount of recovery. And the good part is that Reliance is also doing well. So if the contribution chart comes up for you, you would see that one end of the market is now being held by Reliance. So that's at least giving some support at the lower levels, and that's a positive. The other positive is the advanced decline lines. Yes, the red line is still above the green one, but from the morning to now, the number of stocks that were gaining have actually doubled. So those lines have come closer to each other. And the other part is that VIX has moderated as well. After an 11% spike yesterday, and also earlier part of the day, we had about 3-4% sort of spike coming in. Now it's come down to just about 1-1.5%. So all these things will make bulls feel a lot better, but they will still keep an eye out on higher levels and supply out there, which is why the option premiums are fairly high as well, which means the range that the street is working with is extremely big. And 23,600 put, a lot of writing seen there, tells you that 23,400 to 23,500, closer to today's low of 23,550 would be an important support to track. On the way up though, 23,700 call is still very active. Premium closer to 300 rupees, telling you that 24,000, which was earlier a psychological support, now becomes a psychological resistance. So basically the range of the market has come down from 23,700 to 24,300 to about 23,500 to 24,000.
Okay, thank you so much for that, Mangalam. But on that note, we're going to slip into a very short break. On the other side, we'll have Manisha Gupta, who will be in conversation with Banerjee from Kotak Securities. Stay tuned for the conversation.
So give
Welcome back. Joining us on the show now is Anantya Banerjee. He's head of research currency commodity at Kotak Securities. Anantya, hi. Thank you so much for joining us. On the rupee first, because we've seen yet another day of all-time lows onto this one, 92.36 at the last count. Of course, it has been about escalating tensions in the Middle East, also stronger demand for US dollar as a safe haven. How would you look at the rupee going forward from here? We're already down nearly 3% for this year till time.
A very good afternoon, and thank you for having me. Rupee is facing at this point in time multiple risks. First is, of course, the oil prices. Second is a mild dollar shortage, and the dollar index is actually showing some strength. And the third is that over the last 6-7 hours, we have seen fresh headlines from US about a fresh round of trade war, where they are going to start an investigation on and impose tariffs. So, which means that we could see further FPI outflows, and that can push the Indian rupee towards the levels of 93. Of course, the RBI is going to be extremely active, especially through the forward market. But as long as the oil prices are not coming down, it will continue to push the USD-INR upward.
And how are you also looking at the crude oil prices? Then $100 done. We've also seen 120 in the last week itself. But with the way things seem to be going, and the easing of situation is far from done. What's your sense also on what's really happening in Middle East, its impact on crude prices?
Right. See, the core point of this conflict in West Asia is what happens to the Hormuz, because it handles, even if I account for the bypass pipelines, at least 15% of the global oil supply, 20% of gas, fertilizers, a host of chemicals. It basically plays havoc with the entire supply chain of a lot of things. So as long as the Hormuz is blocked or choked, it will continue to have an upward, it will exert an upward pressure on the oil prices and gas prices. So which means oil, it looks unlikely that it will sustain below the 85 to 90 levels on Brent, and around 80, 85 on the WTI. On the upside, 105 is now a sort of a near-term cap, because anything above 105, we will see a lot of statements from Trump, from the IEA, etc., about oil release. So right now, the market might just meander in this range of 85 to 105. But anything above 105, I think we could see further panic in the market, which could be because of some huge escalation.
Anindya, what's your sense also for the US dollar index? Because we're looking at a lot of safe haven buying coming in for this one. I mean, the scenario that we've seen in the last 10 days or so has been either dash for cash, or it has been for the safe havens where US dollar really seems to be standing tall.
See, dollar is being supported by this oil trade. But if I see the dollar index closer to 100, it becomes a sort of toppish. So for it to break through 100, it needs the oil to also punch through 110. So unless and until we see a flare up in oil, I think dollar index is close to its top. And that's the reason why if you see at gold and silver, which just trades opposite to the dollar index, it's also showing a bottoming action. So everything is indicating a sort of a contained tensed environment. But if we see escalation, yes, then we could see a breakout above the 100 levels on dollar index.
And that exactly was my next question, because until now, what has been said and done has been perhaps factored in the prices, whether it is about the statements from US or Iran or the IEA's 400 million barrels release. All of that is in prices from where we stand right now. From here on, what would you want to watch out for that eases the markets in sense of crude prices there? Is it going to be an immediate end to the war? But that would also mean that it will still take time for the crude prices to come back, or rather the crude supplies to come back into the markets.
So one thing which I'm watching is the tanker flow. Because as long as if we get into a situation where we see where we don't see fresh attacks from Iran or the IRGC on the tankers, which is happening now, I think that will be a huge de-escalation. So we don't have to see an official end to the war. Just an improvement in the tanker flow will be enough, because currently the various estimates are saying close to 7 to 8 million barrels a day of oil is disrupted. That's huge, because in fact, the entire spare capacity of OPEC sits in West Asia. So it's not just the supply which is disrupted, it's the spare capacity which cannot be accessed. So I think the tanker flow will be the key important thing to watch.
How are you also looking at the crude derivatives? Because whether it's about heating oil trading at a 3-year highs or a gasoline at a 2-year highs also seems to be impacting. And then there is this whole thing about the Baltic Dry Index, the super tanker freights as well trading at multi-year highs.
See, what has happened is that the kind of crude which is coming in a very small way from West Asia is a high-grade crude. It's basically a kind of low sulfur, low carbon. But the crude which a lot of like Trump is talking about is the Venezuelan crude or the Russian crude. They are heavier crude, heavier sour. So the refineries not all refineries have the capacity to suddenly switch from a higher variety of crude to a lower variety of crude. That's the reason why we are seeing a far bigger stress on the product slate. And I don't think that changes much in the short term unless and until the West Asian grade starts coming into the market.
Okay, Anindya, thank you so much for your thoughts. Manisha, thank you so much for taking us through this conversation. New updates every day when it comes to West Asian war, and the analysis is done in commodity segment. With that, we'll slip into a short break. When we come back, we'll discuss more on markets and stock-specific action on the other side. Welcome back. The IRDAI chairman is discussing rolling out sale of insurance products in Bima Sugam in March 17 meeting with insurance CEOs. Yash has more details on this one. Yash, what are you picking up?
Well, what I've been given to understand from my sources is that a communication has gone to all 60 insurance CEOs, essentially asking them about the meeting with the IRDAI chairman, which is expected to happen in Delhi on March of 17. The issue is something that the entire industry has its eyes on, and that is with respect to Bima Sugam, the online marketplace, which is supposed to be established for sales, servicing and claims of insurance policies. Of course, the website went live in December, but there have been no transactions or products which have been listed on that IRDAI-backed insurance marketplace. And that's exactly what is going to be discussed as far as the meeting on March 17th is concerned, according to our sources. Between the IRDAI chairman and the industry CEOs, what's going to be discussed and decided is a date when it comes to all insurance products being uploaded or being visible on Bima Sugam, and actually the sale of these insurance policies starting to happen on Bima Sugam as well. Of course, this is a very ambitious project launched by IRDAI to reduce commissions, to reduce cost of insurance policies and make insurance accessible to all. And to start with, Bima Vistar as well as other motor, health and term life insurance policies are expected to be listed on Bima Sugam. The important date would be March 17th and the meeting which will happen between the CEOs and the IRDAI chairman on deciding the final date when it comes to rollout listing of insurance policies on Bima Sugam and actually starting with the sale of these policies.
Okay, Yash, thank you so much for the update there. But on that note, we are absolutely out of time on this edition of Halftime Report, leaving the Nifty just around the 23,700 levels. Recovery from the day's lowest point for the markets. But more in terms of the market action, now you have Business Lunch up next to take you through all of that.
Stocks open with a sharp cut but see some buying at lower levels, although declines continue to exceed advances. Utilities and energy notch gains, while auto, healthcare and financials are the big drags. The mid-cap index recovers over 900 points from the lows of the day.
Stocks of companies making induction cooktops climb after retailers report a multifold jump in sales following fears of LPG shortage. Power stocks to amp up on a likely energy switch and on expectation of a hot summer.
Steel Secretary Sandeep Poundrik says that the steel industry could be impacted by supply disruptions in propane, LPG, natural gas and limestone. He adds that SAIL has enough supply of propane to last about 25 days.
Oil flares up after 2 oil tankers near Iraq are struck. IEA's decision to release 400 million barrels from strategic reserves, with US contributing 172 million over 120 days, does little to dispel fears of a long supply disruption.
Good afternoon, you're with us here on Business Lunch. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always, Arundhati Raman. And Arundhati, good afternoon.
Good afternoon, Hormuz. Hi guys. You know, the markets opened lower. It's still in the red, but we're seeing some recovery.
Well, it's been that sell-on rally sort of a texture that the market has had so far on the course of the day. Every single intraday recovery that has happened has been sold into. There was a very brief recovery that we saw sometime around 11 o'clock and then we sold off again. And since then, we have been meandering around this 23,650, 23,700 range for a better part of the last 60 minutes. Now, the 150 points lower, at one point we were down 300. So you take that, you've cut down almost half of your losses. Today, of course, being the Sensex weekly expiry, you need to keep that on your radar as well. So that will bring about its own fair share of volatility. The Nifty Bank has been the principal Pied Piper, if you would like to call it, the way the Nifty has moved. It's been in congruence with the Nifty Bank. And the other one that has ensured that the Nifty has seen some semblance of recovery has been Reliance Industries, the big Nifty heavyweight. And that is possibly the only stock that has held out in what has been an otherwise red screen within the large cap heavyweight. So still almost 1% higher on Reliance Industries. But for now, the index remains lower. The last 2 hours are very important considering the expiry related play that comes in.
Absolutely. And as you said, right, at one point we had all the indices except for the energy pack in the red. Now we're seeing a little bit more green, a few more indices that have made it into the green right now. So on the upside, we've got those energy stocks. We've got Coal India, NTPC up over 1%, while Tata Power is rallying about 4%. We've got Coal India also now 4% in the green. Apart from that, we've also got these gas stocks that are doing really well. GAIL, Gujarat Gas, Adani Total Gas, all of them in the green. Adani Total is nearly 10% in the green as we speak. But on the downside, the markets are feeling pressure from the auto pack. That did badly yesterday. It's also the top losing index today, down about 2.5%. We've got M&M, Eicher Motors, Ashok Leyland, all of them down over 2% in trade. And private banks also continue to feel the pressure. ICICI Bank, IndusInd Bank, Axis Bank, all of them lower in trade today. But on the show today, the February consumer price inflation data as per the new series will be out today at 4 p.m. A CNBC TV 18 poll sees CPI in February at 3.1%. What else should one watch out for? Lata Venkatesh is here with all of those details. Lata?
Well, first up, I'll just tell you the results of the poll. The CPI number, as you said, expected to come in at 3.1. It was 2.75 in January. See, we don't have year-on-year comparisons because this is a new series. So month on month, as you can see, there'll be a slight uptick, more because of the base effect. Food inflation will be slightly higher. Again, this is more a base effect related thing, 3% versus 2.1, and core CPI, which is non-food, non-fuel, at 3.4%, much like we saw in Jan. The point is, this is not what the market is waiting for with any nail-biting anxiety. Because when did the war start? The war started on February 28. So none of those increases in prices is going to get reflected. What will get reflected in March will be the higher gas cylinder prices. That is the only consumer element that went up immediately. So what we will wait for will be the March CPI number. But this time, the WPI number will become important. Again, for March, not for February, because over there, even ATF prices will reflect immediately. A lot of the propane higher prices or polymer, higher prices. All these are WPI, wholesale prices. The consumer doesn't pay them. So what will be interesting really will be the March inflation data, which we will know only next month. And even over there, the wholesale price will be more important than the retail for a change.
Yes, all eyes on next month's figures, but of course we'll keep an eye out on today's figures as well. But Lata, you know, the rupee also hit a fresh low today and compared to the levels overnight. What's the story here?
Well, the rupee is down in sync with most Asian currencies, give or take a bit. That's largely because all of them are affected by the same thing. The dollar is stronger, much more important. Crude has again gone through the roof, almost touching $100 at various points in time over the last 24 hours. So that is negative for Asia generally. The story in the market quite clearly is that even at 92.30, 92.33 levels, it is the Reserve Bank that is holding the currency over there. Left to itself, the currency will, the Indian rupee will perhaps be more like 93.5 or something to buy, 92.5 or something to buy a dollar. In fact, the Reserve Bank is present in all markets, all the fixed income markets. It's present in the spot rupee. It's present in the forward rupee in a way because it intervenes in the NDF market, which is a non-deliverable forward market. As well, it has been doing a lot of OMOs and the government has done switches, which is intervening in the yield market, the bond market. So the prices are not what they would have been but for the RBI intervention, but that's what you have. Rupee at fresh lows and pressure to see it go lower.
So rupee at record lows, hitting record lows today. Thank you so much for those details, Lata. But on to our top story today. We continue with updates from West Asia. Iran strikes energy infrastructure in various neighboring regions with reports of 2 foreign oil tankers attacked in Iraq a few hours after a Thai ship was hit in the Strait of Hormuz and drones struck fuel tanks in an Omani port. Meanwhile, Iran's president outlines 3 conditions to end the war: recognition of Tehran's legitimate rights, payment of reparations, and firm international guarantees against future aggression. On the other side, US President Donald Trump told reporters that there was practically nothing left to target, adding that the war would end soon. Countering that, Israel's defense minister said the war would continue without any time limit for as long as necessary until we achieve all the objectives and decisively win the campaign.
Now we're going to look very strongly at the Straits. The Straits are in great shape. We've knocked out all of their boats. They have some missiles, but not very many. I think we're in very good shape. The main thing is we have to win this. They win it quickly, but win it. And there are many people, I'm just watching some of the news. Most people say it's already been won. It's just a question of when. When do we stop? We don't want to let it regrow.
Now, the International Energy Agency has agreed to release 400 million barrels of oil from its members' strategic reserves in an attempt to counter the soaring global energy prices amidst the West Asia war. The proposed release is larger than the 182 million barrels of oil that the IEA member countries had released in 2022 after Russia's invasion of Ukraine. Now, out of these 400 million barrels, the United States will be releasing 172 million barrels from its strategic petroleum reserve. Here's what International Energy Agency's Fatih Birol had to say.
This is a major action aiming to alleviate the immediate impacts of the disruption in markets. But, to be clear, the most important thing for a return to stable flows of oil and gas is the resumption of transit through the Strait of Hormuz.
US President Donald Trump also praised the IEA decision to release a record 400 million barrels of oil, saying it will substantially reduce the oil prices. Adds on military operations in Iran, he says they have got to finish the job in Iran.
My administration, as you know better than anybody, is also working to keep the oil flowing. It's flowing all over. We knocked out, they want to drop some mines. But I'm pleased to report that earlier today, the International Energy Agency agreed to coordinate the release of a record 400 million barrels of oil from various national petroleum reserves around the world, which will substantially reduce the oil prices as we end this threat to America and this threat to the world. We don't want to leave early, do we? We got to finish the job, right?
Now, the United States has also opened an investigation under Section 301B of the Trade Act of 1974 on 16 partner countries. The investigation relates to alleged excess production capacity in manufacturing sectors. According to U.S. Trade Representative Jameson Greer, the probe will determine whether these nations have acts, policies and practices that are unreasonable or discriminatory, and if they burden or restrict U.S. commerce. The countries named in the probe include India, China, Indonesia, Malaysia, Cambodia, Bangladesh, Vietnam, Thailand, Taiwan, South Korea, Japan, Singapore, Switzerland, Norway, Mexico, and the European Union.
On that note, it is time for us to head into a short break, but we will get you the latest updates on the gas supply shortage across Mumbai and Noida. Stay tuned.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर. Signature finest silver इलायची, a premium product from Dalmia Group.
Your exit का टाइमिंग परफेक्ट होना चाहिए, इसलिए कोटक नियो का स्ट्रैटेजी बॉट.
Stay तेज with Kotak Neo and automate your trades with Strategy Bot. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
अरे टेंशन किस बात की? सेंचुरी प्रोवुड का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है. यानी ये है जहां नो टेंशन वहां.
Premium Plus by Century ProWood.
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
अगर शूज में फुल फ्लेक्सिबिलिटी चाहिए तो इन्वेस्टमेंट्स में क्यों नहीं? अब अपने इन्वेस्टमेंट्स को दो फुल फ्लेक्सिबिलिटी का एडवांटेज विद फ्लेक्सी कैप फंड्स। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना। लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century Prowood.
Yet another attempt at recovering from the lows of the day for the index. We're now at 23,739 as we speak. So there has been a little bit of a recovery from when we began the show. We were below 23,700 at that point of time. So a 50-60 point up move is what we have seen. But as has been the trend, it remains to be seen whether this recovery too gets sold into as we go into the last couple of hours of the trading session. Just a couple of stocks before I give it back to Arundhati. NTPC Green Energy is the top gainer on the Nifty 500, 14% higher on the stock, powering ahead along with all the other power names. JSW Energy, Tata Power, Adani Power, BHEL, Torrent Power, all of them seeing gains of anywhere between 5 to 8% in today's session, Arundhati.
All right, so that's how the markets are looking. But as we wrap this edition of Business Lunch, here's a quick reminder for our viewers. CNBC TV 18's India Business Leader Awards will be held this Saturday. Tune in as we honor the ICC Men's T20 World Cup champions. Catch our coverage 4 p.m. onwards.
स्टॉक्स में एक्सपर्ट हूँ, पर कोटक नियो 300 स्टॉक्स में।
Stay tez with Kotak Neo and get access to daily trading ideas. Investments in securities markets are subject to market risks. Read all related documents carefully before investing.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर। Signature Finest Silver Ilaichi, a premium product from Dilbar Group.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
Good afternoon. Welcome to Mid-Cap Radar live from the CNBC TV 18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Massive recovery which is underway. We start the show with mid-cap index in the green as we speak. So that index is up around 90 odd points. The advanced decline ratio absolutely flat. We'll see which way things go. But for now, there is some recovery that we are witnessing in the markets. Hey, Vivek.
Good afternoon, and what a recovery we've seen, especially in the last half hour or so. The capital goods stocks, the power stocks are leading the recovery, and a whole host of PSU names, banking too, have now started recovering quite sharply from the day's lowest point. But a lot lined up on the show. Let's start off with the top headlines. Stocks open with a sharp cup, but see some buying at lower levels, though declines continue to exceed advances. The mid-cap index recovers to trade in the green.
NTPC Green, KPI Green, NLC India, JSW Energy all zoom in trade. Brokerage firm Morgan Stanley in a note wrote that a thermal coal-based power generation could take incremental load due to the surge in power demand.
Escalating tensions in West Asia, dense sentiment across autos and auto ancillary names, mounting concerns over gas shortages spooks investors.
Oil flares up after 2 oil tankers near Iraq are struck. IEA's decision to release 400 million barrels from strategic reserves, with US contributing 172 million over 120 days, does little to dispel fears of a long supply disruption.
Well, what a recovery we are seeing, especially as far as the market is concerned. A sharp recovery, especially amongst the power names today. Look at names like JSW Energy, names like Tata Power, NTPC. Remember, these are coal-based companies, especially JSW Energy does have some merchant capacity. And on the back of expectations of a strong summer this time around and lower gas-based generation, you're seeing a very sharp recovery across most of the power names today. Along with that, Coal India too, one of the top gainers in the session today on the back of increased expectations for coal demand and higher e-auction prices. But these names and a whole host of other names is what Gaurav has on his radar. He's standing by the wall to take us to the mid-caps that are moving around in the session. Gaurav, over to you.
Well, yes, when we look at the market is still in red, but mid-cap index now that has recovered. And when we look at the recovery, first let's talk about the stocks which are actually up in trade. And when we look at the list, energy is one index which is up. Not only the index is up, but if you look at the stocks like Adani Total Gas, JSW Energy, all of these stocks are up in trade. Remember, Adani Total Gas is up more than 27% in the last three days itself. Other than that, we have also companies like NLC India, Inox Wind, CSE. All of these stocks are not only up in trade, but we are also seeing some good and healthy volumes here. On the other hand, if you look at, and when we talk about volumes, first, let's talk about DOMS. Now, this company is up in trade, and if you look at the volumes for today's trading session are around 42 lakh shares versus the 10-day average of 42,000 shares. So, a sharp volume surge is what we are seeing, and the stock price is also surging. But other than that, we have got companies like NTPC Green and KPI Green. These stocks are also not in up in trade, but also in terms of volumes. On the losing side, now, when we look at the index, it is dragged by companies like IndusInd Bank, Ashok Leyland, Colgate, Dabur India, Page Industries. Now, these are the companies which are key dragger. In fact, if you look at IndusInd Bank, yesterday also it was down in trade. Same with the Colgate. And in fact, Colgate is also at its 52-week low level. And when we look at 52-week low stocks, there are certain stocks and a whole bunch of stocks who actually were near that 52-week low level. But key stocks, if we have to list a few, are in the likes of Varun Beverages, Jyoti Labs, 5-Star Business. And we also have some of the FMCG names like Jubilant Foods and Swiggy. Remember, there is some concern around the LPG gas, and that is something which is pressuring these stocks. So that's the reason why we will keep an eye on these stocks. But for now, they're trading near its 52-week low levels.
Okay, take that point. Thank you so much for joining us with that list. Interesting one there, considering the recovery that we're seeing in the broader markets. Let's now welcome Dharmesh Shah, Assistant VP of ICICI Securities, for a technical check on the markets. Dharmesh, there is a recovery which is underway, especially when we talk about the broader markets. Some of these specific sectors which have been laggards are leading to recovery. Do you think we could sustain these levels? What are the next important levels on the Nifty?
So good afternoon, Sunil. Yes, absolutely. I think so. If you look at the market in the today's trading session, after the gap down opening, we see a more of a stock-specific to sector-specific actions happening in the market. But as far as Nifty is concerned, yes, definitely, we have already seen a good correction of almost 3% on the weekly basis. A stochastic sign to oversold territory with a reading of weekly of around 15. It looks like, I think so, market seems to be entering into oversold territory, expecting Nifty to find a strong support in this range of 23,200 to 23,500, and we should be expecting some bit of a recovery in the days to come. So yes, 23,200 remains to be a very strong support for the Nifty, and on the high side again 24,400 is likely to act as the immediate resistance for the Nifty. So overall, I think it's more of a trading range for the market. More important to watch out, maybe I think the crude oil prices. I think so. Any further sell-off in the crude oil prices can be big positive for the Indian stock market. So as we believe, I think so it's more for volatility likely to continue with, I think so buy on this should be the strategy going forward. Just want to share with you some bit of our data on the geopolitical tensions. We've done some bit of analysis on the basis of the geopolitical, where if you look at the market for last 2 decades, there has been 6 geopolitical tensions happen in the Indian stock market. In this, all this corrections have been in the tenor of around 10 to 11%, with the time frame of around 3 to 4 weeks it continues. In the current context, we are already seeing a good correction of almost 9%. Maybe price-wise, we are 1 or 2% on the major downside, cannot be ruled out. But time-wise, maybe by next week, we should be seeing some bit of a bottoming out formation in the days to come. So buy the dip should be the strategy going forward from the medium-term perspective.
Okay, Dharmesh, so buy on dip strategy is what you have on your radar. What are individual trading calls that you're sharing with our viewers today?
Yes, Vivek, if you look at the market, I think so power as a sector remains to be in the limelight. I think so the most underowned sector for a long time. And after the strong sense of demand coming from the summer season, it looks like, I think so, NHPC remains to be a top pick at the current market price. If you look at the stock, I think the stock has done nothing for a long time, expecting a breakout of a falling trend line, indicating the end of the corrective phase, and expecting NHPC to head towards 82, keeping a stop loss of 71. Apart from NHPC, I think so Astra Microwave inside the defense space looks to be more positive going forward. If you look at the chart for the Astra Microwave, since 2020 COVID, I think so there has been 3 to 4 major corrections happen in the Astra Microwave. And all such corrections get anchored, or we can say a demand seems to be emerging from 100-week EMA. Post that, I think so followed by new high. We believe for Astra Microwave at the current market price, the risk lower looks more favorable, keeping a stop loss of around 944 with a target of 150. We expect Astra Microwave to see 10 to 12% upside from the current market price.
Take that point, Dharmesh. Thank you so much for joining us. So those are some individual bets coming in. But for the markets, there's a swift recovery. Nifty is above the 23,800 mark right now. If you talk about the mid-cap index as well, when we started the show, it was up 80 points. Now it's up 180 points. The advanced decline ratio, those lines should also come up for you on the screen. There's a definite improvement there in favor of advances as well. So look at that. Those lines have merged, and now there are more stocks on the advancing side versus declining side. We'll have to see whether this momentum sustains or not. But in the broader markets, we do have a lot of movers. For instance, Confidence Petroleum, that stock is up 20%. It is provider of gas cylinders, manufacturer of gas cylinders. So that is one stock which is on our radar. We do have NTPC Green Energy, which is up around 14%. Adani Total Gas is up 10%. TTK Prestige, we've been talking about the stock for a while. That one is also up 9%. So a lot of moving parts in the broader markets. The small cap index should also come up for you on the screen. That is another indication of what's happening in the broader markets. Recovered, but still in the red as we speak. So we'll watch out for what happens in the small cap space.
Well, that's right. So small cap and mid cap, like you mentioned, doing quite well, recovering quite sharply. You know, another sector that's actually doing quite well and recovered is the NBFC pack. Remember, last couple of trading sessions, especially yesterday, you did see most of the major names take a very sharp knock. Names like Bajaj Finance, Chola, you also saw Shriram Finance and AB Capital, all of them falling quite sharply. Today, a very good recovery seen across most of the names. And AB Capital, remember, today also has, there has been an initiating coverage report coming from Kotak on that particular name. So that too has recovered quite sharply from the day's lowest point. But with that, we'll slip into a short break. Next up, we will focus on power stocks, which are buzzing in the session today.
continues to be volatile. Mid-cap index was up 200 points at a point in time. It is back at that 150-point uptick level. So we'll continue to track that for you, but there's a definite recovery which is underway. But let's talk about India's power sector. There's been a subdued summer and winter in FY26, but focus has shifted to FY27 in terms of an anticipation of a better year. Morgan Stanley has flagged multiple triggers for renewable power, but there is a lot that's happening in thermal power as well. Tell us more about that. It's a very interesting note.
Well, that's right. So very interesting developments as far as the power space is concerned. FY26, remember, was a muted year in terms of demand on the back of the fact that you did see a subdued summer, so extended monsoons, and also winter was quite strong. So most of the main triggers that aids to power demand actually went missing in FY26. On the back of that, you did see significant underperformance by the entire power pack, and you did see derating across quite a few of the names, especially ones with open merchant capacity. But FY27, so far the start appears to be a lot more encouraging in terms of power demand. Temperatures have risen significantly and parts of the country are facing a heat wave. Along with that, remember, there is now a visible and tangible risk of lower gas supplies as well as lower hydropower generation in H1 FY27. Gas on account of the fact that the West Asia crisis is ensuring that gas goes to more preferred sectors or more priority sectors. And hydropower generation, there are certain reports that indicate that NHPC this time around may not be able to come up with the same quantum of power that it came last year around. So Morgan Stanley today has written a note on the entire space. They're saying that the incremental load will now mostly be required to be borne by thermal coal-based power generation companies, and what they're saying is that they've quantified the risk in terms of gas as well as hydropower going away. Gas contributed close to 2% of total power in FY26, and hydropower contributed close to 9%. Now, coming to individual stock-specific ideas given by Morgan Stanley, they say that Adani Power and JSW Energy will benefit from higher and stronger merchant earnings since they have some open coal-based capacity. They say Tata Power, that will benefit in case a Mundra long-term PPA signed, or even if a Section 11 Emergency Power Procurement Act comes into effect. Coming to Torrent Power, it's quite tricky, but they say that in case the company does see physical cargo access, in that case, the company could see benefits coming in from merchant gas sale profits. And lastly, they say NTPC, remember, it's India's largest thermal power company. They say that the price to book multiple that NTPC currently enjoying, they say that that could re-rate. And this is mainly on the back of peak deficit conditions that India could face in case it's an El Nino year.
Okay, all right. We hope it is not, though.
That's right.
But yes, those stocks are in focus. But let's slip into a short break. We'll focus on the auto sector on the back of escalating tensions that we're seeing in West Asia and what Brokerage house Nomura has to say on that.
Welcome back to Midcap Radar. Well, quite volatile, but the power space continues to do quite well. But one particular sector that's been battered and bruised is actually the auto space. Today, Nomura has come out with a report, and they've gone ahead and done a scenario analysis on how the shortage of gas would impact the auto space. Sudarshan joins in with the main details.
So as you have said, over the last few trading sessions, auto stocks have been under pressure, and today Nomura has come out with a note talking about the impact of the ongoing gas supply crisis that the entire industry is facing. So first, it has said that its analysis of energy usage indicates that gas commands meaningful share, and in the very short term, it would be very difficult for auto industry to shift to alternative use of energy. So, and if you talk about the use of gases, first, it's being used in the paint shop, and second is furnaces for forging, casting, and heat treatment processes. And also now, how can companies look to mitigate the impact? One, Nomura has said that companies can operate plants during holidays to partly mitigate the impact, and also gas which is used in canteens, that can also be diverted and it can be used for the production process. In that process also, it can partly mitigate the impact. What about which all companies will be impacted the most? Nomura believes that all the companies under its coverage will be impacted the most. Amongst auto companies, Maruti, Bajaj Auto and TVS Motor will be impacted the most, while in the auto ancillary pack, it's Balkrishna Industries, Apollo Tyres, Uno Minda and Bharat Force. So it looks like that majority of the companies, whether you talk about the auto stocks or auto ancillary companies, will be impacted by this issue.
Okay, take that point. There's impact across sectors. Thank you so much, Sudarshan, for joining us. Let's talk about the banking space. There has been underperformance coming in from the Bank Nifty, but large private banks are facing growth challenges. That's the word coming in from Sridhar Shivaram of Enam Holdings. He adds PSU banks are becoming aggressive in retail lending. Listen into a slice of that conversation.
Having a non-consensus view on private banks for a while now, and I put out a lot of data on my LinkedIn on why private banks, especially the large ones, have some issues. I think what has happened is, if you take the last 12 months or even 18 months, PSU banks have become very aggressive on the retail space, which has been like the bastion for private banks. Last quarter numbers were a bit staggering, that the PSU banks, if you take the top 6 PSU banks leaving SBI, their loan growth, the retail loan growth, was almost 23%. And compare that with the top 3 private banks with roughly similar assets, which is 60 lakh crores for these 6 PSU banks, and top 3 private banks also roughly loan book is 60 lakh crores, the overall loan book. Their retail loan book grown single digits. Mortgages for the PSUs were about 17-18% growth. And this is about 6-7%. Vehicle was even more shocking, almost 20% for the PSUs, and it was single digit for almost 1 or 2% for the private banks. And what has happened is that you're seeing full page ads from PSU banks, home loans at 725, vehicle loans at 775, 8, which we have never seen. The earlier view was stray loans people will take, but on size, nobody goes to take an auto loan from a PSU bank. That has flipped. So when I speak to the PSU banks and I question the profitability model for them, their point is, my guidance is 275 to 3% NIM, 1% ROA. I'm able to reach with this. A 1% ROA for a private bank is a no-no, right? So basically, in our view, the profit pool for the banking sector has shrunk, because the same technology that earlier was something unique to the private sector banks, now most PSU banks have invested in technology. The CIBIL score is common for everybody. And they use all the other tech. If you speak to SBI, they'll tell you what all technology measures they use. So I think that's what has happened. The profit pool for the banks are shrinking. It is difficult for them to then move out of such a large segment and find newer segments. So if you see the loan growth of private sector banks, the larger ones, they were disappointing. So I think that is the issue that we are facing, that will they be able to, heydays, private sector banks used to give you 20% profit growth. We are now in the 10% profit growth band.
But
so
just to complete that, and that's, I think, beautifully explained, the entire thesis.
And you're absolutely right, and you got it. You were early on this one, and the market, of course, is now reacting. So it's a profit pool question.
Yes.
It's not a asset quality issue.
It's not an asset quality issue. Yeah, it's not. It's just a question of reset. That what is the profit pool for the banks? The earlier thesis was private sector banks keep chipping away, taking market share from PSU banks. That has flipped. So it's now the PSU banks bouncing back, taking market share from the private sector banks, and that too from a pool which was very profitable for the private sector banks because they were making very strong ROAs on this. They're literally vacating a mortgage space, a vehicle loan space, because they think there isn't enough profit. But the PSU banks are happy because their ask is much lower.
Well, PSU banks are preferred currently over the private banking, and that's one of the key points from that particular conversation. But as we wrap up on this edition of Midcap Radar, here's a quick reminder for our viewers. CNBC TV 18's India Business Leader Awards will be held this Saturday. Tune in as we honor the ICIC Men's T20 World Cup champions. Catch our coverage 4 p.m. onwards on March 14th.
Hello, good afternoon. You've tuned into MF Corner on CNBC TV 18. I'm Vinny Motiwala, with me Sonal Bhutra as always. Sonal, good afternoon to you as well. Last time we discussed how to face this volatility or a correction in the market. Today we're here to solve doubts.
Exactly. So we have an expert joining us to solve all your mutual fund queries. Let's get in Nisreen Mamaji, who's certified financial trainer. She's here to answer all the queries that you have. Founder at MoneyWorks FS joining us now. Nisreen, always a pleasure speaking with you. Thank you so much for joining in today. So we'll not waste any time because it's a long list that we have today. So let's get started with the first one. Arka Kundu is writing to us from New Delhi. She says that she has started investing. This is via SIPs for 18 months now, and her investments are spread across 3 asset classes, be it equity, there's hybrid as well, and debt. Started with an initial amount of 10,000 rupees a month. She says that her investments, they are giving her returns of around 11%. Her goal is to accumulate a good corpus for her retirement. She further asks she would want to withdraw an amount of 1 lakh rupees per month from the corpus. She wants to know if her portfolio has all the right funds. Of course, those funds will also come up for you on the screen. There's SBI PSU Direct Plan Growth, there is Tata Multi-Asset Allocation Direct Fund, and ABSL Medium Term Plan Direct as well. Nisreen, what is your advice?
Sure. So as a certified financial planner and a SEBI-registered mutual fund distributor, these are the following suggestions that I can give you, Arka. So basically right now, you have a lot of sector concentration because 50% of your portfolio is invested in SBI PSU funds, which invest only in PSU companies. So you say typically these sectoral funds can be a little volatile and cyclical in nature, and it's not very suitable for a core retirement portfolio, what you are planning. Also, you have too much debt, for a younger investor. So you've invested in ABSL Medium Term Plan, which is a debt fund. And if you're investing for the longer term, like say nearly 28 years, then typically equity should dominate because, you have more possibility of returns in the longer term, tenure than in the debt funds. So ideal allocation for someone in your age who's planning a longer term retirement would be, say, 70 to 80% in equity. Hybrid should be about 10 to 15%, and debt should be about 10 to 15%. So I can give you a, suggested portfolio, which is allocation can be Parak Parik FlexiCap Fund, which is your core equity, about 4,000 rupees. HDFC Midcap Opportunity, which for the midcap part of the portfolio to also, give it a boost in the longer term in terms of returns, 3,000 rupees. Tata Multi-Asset Allocation, which is a hybrid fund for about 2,000 rupees. And Aditya Birla Sun Life Medium Term Plan, restricted to 1,000 rupees. So you have a current valuation of about, say, 2,14,000 rupees. You're also planning to do an SIP of 10,000 rupees. So this could yield you about 3.5 crores, after 28.5 years, what you have suggested, at a CAGR, expected CAGR of 12%. Now, this, what you are mentioning is that you would like to withdraw, say, 1 lakh a month, now, which is translated to 12 lakhs a year. But after 28 years, this amount would be about 48 lakhs per annum, because we also have to inflate your withdrawals by about 5% annually, which is the suggested inflation rate over the next 28 years. So today, what you can buy with 1 lakh rupees a month, after 28.5 years, your purchasing power would be, for that amount of same purchasing power, you would need about 4 lakh rupees a month. Therefore, you should do a step-up SIP annually. Instead of only 13,000 rupees for the next 28 years, you should increase it by 10% annually by doing a step-up SIP, wherein your future corpus value at an expected growth rate of 12% would be around 7.3 crores. And that can possibly support a withdrawal of 48 lakhs per annum 28 years later. So, definitely continue with your SIPs in the manner that I have suggested, but also remember to increase your SIP by 10% annually and to regularly do a review so that, you are on track because your tenure is 28.5 years. So you should make sure that you are on track by reviewing it every year and making changes possibly every 3 years. So all the very best to you, Arka.
Okay, thanks so much for that view there, Nisreen. The next query then for today is coming from Umesh Jain. He's writing to us from New Delhi. He's asking if it's the right time to invest in specialized investments funds, SIFs. What is your view coming in on SIFs? Should we be looking at, should Umesh be looking at it right now? What's your view?
Basically, getting F&O exposure through SIFs do help navigate a stagnant market, which is, as he's rightly said, it's moving in a sideways zone. For example, the short positions, on underperforming stocks can be managed through an SIF. Now, SIFs are specially designed actually for sideways, volatile, and range-bound markets, which he is observing right now. So it is relevant in 2026 for a seasoned investor who's looking for, a downside protection. But, a word of caution, this is not a magical product, and it requires somebody with a higher risk appetite because it often involves complex strategies like derivatives and short selling. So, investing in SIFs only because the market is sideways is a slightly risky view. Sideways phases eventually end. And when the markets trend strongly upward, like a long-only equity fund will usually outperform a derivative strategy. So more than looking at it as, from the way that Umesh is looking at it, it would be advisable to look at it from a diversification perspective and not as a market timing strategy. So because, SIFs are really a little more complicated than mutual funds. Key risk over here would be like the derivative risks because, leveraging through the F&O, it can increase volatility. The fund manager dependency will also be there in an SIF because the returns will heavily depend on the strategy and execution that the fund manager can, execute. And also it will have slightly higher expense ratios. And because they've been recently introduced, the track record is also not there, to make a very to have retrospective knowledge. So it's important for an investor who has a large mutual fund portfolio. So Umesh, if you already have an existing mutual fund portfolio, you want an alternative strategy, and you want to invest about 10 to 20% of your portfolio in an SIF, plus you have a long-term investment horizon, then you would be an ideal investor for an SIF fund.
Take that point, Nisreen, and they're just not portfolio-related questions, a lot of tax-related questions as well. So Naveen Kumar is writing to us from Mumbai. He asks if switching from one equity direct plan to another within the same AMC treats as a redemption and will lead to any tax. I'll come to you for the answer, but this has been a long-standing debate, Nisreen.
Sure. So definitely, under the current income tax regulations in India, switching from one equity fund to another, even within the same asset management company, is treated as a redemption on the books from the old fund and a fresh purchase into the new fund. The money will not go through your bank account, because you're doing a switch. So the units will be switched directly from one fund to another fund, but on the books, it will definitely be considered a redemption and a purchase. Therefore, you will, the capital gains tax will get attracted. Now, if it's an equity fund, and if you've held it for less than 1 year, then short-term capital gains will be, attracted. You will be liable for STCG, which is around 20% of the gains. But if you've held those units for more than 1 year, then you will attract long-term capital gains, which is 12.5% of the gains above and beyond 125,000 rupees. So any gain that you have made over 1,25,000 rupees will attract a capital gains tax long-term of 12.5%. But if you are switching out of the original fund before its minimum holding period, which could typically be 1 year, then you will also be charged an exit load of about 1%. Okay. So besides the tax, you should also be aware that an exit load may be chargeable. So keep these things in mind. And yes, a capital gains tax is attracted when there is a switch, because on the books, it's a redemption from the old fund and a purchase into the new fund.
Okay, sure. Point taken there, Nisreen. But on that note, we're going to sip into a very short break. We'll come back with more of your mutual fund related queries on the other side. Stay tuned in.
मेरा रुतबा है मेरा सिग्नेचर दुनिया की सोच से ऊपर बेबाक है मेरा सिग्नेचर फाइनेस्ट सिल्वर इलायची अ प्रीमियम प्रोडक्ट फ्रॉम दिलबाग ग्रुप
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
Market headlines to understand the reasons for the day's movers and shakers and get your portfolio ready for tomorrow. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Mixed picture as of now. The Hang Seng, well, absolutely at the flat line. The Taiwanese index is down around 0.3%.
Earlier today, the International Energy Agency agreed to coordinate the release of a record 400 million barrels of oil.
Most important thing for a return to stable flows of oil and gas.
400 million barrels is 4 days worth of global oil consumption.
We will be doing around $5 million purely from generative AI for this year from GBS.
That is Coal India. Everything else is down. And Indigo and ICICI and Eternal.
SBI has shown that despite being large, is growing faster.
As far as government is concerned, we are trying to see that they are provided what is possible within the circumstances.
US releasing 172 million barrels out of this 400, and Japan is wanting to pitch in with 80 million barrels as well.
Besides that, the government has mandated 25% increase in production from refineries.
We've recovered about 186 points from the lows on the Nifty and over 400 points for the Nifty Bank.
Sales have tripled in the last 4 to 5 days. Even Amazon has reported a 30x surge.
If the stress persists, the government may have to step in with guarantees or even restructuring.
CPI number, as you said, expected to come in at 3.1. It was 2.75 in January. Even at 92.30, 92.33 levels, it is the Reserve Bank that is holding the currency.
So with mid-cap index in the green as we speak, so that index is up around 90 odd points. The advance decline ratio absolutely flat. We'll see which way things go. But for now, there is some recovery that we are witnessing in the markets. Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC TV 18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Mangalam Malu. Well, Mangalam, we managed to claw back from the worst damage that the markets had. The Nifty had gone down to levels of 23,550 at the session lows. The mid-cap index was also down about 1,100 points. So we're off from those levels, but still, we're very much in the red. So Nifty Sensex down close to about 0.7%, 0.6%. The mid-cap index, though, is on the flatter side. Look at the way autos have sold off today. The Nifty Auto Index is down 2.5% today from the start of the week. The Nifty Auto Index is lower by about 6.5%. But I think the recovery in the mid-cap space, I think that's been a bit heartening today.
The recovery in the mid-cap space, and, you know, the only way to describe the market today would perhaps be down, but not quite out, because we've seen the mid-cap index at one point move into the green. And even if you look at the market breadth, right, when we opened shock today, it was 400 stocks which were in the green, and that number is swiftly tripled. So we have around 1,300 stocks which are in the green. At some point, those lines did intersect. Yes, the red line is still above because the uncertainty is still not out of the window. The other chart that tells you the story of the day is the India VIX. Yesterday, when the market was, falling in the last hour of trade, we did see the India VIX spike all the way up in double digits, upwards of 21. Today, it opened higher, and as there was panic in the market, it did sustain at 3 to 4% higher levels. And as we moved, towards the end of trade so far, or moving into the last hour, the India VIX is all but absolutely flat. So fear is somewhat moderating. You can't call it subsiding, but it's somewhat moderating. So let's tell you what's on the show today. Nifty stages a mild recovery to rise above those 23,700 levels around the day's high right now. Broader market too recovers to trade flat. Mixed moves across sectors. We'll talk about all of them. The West Asia war has been putting pressure on financial stocks. Oil prices, they're on the rise. The PSU Bank Index has declined by about 5% in the last 1 week, but has outperformed private bank peers over the last 1 year and longer than that as well. A comprehensive performance analysis of the private versus PSU banks coming up on the show. And then powering through the weakness, we have a bunch of these power stocks, Adani Power, JSW Energy, Tata and Torrent Power. We'll talk about all of that as Morgan Stanley believes the rising summer demand could benefit these stocks. We'll understand why on the show.
All right, news is just coming in. This is source-based information that India is in talks with Iran to secure the safe passage of 20-odd tankers through the Strait of Hormuz. 10 of the vessels are carrying LPG contracted IOC HPCL. 5 of them are transporting crude. So that is, a big positive, because following the tensions in Middle East, we've seen a shortage, particularly of LPG. Many restaurants in Mumbai, Bangalore have had to shut shop on account of the LPG shortage. There've been hoarding of cylinders taking place. We've been talking about how induction cookers have been rising through the roof. So this is a positive if India, via diplomatic channels, is able to allow the safe passage of crude and crude products through the Strait of Hormuz. And I think this will provide a lot of relief and concern surrounding energy security about India.
Speaking about energy, you would have to watch the channel at 5 p.m. today, because there is a conversation with the U.S. Energy Secretary Chris Wright, which comes up as the CNBC Edge. Chris Wright, the U.S. Department of Energy Secretary, speaks to CNBC, and you can catch it at 5 p.m. today here on CNBC TV 18 itself. And speaking about energy security, talks with Iran are on right now. We've got the source-based information. And slowly, as we progress towards the end of day, I'm sure there would be a few more comments that may come in to that tune as well. But let's welcome Mitesh now for how you should position yourself in the last hour of trade. Mitesh, today's panic low, do you think it's a little more formidable than what Monday's was, or you're still chasing headlines and maybe something else happens and we break that as well?
Good afternoon. To be very honest, I think it is a very difficult question to answer, given the fact that in this kind of scenario, forecasting is per se, is slightly difficult. Once we see a confirmed reversal, we can say that at least, okay, the signs are there. The only thing I have in the favor of that argument is that the markets are oversold. But have we seen any kind of reversal signal as yet? No. I think, I would still want to see the Bank Nifty get past 55,650. We got a bounce back and a high of around 55,636. But, getting past 55,650, 670 would confirm a minor reversal as we start capturing yesterday's low. Similarly, for the Nifty also, we didn't do that. Getting past 23,850 could suggest that at least some short covering will happen. So for the time being, just wait it out. It is not a market, you would want to go long till you get some kind of a reversal, at least on the half-hourly or the hourly charts. And the idea is that even with the half-hourly chart, I would be okay to trade, because we are so oversold that even a mild reversal can give you about 300-400 point kind of a pullback. So as a trader, I think, I would keep a close watch on the index and see if we are able to capture or just get beyond today's high a bit. That would give me some ammunition or some reason to, venture into long positions on the index. But for the timing, the idea is to avoid the index till we get such kind of signal, or if you get a pullback which could take us back to about 24,400, then I think, aggressive shorting can be done, because my belief is that eventually on the medium-term charts, the setup is slightly on the negative side. The stock calls that I have right now, one buy and one sell. Nykaa is a sell with a stop at 250 half for targets of 236, and Siemens is a buy. Keep a stop below 33.19, look for targets of 33.9.
Okay, that's some stock calls coming in for the last hour of trade. Let's talk about the banking sector, because the escalating West Asia war has also put the financials under pressure. Brokerage firm Jefferies has also come out with their view on the sector. Ritu joins in to break it down for us.
While the West Asia conflict is putting Indian financials under pressure, and the historical playbook says oil price surges actually lift credit growth because working capital demand rises and the bond market stress pushes borrowers towards banks. But Jefferies flags that this time around, the current oil supply shock is stronger than the past episodes, and that could threaten the production capacity and commercial cash flows. And if the stress persists, the choice is between the government stepping in with guarantees or restructuring. So what happens to bank earnings? A 5% hit on the top line, and large bank FY27 earnings can take a 7 to 10% hit. And in a scenario where credit cost goes up by 5%, the damage is contained at 1 to 2%. For mid-sized banks, both numbers are significantly worse, 15 to 25% on the top line, 2 to 6% on credit cost. Now, SME, commercial vehicles, overseas books are the pressure points, and according to Jefferies, EU Small Finance Bank, SBI, Bank of Baroda and Induction carry the highest exposure. On valuations, it says Nifty Bank is at 1.5 times forward book. The historical floor outside of COVID and the global financial crisis was 1.3 to 1.5 times. And conflict resolution can be the re-rating trigger. But for NBFCs, there is a triple drag. First, asset quality risk, MSMEs, CV operators, and EXIM-linked businesses are all vulnerable. Second, a cost of funds squeeze where rising bond yields and commercial paper rates are pushing up the borrowing cost. And the likes of Bajaj Finance, Manappuram, SBI Card, they're first in the line to feel that. Third, a growth slowdown because lenders are already tightening filters. The bright spots are housing finance companies and gold financiers, which are less exposed to the conflict. Now, on valuations for NBFCs, the sector is just above the recent lows, and like banks, the re-rating needs a resolution to happen first. And finally, the second-order impact from job losses that could also have a wider impact across both banks and NBFCs.
All right, we take that point. Ritu, thanks a lot for that. Let's get in Gaurav as well. He'll give us a comparison of how stocks of private banks have performed versus PSU banks. Also a lowdown on some of the key performance internals of the same. Gaurav.
Well, as for the last few days, we are seeing some pressure building in the financial sector. But specifically, if you look at PSU versus private sector banks, the picture says otherwise. Because for 1 year time frame, if you look at the performance of Nifty banks, it has performed almost by 14.5%. While if you look at Nifty PSU, that index has gone up almost by 50%. If you look at some of the constituents, look at SBI, PNB, Bank of Baroda, Canara Bank, all of these banks are up more than 30% just in a year's time frame. Now, it is not only outperforming Nifty banks, but at the same time the broader market. On the other hand, if you look at some of the top private sector banks like HDFC, ICICI, Kotak Bank, all of these banks have actually delivered single-digit return. In fact, Kotak has delivered negative 5% return. And Axis Bank, although it is up 22%, remember it was only last year when we saw Axis was an underperformer. So that is also something that we should consider. Now, what are the factors? If you look at valuations as well, for Nifty Bank Index, the valuations are trading below its 5-year average. But if you look at Nifty PSU Bank specifically, the valuations are above its 5-year average. And the reason being that experts believe there is a structural change for PSU banks. Now, this is coming up because of the technological changes that the bank is adopting, and at the same time, market share is also something that the PSU banks are gaining from private sector banks, specifically in the likes of retail and auto loans, where profit margins are higher. As a result, if you look at EPS growth, for the last 4 quarters, if you take 4 big banks and consider its EPS, the growth has been in single digit. But if you look at the PSU banks, the growth for most of the PSU banks, the growth has been in double digit. In fact, they are also sustaining this growth. Second, if you look at the ROAs, for private sector banks, they have been defending their ROAs, but at the same time, we have got banks like ICICI Bank and Kotak Mahindra Bank where we saw ROAs actually declining. At the same time, if you look at PSUs, there was a scenario where PSUs were considered, if they are getting 1% ROA, it was considered to be a good case scenario. But in these days, it is going to be a normal case scenario for PSU banks. In fact, all the PSU banks are talking about how they will sustain above 1% ROA mark even going ahead. Third is, if you look at the FDI data. Now, there is a selling pressure, and when we look at FDI sell-off, financials are always at the forefront. And that is the reason why we saw private sector banks are also being affected. But at the same time, is FDI going to come back? Now, if you look at Nifty's valuation, definitely it is at 19.5%, so it is below its trend. But at the same time, experts believe that there are other markets outside India who are going to grow at a faster rate, and that is something which is a concern for FDI, and that is the reason why even if at this valuation we cannot say that with definite conclusion that the FDI data will come back, and that is the reason why if you look at private sector banks, they are suffering, but at the same time, PSU banks are gaining in trade.
Indeed, it's been a stark outperformance over the last 12 months of nearly 45% of PSU banks over private sector banks. You know, on this topic about private sector banks' underperformance, we also had a chat with Enam Holdings' Sridhar Shivaram earlier. And he explained that the reason why private banks have been underperforming and not seeing a lot of buying is because their profit pool has been shrinking because PSU banks have become so much more aggressive when it comes to retail lending. Let's hear him out and then we'll get Deven's views on the topic.
Large part of the selling in the private banks is coming from FIIs, and when I speak to my friends in New York or in Hong Kong who run large FII funds, the point they're making is that exactly this, that why would I want to invest in a private bank which is giving me a 10% profit growth with a 2.5 price to book? I'm getting similar growth banks in XYZ region at half the multiple. So that is the question here, that if you're going to grow at 10%, is a 2.5% price to book multiple justified? I'm not here to justify any of this. I have a view, but keep in mind that they still make reasonable ROAs despite all this. So your lower growth is because you're trying to protect your ROA.
Deven, the point that Sridhar was trying to make is that PSU banks have become very aggressive on the retail space, which was earlier the bastion for private banks. So now you have PSU banks advertising for home loans at 7.25, vehicle loans at 7.75, 8%. And plus, their profitability expectations are lower, which means that they're willing to offer very aggressive lending rates. So in a way, they're eating into the margins of private sector banks. So the private sector banks earlier would give you a 20% kind of a profit growth. Now they're giving you only 10% profit growth. So the question is that, PSU banks versus private sector banks. Now, although the profit pool of private sector banks has come down, they've also underperformed PSU banks, and PSU banks have gotten re-rated. Now, between the two, I'm just curious, what do you like right now and why?
Yeah, Rima, good afternoon. Well, I think on one side you have the valuation arbitrage, which is clearly working in favor of the PSU banks under a variety of reasons. Some of them you've already mentioned about them. At the same time, I think having the larger amount of bond portfolio, GSEC portfolio, I think the credit in the books in the falling interest rate regime is significant in every subsequent quarter. And that's where probably I think your profit at the bottom line level start showing up because of even the mark-to-market credits that you get on that particular portfolio. That's the second point. The other point is some of the larger public sector banks are, including SBI, they are basically tying up with some of the larger players, like I think Mitsubishi for the project financing. Now, given that kind of growth on the larger book size of almost 40 lakh crores, you're growing probably at far more healthier rate. Even if you grow at around 10 to 15%, you're talking about 4,000 to 6,000 crore worth of growth in the AUM itself, which is far more than I think some of the smaller banks that we are talking about. So in my viewpoint, 4 to 6 lakhs, I beg your pardon, I think. So there is far more bigger than some of the pool of banks, I think, combined together. So that is where probably this theory is working. Larger part of the money allocation is taking place in the stocks where the valuation comfort is arising. At the same time, the growth in the book size is giving comfort to the new investors to buy into the stocks. So that's where probably I believe that I think the likes of SBI, BOB, they remain relatively more favored at this point of time compared to other peers in the private sector.
All right, so that's about the banking space. But, one sector that has been firing up since morning is the power space, Deven. So what we'll do is we'll ask Vivek what's keeping them abuzz today and then get your views on that as well. Because after a subdued summer last year and winter, focus is now shifted to FY27 where the trends are slightly better. Vivek.
Well, absolutely right. FY26, subdued summer, unseasonal rainfall, a strong winter, and when we're coming to FY27, heat waves across certain regions of the country, strong summers expected, El Nino effect too may last is what some of the expert agencies have mentioned, and along with that, certain worries, especially in terms of lower gases across power utilities, is something that's also being flagged off. In fact, Morgan Stanley also says that hydropower generation may be curtailed this year around on the back of certain worries as far as some of NHPC's projects are concerned. Now, Morgan Stanley today has come out with a note. What they're saying is that thermal coal-based power generation could now take incremental load, which is positive as far as companies with thermal exposure is concerned, especially those companies that actually have some merchant capacity. So what they're also saying is that the move will support a smoother ramp-up as far as thermal coal power is concerned. Persistent Middle East tensions would lead to tighter gas supply to India. This is another risk that Morgan Stanley has flagged off. In terms of individual stocks, Adani Power, JSW Energy, they believe could benefit from stronger merchant earnings. They're saying that a Mundra settlement or Section 11 of Electricity Act imposition could benefit Tata Power. They say that Torrent Power could benefit in case merchant gas sale profits come across where physical cargo access is allowed. And lastly, they believe NTPC could see a price-to-book multiple re-rating in case the peak deficit conditions sustain. So overall, a positive note. And today, the entire pack, large cap, mid caps, thermal, even non-thermal companies are doing quite well in the session today.
All right. So perfect way to segue this to Devin. Power is one of those spaces which is entirely Indian. No real exposure to any of the international geopolitical uncertainties that we're facing. Maybe it's something that may be looked at as a safe haven. And add to all of this, you have the domestic demand situation, which is a lot better. Do you think that makes a case?
Yeah, Mangalam. I think there are two points to be added into what Vivek has said. Coal Ministry has recently confirmed that they have got about 90 days of coal stocks already in place. So that is basically giving a good amount of thrust to the thermal power segment as far as the raw material supply surety is concerned. At the same time, I think when the gas-based power plants, they struggle to get the gas because of the current situation, I think the grid would probably start consuming more amount of coal-based power. And that too at a higher energy cost, which could be possibly benefiting these companies to a greater extent. More importantly, the government is simultaneously working on policy reforms. And the Shanti Act, I think, which is for small nuclear power plants, and also round-the-clock renewable power energy. I think are some of the reforms process along with the kind of incentive that will be given to the companies. In my viewpoint, I think this is where probably the larger amount of tailwind has come up for some of the companies, including likes of Tata Power. In my viewpoint, I think if you consider 3 to 5 years from now, the scenario appears, extremely promising for some of the generation companies. And that's where probably some amount of book building has started taking place by the funds, buying the power generating companies generation companies at this point of time.
Autos have been the hardest hit today. The Nifty Auto Index is down 2.5% for the day. Since the start of the week, it's down nearly 7%. And Nomura has analyzed the energy usage in the manufacturing processes of various auto companies and auto ancillary companies. And they're saying that gas demands a meaningful share. And the problem is that even if one supplier, one vendor to the automotive company faces an LNG supply constraint, then the production will halt. So the ones which are vulnerable are the ones which are already operating at high capacity utilizations and they have limited vehicle inventory. So therefore, if there, on account of gas shortage, any vendor decides to slow down production, then these companies could see a production loss. So according to Nomura, the companies which are vulnerable for a production cut, they're not saying it's happening, but vulnerable, this is Nomura, is Maruti Suzuki, M&M, Ashok Leyland, Tata Motors, CV and Eicher Motors. And some of the auto ancillaries are also up for you on your screen, Balkrishna, Apollo Tyres and Uno Minda. You want to comment on this, the kind of sell-off that we've seen, and any stock now looks attractive?
Well, to me, I think this could be a small buy opportunity as I see it, largely because of the fact that on one side, the government is promising to ensure that the larger amount of the tankers come out of Strait of Hormuz and probably reach India. So if that particular situation is taken care of, then the kind of threat that we are talking about as far as the supply side of the fuel is concerned, quite possibly, I think that threat could possibly not materialize at all. And that's where the kind of opportunity lies. In some of these companies, which are fundamentally strong companies, otherwise, if the gas-related situation or the collateral damage do not take place, then in such situation, I think the fall in the current market price of the stocks could be a buy opportunity. Though not for too long, but I think one would probably, I think, gradually accumulate some of the companies which have now started coming down 10 to 20% discount price to what probably I think at one point of time they were putting at higher levels.
Right, Devin, thanks a lot for that. The recovery has been sold into in the market, and that's clearly the problem. Every time there's a recovery from the lows, it is seeing a sell-off at higher levels. The market's seeing, once again, the Nifty Bank is on the verge of breaking that 55,000 mark. The Nifty is now fairly below that 23,720, 23,725, where we were when we started the show. So it's a big gash, and that has been led by the Nifty Bank, which is now again on the verge of breaking that 55,000 mark, down about 700 points. We take a short break, come back. Amit Gupta of Motilal Oswal Private Wealth joins in as the Alpha Manager. Welcome back. The Nifty down 240 points once again. The Nifty Bank is down 700 points. We are seeing a sell-off, and that's actually, showing up in the India VIX as well. When we pointed out that the India VIX is moderated now from the lows, we've seen a bit of a spike in that as well. And it's not just the Nifty Bank. A couple of these, non-Nifty Bank index heavies are also losing steam. So L&T is at the low point of trade. Hero MotoCorp is at the low point of trade. We have Bajaj Finance, which was the top loser in yesterday's trading session, continues to see some selling, currently at the low point, along with something like a Maruti Suzuki, which is about 3.5% lower. Amit Gupta, head equities of Motilal Oswal Private Wealth, joins us on the show. Amit, are you finding any opportunities in the current volatility? And what's your asset allocation strategy right now? Are you sitting on more cash, raising cash levels? Are you deploying? How is it working?
So I think sitting in cash is very much required because there were very few hiding places in the market. Like banking was one of the hiding places, no doubt about this, and it was performing well. But then we saw the crude prices started moving up. If crude prices are going higher, eventually the bond yields can also spike. And as a result, the treasury profits can get a hit actually for banks. That's a very simple maths. And I think that is the reason the banks now in the last 2-3 sessions, they have also come under pressure. And that is the reason we feel that sitting in cash of 15-20% makes sense in the current scenario. Along with this, I think going forward, once we have seen gold, silver, those kind of commodities performing, I think the base metals can also reverse. And metal and mining is one theme that we are looking at, actually, even going forward, at least till the situation is not getting stabilized.
So to build a 15-20% kind of cash position, Amit, what have you sold from your portfolio?
So you will have to look at some positions which are in profits, even some positions, which may be coming into possibly losses because there is a sudden surge of crude and the raw material prices can go higher. So we have to consider all these aspects and then start closing some of the positions. Some harsh steps needs to be taken. Otherwise, the losses can be more deeper losses. So this is where if you look at our portfolios, almost in our advisory desk, 95% of our schemes are either in line with the benchmark or outperforming the benchmark because of this reason.
And you're willing to sell even at these levels because you fear lower levels are going to be coming?
So, definitely, if the crude prices, start sustaining above $100, or if it breaches 120, then I think the proposition will be little tilted. So those stocks, which were looking much better, their actually profit growth in the coming quarters may start looking lower. So I think in that case, the stocks can decline. So yes, those kind of harsh decisions in these kind of situation needs to be taken, or you shift your money into some other areas where you feel that it will be lesser impacted. So for example, take the case of pharma as a pack. We feel that pharma may be the beneficiary of the IT money moving in because when IT was impacted because of artificial intelligence, we saw the money was moving into financial services. Now financial services, when the crude oil prices are going higher, they are also impacted. And that is the reason we feel that the money can move to some extent into pharma space also. I understand some API prices can go up, but eventually when we have a good terms now with US, that scenario of anything could be announced on pharma may not be there. So the companies which are moving into high value complex products, the companies which are moving into biosimilars, because in the budget also government has spoken about that. All the complex diseases like cancer and all, where the drugs prices are costly, government wants to bring the biosimilar thing so that the drugs can be available at a better price. So the companies which are moving into that, I think they can be benefited.
All right. And what about manufacturing? Do you see any further opportunities here?
So off late, if you see, the auto numbers were definitely coming good. The post GST 2.0, we saw the buying also. If you look at the month of February, we saw more than 20% of growth across the segments, whether it is passenger vehicles, whether it is two-wheelers, whether it is tractors, it was seen. In fact, two-wheeler was one of the laggard space. If you compare with the pre-pandemic financial year 19, 2.1 crore of sales, actually it did not happen that it crossed that number in a in a year. Now, if you see, this number is somewhere close to 1.95 crores as of the ending of February, and it looks like it can cross the pre-pandemic numbers. Now, this particular situation which has come up now, so it can delay this process, but I think the two-wheeler is on the cards to cross the pre-pandemic numbers now, because that kind of growth is coming in.
Right. And what about some of the consumer discretionary names? And I speak about something like an Eternal or Swiggy, where there's been a serious destruction from the top in wealth. And even if you look at some of these new age platform companies, Urban Company at one point was trading just below the IPO price. Not sure if it's still below those levels. No, but the last few trading sessions, in fact, in the last 3 days or so, it's outperformed. It's up around 7.5%, but it's actually fallen over 40% from the top.
So I think the market is not giving value to high valued stocks, and these companies were trading at thin profits. Some of them were deeply in losses. They need a stable market to perform, because when you compare with those companies which are sitting in good profits and they are also getting impacted because of higher crude prices or gas prices, I think the market may not give value in the near term actually to these companies. So that kind of consolidation which we are seeing, it can continue. And we have to look at the areas where the next phase of growth, earnings growth can come, and which are attractively valued. For example, if you look at metals and mining as a case, so when we are looking 2025, and look at the electricity demand, it was hardly 1.5%. But if you look at now, this year, it may go to 5% also, because the summer is intense, there is more heat waves, the impact of the war also on the atmosphere can be seen, and then the monsoon can be weaker. So in that case, I think the AC sales can pick up, electricity demand can pick up. So the coal as a alternative, I think from the mining perspective, is going to pick up. If you look at Rotterdam, which is the benchmark in Europe, Rotterdam coal futures, they are already breaking out. If you see Australian benchmark or South African benchmark, they are also breaking out. So last 1 year was mostly range bound, $95 to $115 for coal. But we have seen that there is almost 15-16% spike coming from there. So Coal India, for example, last 2 years, the EPS decline of 21% was seen. We feel now 8-9% of EPS CAGR growth may be there going forward. So these companies which are beneficiary of power demand coming up, and then the alternatives to the gas, when the prices are higher, I think they will be the direct beneficiary now, where you can move some of the money.
Thank you very much for that. By the way, Stuffcraft stock has now moved swiftly to the day's low. It's 6.5% down on that. From the day's high, it's fallen 20%. Yesterday, it was one of the big movers, the Induction gas beneficiaries. TTK Prestige is still holding on to all its gains. Butterfly Gandhimati is up just a smidge, 1.5%. But look at Stuffcraft, sharp decline seen in the stock price. But let's find out what's happening in dealing rooms, because markets once again are pushing towards the day's low. It's 23,625 on the Nifty. It's D Street Chatter time. Nimesh is at NSE today. Nimesh?
Hi, Rimaira. So again a day when any intraday pullback got sold into, and that's largely because my sense is there is still FIS selling even in today's market. We saw a big number yesterday, and that's been the trend for the last few days, and that looks like a trend today as well. Yes, there is a bit of buying in by some domestic funds, but largely from an FI perspective, it's still a sell number, and largely the selling is happening in the banking stocks as well as the auto names. So the two big draggers yesterday, banks and autos, they've been dragging today as well. The bank, even the auto index again today is down 2%, and that's the case with bank index as well. The only space which has done well today is the power space, and again there's an interesting feedback. I happened to meet a private equity investor, and the feedback is there was a conference last week in Bombay, and a lot of the global sovereign funds were participating in it, and the feedback is that maybe because of this Middle East crisis, India will also focus more on domestic production, and hence you will see a lot of uptake in the power demand, and overall ecosystem should do well. So that's the reason why maybe there is a bit of interest back in the power space. So across the power vertical, everything is done well today in today's market. So that explains the move in the power stocks today. As I said, flows are still very negative, and again, you might see a decent sell number as far as the FI flows are concerned.
Right, and a lot of individual stocks, Nimesh, they're moving around. What are those tidbits that you've picked up today?
Well, so the first on my list is Midwest. Again, that's been buzzing in the last couple of days. Yesterday the stock was up in a weak market, up 6%. Today seems to be a bit weak, but there seems to be some corporate development happening in Midwest. And in fact, from a flow perspective, I understand there are buy flows at HNI desk in Midwest. So that's the first stock in my list. The second name is Radico Khaitan. We saw a big up move in the last couple of days post that Karnataka clarity, but my sense is there are multiple buyers, especially domestic mutual funds, who are looking to buy into Radico at current levels. So that's the second name. The third name is Healthcare Global. It's been weak of late, actually has fallen sharply from the recent highs. But again, at these levels, my sense is that could be a large block deal in Healthcare Global very soon. Most likely, one of the leading domestic mutual fund could be the potential seller in that block. So that's the buzz there. And the last one is Jubilant Pharmova. Again, this is one name which is corrected sharply from a recent high of 1100 back to 800 levels, largely because there was selling pressure from larger FIs. One global fund was an active seller in Healthcare Global. Looks like that selling is largely coming to an end. And at these levels, one domestic PMS is an active buyer as well. So that's the buzz as far as Jubilant Pharma is concerned. Selling pressure seems to be largely over from that global FI.
Thank you very much for that interesting anecdotes as always. The rupee has also hit a fresh low today, hitting 92.35 against the dollar versus an overnight rate of 92.05. Lata joins in to tell us what the story is over here. Lata.
Rupee is down in sync with most Asian currencies, give or take a bit. That's largely because all of them are affected by the same thing. The dollar is stronger, much more important. Crude has again gone through the roof, almost touching $100 at various points in time over the last 24 hours. So that is negative for Asia generally. The story in the market quite clearly is that even at 92.30, 92.33 levels, it is the Reserve Bank that is holding the currency over there. Left to itself, the currency will, the Indian rupee will perhaps be more like 93.5 or something to buy, 92.5 or something to buy a dollar. In fact, the Reserve Bank is present in all markets, all the fixed income markets. It's present in the spot rupee. It's present in the forward rupee in a way because it intervenes in the NDF market, which is a non-deliverable forward market. As well, it has been doing a lot of OMOs and the government has done switches, which is intervening in the yield market, the bond market. So the prices are not what they would have been but for the RBI intervention. But that's what we have. Rupee at fresh lows and pressure to see it go lower.
Thank you very much for that, Lata. Nifty at 23,650, still off about 100 points from the day's low, but at about 130, 140. The Nifty had gone to levels of 23,833. So from that level, from the intraday high, in a span of 1.5 hours, the Nifty has sold off nearly 200 points. And that screen will tell you that. It's also the Sensex weekly expiry. And at 4 o'clock, we'll get the February CPI inflation print. Get into a break on the other side. We'll get you a few BTSC calls from our experts. Stay tuned.
अरे टेंशन किस बात की? सेंचुरी प्रोबूट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
प्रीमियम प्लस बाय सेंचुरी प्रोबूट।
स्टॉक्स में एक्सपर्ट हूं, पर कोटक नियो 300 स्टॉक्स में।
Stay Tez with Kotak Neo and get access to daily trading ideas. Investments in securities markets are subject to market risks. Read all related documents carefully before investing. अगर हर जगह फुल फ्लेक्सिबिलिटी चाहिए तो इन्वेस्टमेंट्स में क्यों नहीं? अब अपने इन्वेस्टमेंट्स को दो फुल फ्लेक्सिबिलिटी का एडवांटेज विद फ्लेक्सी कैप फंड। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
मेरा रुतबा है मेरा सिग्नेचर, दुनिया की सोच से ऊपर बेबाक है मेरा सिग्नेचर। सिग्नेचर फाइनेस्ट सिल्वर इलायची, अ प्रीमियम प्रोडक्ट फ्रॉम दिलबाग ग्रुप।
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
$200 points lower for the Nifty. Perfect time to get you an update from the F&O space as well as we move towards Sensex weekly expiry, and that's where things are getting a little more volatile. And if you look at the market, the Nifty is volatile, led lower by the Nifty Bank, which is down about 600 points. The important point is that you do have a bunch of these non-Nifty bank, non-major index heavies, which have dragged the index lower. The mid-cap index, which at one point was in the green just 20-30 minutes ago, is now back in the red by about 0.25% on that index. So the best thing to do would be then to look at the range today, and that would tell you the story of the day. The Nifty low is 23,556, an important level. On the way up, we have the Nifty high of 23,833. So it's within this band that the market has been playing around today, closer to 280 points. So that's something that the street is eyeing, and we are right in the middle of that. And it's around that 23,600 mark where the option writers are placing their bets as well. So 23,600 put and the 23,600 call, both of them come for you. 23,600 put has a premium of 200 rupees, telling you 23,400 would be an important support to track from here on. And on the way up, we have the 23,600 call as well, which has a premium of roughly 300 rupees. 23,900 seems like the resistance. So the range of the market, which was earlier placed between 23,700 to 24,200, 24,300, has now come down to about 23,400, 23,500 to about 23,900 to 24,000 itself. So that's the range shifting lower. Amidst all of this, a couple of stocks which stand out in terms of short positions being added are both Amber and Varun Beverages. Why is this perplexing? Because one, the street is bidding up all these AC makers because of a hot summer, and as a result of which we have shares of, say, Voltas, Blue Star, all of them being bid up. But Amber is an AC manufacturer that's actually down by about 5%, and fresh shorts being added. And Varun Beverages is the other one as well. Now, one would imagine that a hot summer would do well for some of these beverage makers, particularly Varun Beverages for their carbonated soft drinks business in India. But that stock too is down about 5%. So let's see whether with hot summer there would be competition that would heat up as well. So those stocks are lower, but by and large, the market range seems to have moved lower. Good time to get in Mitesh Thakkar for the tomorrow trade as well. Mitesh, would you agree that the range of the market has now moved lower, and what would your tomorrow trade be?
I think it's just that we made a fresh low, so I think very clearly the directional bias is in the downside, but Mangalam, the only worry is that, again, which I had a similar kind of concern on Monday, is that we are too far away from the short-term averages, too oversold on the indicators, and therefore I think liable for a pullback any year, which means. But I agree, I think, till we get past 24, 800, 850 zones, 23, 850 zones, I think, you might see all these pullbacks being sold into. And the bigger reversal will come only beyond 24, 300, 400 zone. So I think, a pullback can still happen to those levels, but it is still a market which is negatively biased. On the stock side, the power grid, and I think Nimesh was talking about power stocks. Power grid is something which is very strong on short-term as well as medium-term charts. So BTST here with a stop at 300 for targets to 309. And Ultratech Cement is closing near the day's low, very negative candlestick pattern. So sell or STVT with a stop at 11,125 for targets of 11,040.
All right, take that point. Let's speak about the consumer price inflation. The February CPI data, as per the new series, will be out today at 4 p.m. A CNBC TV 18 poll sees the CPI in February at 3.1%. What else should one watch out for? Lata joins in with the details. Lata.
Well, first up, I'll just tell you the results of the poll. The CPI number, as you said, expected to come in at 3.1. It was 2.75 in January. See, we don't have year-on-year comparisons because this is a new series. So month on month, as you can see, there'll be a slight uptick, more because of the base effect. Food inflation will be slightly higher. Again, this is more a base effect related thing, 3% versus 2.1, and core CPI, which is non-food, non-fuel, at 3.4%. Much like we saw in Jan. The point is, this is not what the market is waiting for with any nail-biting anxiety. Because when did the war start? The war started on February 28. So none of those increases in prices is going to get reflected. What will get reflected in March will be the higher gas cylinder prices. That is the only consumer element that went up immediately. So what we will wait for will be the March CPI number. But this time, the WPI number will become important. Again, for March, not for February. Because over there, even ATF prices will reflect immediately. A lot of the propane higher prices or polymer higher prices, all these are WPI, wholesale prices. The consumer doesn't pay them. So what will be interesting really will be the March inflation data, which we will know only next month. And even over there, the wholesale price will be more important than the retail for a change.
All right, Lata, thanks a lot for that. The wholesale price will be a lot more than retail this time around for a change. But the Petroleum Ministry Joint Secretary has said that India has already diversified its energy sources and has also managed to secure additional LNG supply. That should be good news and should come as a bit of a relief. Let's hear him out.
The OMCs have secured various crude cargoes from different sources. And as a result of this diversification, about 70% of our crude import is now coming from routes outside the Strait of Hormuz, compared with about 55% earlier. आज जब मैं आपसे बात कर रही हूँ, तब भी लगभग 2 कार्गोस भारत की तरफ चल पड़े हैं, and within few days they will arrive, which will further strengthen the crude supply position in the country. आज हमारी refineries are operating at the highest capacity utilization. Gas companies have procured LNG cargoes from their new sources, and 2 LNG cargoes are on their way to the country.
All right, and we also had an exclusive conversation this morning with the Steel Secretary, Sandeep Pondrik, and he said on the impact of war fuel energy crisis that domestic steel manufacturers still have, the large ones, have 20-25 days of gas available to them.
Now, most of the steel industry, especially the ISPs, use propane for different units. And the scarcity of propane may affect their operations. The second is natural gas. Many industries use natural gas. Third is LPG, especially for small steel producers, because many of them use LPG for industrial use. Companies and steel sector is trying to find solutions or alternatives. As far as propane is concerned, there are not many alternatives, so they are trying to use it optimally to the extent possible. Most of the steel plants have supplies. So if I talk about SAIL, they have about 20-25 days of supplies of propane with them. Similarly for limestone, they have supplies. So it's not as if the production is being cut today. But if the problem continues, then raw material supply or gas and propane supply may become a problem.
All right, so that's some exclusive commentary coming in from the Steel Secretary. Good time to also welcome Mayuresh Joshi, the Director Research, MarketSmith India, on the show. Mayuresh, the trade of the last 2 days has been that of those who make cookers and stove tops, induction stove tops. Obviously, so if you're looking at the leader there, which is TTK Prestige or something like a Butterfly Gandhimati as well, both those stocks have rallied anywhere between 10 to 20% in the last 2 days, though Stovecroft has come down from today's high. Importantly, just look at a couple of these other stocks as well before we go across to Mayuresh. CEAT has seen a big surge, up around 7%. A lot of these tire makers are actually surging. So Balkrishna Industries is the other one, which has moved higher by about 4.5–5% as well. And then you have something like a Saregama, which too, from its lows, has seen a big jump. The stock actually has corrected about 40% from the top, and now at lower levels seeing some buying. We'll try and patch that connection with Mayuresh once again. Mayuresh, so we were talking about something like a TTK Prestige. Do you have a view on that? And in the last 3-4 days, did you buy any microwave or induction stovetop for your house?
No. So apparently, Mangalam, afternoon to you as well. In fact, I was searching. I had met a couple of investor friends, and they were showing me in their cart that they have ordered for induction cookers or induction systems, and the delivery time is 2 or 3 days. And apparently, I think a lot of stores are falling short because of the increase in demand, which has probably come through. Now, it's a lot of ifs and buts in this, Mangalam. If the de-escalation probably happens over the next few weeks, I think all the issues and the associated elements related with gas supply largely should not be of a huge botherance for the industry as a whole, and therefore I think a lot of players with the spaces as well. Yes, I think the current sentiments and looking at the inventory levels when it probably comes to induction. In fact, you're also showing me solar bulbs to that extent. So I think that demand is probably going through the roof as we speak. But whether it's short-lived or a long-term phenomena, I think it's only time to decide. I don't think it's a long-term phenomenon. I think at some point of time over the next few weeks, you will have some element of a resolution expected to come through, because the cost of this war is just not feasible and tenable for all parties involved. So let's hope for the best. But yes, I think sentimental moves because of all this seen in TTK Prestige. Surprising that Stovecroft has not reacted.
Since you spoke about the cost of the war, I mean, have you guys done any initial analysis on how much of the EPS cuts could take place, not so much in the fourth quarter because the war started only towards, the start of this month, but maybe the first quarter of next financial year? This morning we had Sridhar, who joined in and said that, it could shave off about 3 to 4 percentage points of growth from our EPS estimates next year.
Mangalam, I think if you probably look at the universe from an index perspective, I think the expectation largely is that if this continues, and it's a top-down analysis that we are trying to make, I think we'll come out with a report over the next few days, in the next 2 days, in fact, to be more precise, is that if crude stays at the level which is at this current juncture, obviously the hit in terms of inflation with a not complete pass-through, the hit on the current account deficit and the GDP is going to be around 0.5–0.6%. And to that extent, I think if it trickles down in terms of the index constituents, I think the expectations in terms of banks, and I was hearing the Sridhar interview, it is absolutely right. I think the profit pool is probably shrinking as we speak, specifically for the larger banks. We've obviously seen some element of increase happening in terms of the GRMs and then the spreads as far as the petrochemical companies are concerned to that extent. Pharma probably looks a little bit shielded, but I think with the inflationary pressures expected to be absorbed top down, and a large part of that might get absorbed by the industry itself. I think the initial analysis is showing that overall for the market, including some sensitive sectors where the sensitivity of the propensity of the earnings is actually it can be anywhere to the extent of 2 to 2.5%.
Mayuresh, we will slip into a very short break, but we'll come back and get closing comments from you.
मेरा रुतबा है मेरा सिग्नेचर, मेरा जज्बा है मेरा सिग्नेचर, बेबाक है मेरा सिग्नेचर। सिग्नेचर फाइनेस्ट सिल्वर इलायची, a premium product from Dalmia Group.
योर एग्जिट का टाइमिंग परफेक्ट होना चाहिए, इसलिए कोटक नियो का स्ट्रैटेजी बॉट।
Stay tez with Kotak Neo and automate your trades with Strategy Bot. Investments in securities markets are subject to market risks. Read all related documents carefully before investing. अगर शूज में फुल फ्लेक्सिबिलिटी चाहिए तो इन्वेस्टमेंट्स में क्यों नहीं, अब अपने इन्वेस्टमेंट्स को दो फुल फ्लेक्सिबिलिटी का एडवांटेज विद फ्लेक्सी कैप फंड्स। म्यूचुअल फंड निवेश बाजार जोखिमों के अधीन है। योजना संबंधी सभी दस्तावेज सावधानी पूर्वक पढ़ें।
अरे टेंशन किस बात की? सेंचुरी प्रोबोट का प्रीमियम प्लस है ना, लो एमिशन है, हाई डेंसिटी है, वाटर रेजिस्टेंट भी, टर्माइट एंड बोरो रेजिस्टेंट भी है। यानी ये है जहां नो टेंशन वहां।
Premium Plus by Century Prowood.
One segment in the market which is on fire are all the power and renewable names. So NTPC Green Energy 12-13% up, Adani Total Gas 7.5%. You have a JSW Energy, a Tata Power, Adani Power, Coal India, BCCL. That entire complex is doing very well. What's driving this interest in the power renewable space, and which one is best placed, Mayuresh?
Dr. Rimano, I think the expectation largely is that power demand should probably go significantly higher over the next few weeks as peak summer probably approaches. And therefore, I think the peak demand in terms of energy consumed anywhere around 250 or 265 gigawatts. Considering all this and the expectation in terms of how a large part of the company pools are placed, obviously Coal India has reacted very, very positively, because what you're probably seeing in terms of landed coal prices and the expectations in terms of parity of those prices compared to where global prices are standing, and expectation of the auction prices actually moving higher, along with the strong dividend yield that it probably offers, is something to be probably looked at. Even NTPC, I think both the thermal targets and the RE targets that it has got is expected to add 6.5 gigawatts of thermal capacity over the next few years. In terms of RE capacities, the 20 gigawatt RE capacity addition is expected over the next 3 years, has a target internally of 60 gigawatts. Receivable days from discoms have come down to 28 days. CapEx stands at 56,000 crores. The regulated ROEs and the regulated CapEx also stands at a reasonable level as far as the balance sheet is concerned, as well as the dividend yield for NTPC at 2.26%. So in my opinion, again, I think the drivers and the tailwinds are that demand will probably go substantially higher. Prices probably will remain elevated as we speak, and input costs should remain relatively stable over the next few weeks. Valuations a tad bit fair as we speak, but anybody holding can continue.
Okay, just winding down to close. It's a 1% loss for the Nifty, declining for the second day in a row. For the Sensex, it's a 2,100 point sell-off in a span of 2 trading sessions. Yesterday, down more than 1,300 points in the Sensex. Today, down 800 points. Even the Nifty closing above 23,600, but a steep 200-plus point decline on the Nifty. The problem today were the auto names. M&M, Eicher Motors, Maruti Suzuki were the top 3 losers. Declines of about 4%. The street worrying that whether the gas shortage will impact some of these auto ancillary names, and they will have to take production cuts. Other losers include Bajaj Finance, and L&T, Ultratech Cement, Trent, private sector banks, large ones like Kotak Mahindra Bank, ICICI Bank, Axis Bank under pressure. Very few places to hide, but the theme of the day was power, especially renewable power. So whether it's an NTPC on the frontline pack, a power grid, mid-cap names like an NTPC Green Energy, KPI Green, Adani Total Gas, Tata Power, JSW Energy, NLC India. These were the stocks where you saw a lot of buying. On the way down, you also had weakness coming through in many consumption names. So Varun Beverages went on to hit fresh lows. Colgate, Jubilant Foodworks, Lemon Tree. These are all mid-cap names which hit fresh 52-week levels. What's disappointing in today's trade-in section was that the Nifty attempted a pullback. From the low of 23,550, it went to hit levels of 23,833, but the bears were waiting at higher levels, ultimately closing down about 1 percentage point. We'll take your leave and closing bell. We thank you for watching the show, but don't go anywhere. On the other side is Markets Forward.
Markets failed to hold on to the intraday recovery and lower for the second straight session. The Nifty slips below 23,650 mark, dragged down by the heavyweight banking as well as auto.
Crude oil prices continue to rise, with Brent hovering around the $100 mark. The record release of crude oil reserves by the International Energy Agency and the US does little to stem the rising prices.
And power stocks rally as expectations of a hotter than usual summer pushes up electricity demand forecast. A note from Morgan Stanley says thermal coal-based power generation could take incremental load as demand surges, boosting sentiment across power sector. Hello and welcome to Markets Forward, your go-to show where we aim to get you all the key data points to gear up for the next trading session. I'm Vinny Motiwala. With me is my colleague Vivek Iyer. And Vivek, it's been a day where we saw a bit of a recovery and then again we came off. We closed just around 23,650, actually slightly below that level. Right. So important to watch out for whether, any more developments come on from West Asia front as well again. That will be key to watch out for. Broader end of the market though, that recovery was also quite strong in the trading session and they're not much off from the day's highest point like we see coming in for the benchmark indices. But an interesting day at one point of time, Nifty IT did touch that green point and then came back down again. Vivek.
That's right. Vinny, the other thing is a couple of sectors, that continue to bear the brunt of selling pressure. One of them is the auto pack. Today, a note from Nomura indicating how a shortage of gas could affect supply chains across the entire auto ancillary pack. Along with that, today, for a change, you did see some positive flows, especially as far as the power space was concerned, a hotter than expected summer and rising dependence as far as thermal power is something that played out in the session today. But we have a lot lined up on the show. First up, we'll track all the big news and the key developments on Dalal Street, the top corporate voices and events to track ahead as well. But let's kick off the day's market action. And first on the show, we'll go through the lineup of what we have for you today. We'll start with the top movers and shakers of the day with Sudarshan. Power stocks and kitchen appliance makers saw a sharp rally today, while private banks remained under pressure. What's driving this sectoral churn in the market? We decode the triggers behind the moves. And last but not the least, we'll delve into the key market events to watch out for in tomorrow's trading session. But first up, over to Sudarshan, who's joining us from the big wall with all the top movers and shakers of the day.
So it was a volatile day of trade. We opened with a cut of almost 300 points for Nifty, but by the afternoon we had recovered almost all the losses. But at the end, again, we closed with the cuts of almost 200 points. Talking about the stocks, one sector that has been under pressure for the last few sessions, that's the auto segment. Majority of the names have fallen today as well because of the concerns related to gas supply. And it's very difficult for all the companies to shift to another energy source in very near term. And that's the reason you can see all the stocks, M&M, Maruti, Eicher, TVS, Hiromoto, all the stocks were down somewhere in the range of 3 to 5%. Other mid-cap losers, Piramal Pharma has fallen with big volumes. Today also, this stock was down more than 6%. Amma Enterprises too was under pressure. IndusInd Bank has seen a big fall, down more than 5%. Colgate for second straight day was under pressure. Yesterday was down 6%. Today also it has fallen 4%. And all the consumer names were under pressure as well. And amongst top losers was Varun Beverages, has fallen almost 5%. But one segment that has been seeing buying is the power segment on the back of increased demand. JSW Energy up more than 6%, Torrent Power, Tata Power up more than 4% each, and even Adani Power closed with a gain of more than 7%. And some of the stocks have reacted to news flow. Jagsonpal Pharma board has approved share buyback at a price of rupees 250 per share. On the back of that, stock has moved 6% higher. Gopal Snacks has said that gas supply shortage issue is not going to impact because company has moved to another energy source or another fuel source. That's the reason this stock too at one point was up almost 6 to 7% but closed near flatline. Aarti Industry has bagged an order. Because of this, that stock moved 4% higher.
Well, thank you so much, Sudarshan, for joining us, giving us a quick gist of all of the top movers and shakers of the session today. But one particular sector you alluded to and that did very well in the session today was the entire power pack. What actually led to the rally across the entire utility universe? Let's delve into the key reasons for that. First up, let's start off with some perspective in terms of how FY26 panned out for the sector. Remember, demand was muted due to subdued summer, unseasonal monsoons, and also a strong winter. On the other hand, FY27 has started off on a good note if you are a power supplier. Temperatures have risen significantly. Several areas of the country are facing heat wave issues, and along with that, due to the West Asia crisis currently, there is significant worries of gas supply to power plants. Hydropower generation too is expected to remain muted, especially for India's largest hydropower generator, that is NHPC. Morgan Stanley today came out with a note on the entire utility space. They're saying that thermal-based power generation is something that will now take incremental load. And they also say they see risk from higher solar curtailment in specific pockets. Now, they've quantified how exactly gas as well as hydro generation accounted for India's power generation in FY26. So it was 2% and 9% respectively, a hole that now you will expect thermal power generators to go ahead and fill. Now, on the other hand, when you're looking at individual stock-specific reactions or stock-specific views from Morgan Stanley, they say Adani Power and JSW Energy could benefit from stronger merchant earnings. They say a Mundra long-term PPA sign or a Section 11 extension of the Electricity Act is something that could aid Tata Power's earnings. Torrent Power, they believe, could see merchant gas sale profits where physical cargo access exists, and they believe NTPC could see a re-rating on the price-to-book front depending on peak deficit conditions. So all of this led to a significant up move across the entire power pack, one of the few sectors that actually did quite well. But we are now joined by Mayuresh Joshi from Market Smith India and Ruchit Jain from Motilal Oswal Financial Services. Thank you so much, gentlemen, for joining us. Ruchit, a question that we keep asking you, but we keep seeing a steep cut on the market. At what point do you feel we could bottom out, or from current levels have important supports been broken, and do you see further downside?
Yeah, hi, very good afternoon. Well, rather than looking at the levels, I think it's the data which would indicate when the trend reversal would come. We can see that, firstly, technically that lower top, lower bottom structure which we are witnessing since last 3 weeks still continues. Now, the recent top was 24,300. So that needs to be surpassed first for negation of this trend. Secondly, if you look at the FIS data, they have been selling relentlessly in the cash segment as well as in the index futures. In cash segment alone, we are just at 12th March. And as on yesterday, they have sold about 39,000 crores in the cash segment. And in index futures, in spite of such a low long-short ratio, they have been forming more shorts at current levels also. So around 11% is the long-short ratio, means 89% of the positions are still on the short side. And they are not giving any signs of covering those shorts. So I think until all these data changes, whether it's from FIS, cash and future segment or that low top, low bottom structure negates, I think better to stay on the sidelines and avoid any kind of bottom fishing or expect any trend reversal anytime soon.
Not expecting a trend reversal anytime soon. But Mayuresh, what's your thought coming in on the power sector and power stocks there as well? Vivek was giving us some details. Your thoughts there?
It looks very, very positive, Vinny. Afternoon to you. I think the expectation in terms of just the thermal addition over the next 5 to 6 years from 245 gigawatts expected to reach almost 310 gigawatts. Renewable capacity is expected to probably triple as we speak. And therefore, I think the entire power system ecosystem, whether it's producers, generators, sum of parts or ancillary players, should benefit as we speak. Case in point, say Coal India, I think the local price is still lower in terms of global prices. And therefore, I think with linkage coal, with expectation of more mines under auction and evacuation techniques that Coal India is adopting, I think the expectations in terms of e-auction realization should be higher. For NTPC, as an example, again, I think expected to add 6.5 gigawatts in terms of thermal capacity, 20 gigawatts in terms of renewable in place, 60 gigawatts is something that can probably come through over the next few years. The receivables from discoms has come down to 28 days. The capex stands extremely high at 56,000 crores. And therefore, I think dividend yield also for these players act as shields. So I think anybody holding these stocks should continue holding. A few actionable ideas that we've got on our watch list, something like an NLC India, which did extremely well, has a major line share in lignite production, also expected to double its production capacities and expect significant improvement in both thermal as well as renewable capacities with a better reported EBITDA over the next few years and better margins as well. So yeah, the theme, I think structurally it looks very nice.
Okay. Thanks for the view there, Mayuresh. Let's move on and now talk about stocks or companies which were also in focus were Induction cooktops. They saw a climb up coming in after retailers report a multi-fold jump in sales following fears of LPG shortage. Obviously, that is something that went up. Let's go across to, apart from that, summers also is some factor that came in for some of these names. But first up, Upasana, what are the details coming in here?
Well, certainly these stocks continue to remain in focus even today following the yesterday's uptick. Now they are higher because of the higher induction cooker sales due to LPG crisis as what is known, and this kind of unprecedented demand is mainly driven by soaring cost and shortage supply of LPG. Now Flipkart says that the induction cookware sales have tripled in the last 4 to 5 days. Even Amazon has reported a 30x surge as household and hotels look for alternatives following the panic buying. But the key concern here remains is the inventory. Now inventory and supply chain is a big concern for these brands, as these brands were not prepared for these kind of demand uptick. Now Vijay Sales joined us earlier this morning, and they said that they have seen a sharp spike in the induction cooker sales in the last 2 days, but they will be in for a shortage if such a demand continues going forward as well. Equirus also said that the induction cooker sales have seen a sharp spike in demand, mostly 2 to 3 times as compared to the last year, and they fear supply chain challenge if demand continues to remain strong. So certainly if we look at the overall proportion of induction cookware as the percentage of sales of these companies, it is marginally much lower, less than 5% is what I know, and this will certainly not lead to a re-rating is what I believe.
Well, thank you so much, Upasana, for joining us. And of course, like we've been hearing and seeing, induction cooktops are flying off the shelves. Well, Mayuresh, I hope you have your alternate cooking arrangements in place. But within this particular space, within this particular sector, in the consumer durables pack, what is it that you like? And if you could expand, within the consumer durable space, would you like any of the AC makers too, given the fact that the heat is now on?
Sure, Vivek. I've not ordered an induction cooker, but there is definitely a trend going on out there. Having said that, I think, again, I think it's an if and but scenario, right? I think if this continues and what we are hearing in terms of news, there are some cargoes heading for India, both in terms of crude and LPG supplies as well. So hopefully, I think if all of this gets over the next few weeks, we will not hopefully have this problem where we will not have any pipe gas or natural gas, either for homes or even for vehicles. Having said that, I think the sentimental push through has probably happened in prices, but I'll not read too much into that at this stage. And therefore, within the space, you're right. I think AC makers, specifically, I think a stock like Blue Star, is something that we've kept on our watch list and radar as well. I think both the segments, in terms of its retail segment, is expected to do well. There are expectations, and I am hearing sources on the street that there might be some element of price hikes that probably happen. Obviously, I think with what is happening with the West and then the geopolitical issues at large, input costs might start inching higher as we head into Q1, but a large part of that might get passed through without a minimal impact in terms of their EBITDA margins. So even if aluminium coils or copper prices move higher, they will get passed through, and demand should remain extremely strong. You're already witnessing a massive heat wave as we speak. And I was reading to multiple reports where I think summers might be hotter this year across the length and breadth of the country. So yeah, I think AC makers, specifically a stock like Blue Star, this is something that, in our opinion, can continue.
Absolutely, and we were speaking to Vijay Sales also, spoke about AC sales also going up higher, quite higher than what we've seen in last March, and even obviously in the last couple of months as well, plus induction cookers that have gone up as well. Ruchit, your view on any of these consumer durable names? Anything you're looking at it from TTK Prestige or even Blue Star, Voltas, anything there?
I think stocks such as TTK Prestige, Stovecraft, these are just pullback moves. The overall trend is not that bullish. I think just because of this sentimental impact we have witnessed here more. So better to avoid any bottom fishing there. But yes, the AC stocks such as Voltas and Blue Star technically also looks positive. After the recent long consolidation phase, we have started witnessing good price volume action in these stocks. So I think from a positional perspective, one can look to start accumulating Blue Star and Voltas and expect an up move going ahead.
Well, thank you so much, Ruchit, for the view as far as the consumer durables is concerned. But moving on to the sector that has the largest weight as far as the Nifty is concerned, and that is the banking pack. Well, right now, it's a tale of two banking sectors. PSU banks still delivering strong one-year returns when compared to private lenders. Now, what's behind that divergence? Gaurav joins in with a comparison.
Well, yes. If you look at the historical data for PSU banks and private sector banks, first let's talk about Nifty PSU index. Now that has performed almost by 50% in the last 1 year. And if you look at the constituents, we have got companies like SBI, PNB, Bank of Baroda, Canara Bank, all of these big banks, they have delivered returns more than 30% in just 1 year. On the flip side, if you look at Nifty Bank, it has performed just by 14%. And specifically, if you look at some of the private sector banks like HDFC Bank, ICICI Bank, Kotak Mahindra Bank, they have delivered single-digit return. In fact, Kotak Mahindra Bank's share price has declined almost by 5%. For Axis Bank, this return looks higher. But remember, in the last year, we also saw underperformance from Axis Bank. And another point to highlight is that if you look at the valuations as well, for Nifty Bank Index specifically, the valuations are below that 5-year average zone. But at the same time, for Nifty PSU Bank, if you look at the valuations, they are above that 5-year average zone. And the reasons are a bit technological. When we look at the enhancements, technological enhancement is something which is helping PSU banks. And second is that the market share which PSU banks gaining is also something that the street is liking. As a result, if you look at the EPS growth, first of all, the EPS growth for private sector banks has been in single digit. But at the same time, if you look at PSU banks, they have delivered EPS growth in double digit even in the last quarter. Second is that if you look at the ROAs, now for private sector banks, they have been defending their ROAs. In fact, for banks like ICICI Bank and Kotak Mahindra Bank, we saw ROAs actually declining. On the flip side, if you look at PSUs, that 1% mark has been achieved by almost all the PSUs. In fact, the commentary suggests that they will be achieving this 1% over and above the 1% in coming quarters. So that is something which is giving confidence to investors. Third is that the FII data. Now, for the last few months, we have seen FII have been net seller and financials have been forefront when it comes to FIIs. For private sector banks, if you look at the data, now they have been under pressure, but is it going to improve? Because if you look at Nifty's valuation, although it is at a lower level at 19.5%, now street believes that there are other markets, emerging markets specifically, which can actually deliver higher growth, and they are still trading at 19.5 times like KOSPI. And that's the reason why, even if we are at the lowest point in the market, they do not see FIIs actually coming back as strong as we have seen post-COVID. And that is something which is again concerning in terms of the private sector banks. So all in all, there are certain reasons which are actually helping private sector banks underperform PSU banks. And that's the reason why PSUs will remain in focus even in coming days.
Large part of the selling in the private banks is coming from FIIs. And when I speak to my friends in New York or in Hong Kong who run large FII funds, the point they're making is that exactly this, that why would I want to invest in a private bank which is giving me a 10% profit growth with a 2.5 price to book? I'm getting similar growth banks in XYZ region at half the multiple. They still make reasonable ROAs despite all this. So your lower growth is because you're trying to protect your ROA.
Mayuresh, your thoughts? Are you also in the camp of why should I be looking at private banks and looking at PSU banks? Which camp are you on?
I think we are selective on both. So our take is that yes, the profit pool is probably not expanding in a proportion that one really expects, specifically for the number of banks. PSU banks are in a definite sweet spot as we speak. Most parameters, including expectations of credit deposit ratios, the risk-weighted assets, the expectation of NIMs, and the asset quality pressures. So I think some pullback on stocks like a State Bank of India with the large names is something we are keeping on our watch list. Similarly, in the private names, I think ICICI Bank had a tough quarter, and they had to report items on the balance sheet which the street did not like at this juncture. But in my sense and my opinion, again, I think the asset quality pressure should largely bottom out. Again, I think the large element of risk for large private banks is the deposit growth, which needs to be monitored very closely.
Well, thank you so much, Mayuresh, as well as Ruchit, for joining us, giving us a review on the markets, individual stocks. And once again, thank you for joining us. Well, with that, it's time for a short break. We'll get you some key voices from the industry on the West Asia conflict, along with the key market events to watch out for on the other side. Welcome back to Markets Forward. Well, oil prices are hovering around the $100 a barrel mark after attacks on oil tankers in the Gulf dimmed hopes of an immediate de-escalation in the West Asia crisis. The Indian government is in talks with Iran amid tensions in the region as concerns over gas supply rise. Sources have said that India has requested for safe passage of around 20 tankers through the Strait of Hormuz. 10 of these vessels are carrying LPG and the other 5 are transporting crude. We spoke to the former MDs of HPCL and GAIL on the LPG supply concerns. Let's listen in to what they had to say.
The queues which you are seeing right now is more because of the panic which has got created, and maybe in today's digital world, the things work whole 24/7 and the negative news run faster. And I can tell you, being in the part of the industry, that the topmost priority on the oil marketing companies and the government, which remains, is the ensuring the supply. Everything else comes subservient to that. So I'm sure that the people are working overtime to ensure that. And the too many people rushing in to block it together, there may be some issue. But that part, technical problem can be looked at by the industry.
About 13% of the consumption goes to C&I, 9% to commercial, and about 3 to 4% in industrial. So a rationing of that supplies to C&I segment provides additional comfort to domestic consumers. Besides that, the government has mandated 25% increase in production from refineries. So presently, the yield on an average basis is about 4% of the crude processed. So 25% increase from that level will provide additional cushion.
Okay, and before we wrap up, let's get you which are the key important market events to watch out for in tomorrow's trading session. Let's go across to Gaurav for that. Gaurav, over to you.
Well, yes. If you look at tomorrow's trading session now, West Asia war is something that we will be closely watching, and specifically the crude oil prices, because in the last few days we have seen this element has been impacting the market. But apart from that, we have some macroeconomic data points that we will be tracking from the US market. We will be seeing GDP growth rate data, PCE price index, personal spending, job data. All these data points are going to be important, specifically when we are seeing USA is at a war with Iran. Apart from that, from the European market and the UK market, we will get the industrial production data. Specifically from the UK market, let's also watch out for GDP data for there as well, because there are certain activities which are happening in European market as well. If you look at the Indian market, e-clerks, now that company is going to be in focus tomorrow, because tomorrow is the record date for the company for the bonus issue in the ratio of 1:1. And if you look at IPO, now even the market is weak, we are seeing new IPOs coming up. We have company like Rajmarg Infra Investment Trust. Now, this is an NHAI-backed company where they will be closing their IPO's subscription tomorrow. And if you look at the subscription data, it has been sub 30%. So that is something that we will be watching out for. But all in all, in terms of markets, crude oil is something which is a key thing to watch out for tomorrow's Nifty and other constituents as well.
Well, thank you so much, Gaurav, for joining us and giving us a sense of all the key events to watch out for tomorrow. With that, to wrap on this edition of Markets Forward, we will be back with more news and updates on the other side.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The top stories that we're tracking for you this evening. The Strait of Hormuz remains off limits for the 13th day of the West Asia war. 6 vessels come under fire as the war puts merchant ships on the front lines. Indian government sources say an Indian national was killed. New Delhi is in talks with Tehran to secure the safe passage of around 20 tankers through Hormuz. Crude oil prices continue to rise, with Brent hovering around the $100 mark. The record release of crude oil reserves by the International Energy Agency and the US does little to stem the rising prices. Iraq shuts down oil port operations after deadly strikes. Iranian drones hit Kuwait airport and a residential area in Dubai. Citibank temporarily closes its branches in the UAE, Saudi and Bahrain, also intercept missiles and drones. Israel continues to bomb Tehran and Beirut. Serpentine queues outside LPG dealerships across several cities in India amidst fears of gas supply shortages. Government extends the cool-off period to book a second cylinder in rural areas from 25 days to 45 days. Gig workers seek compensation of 10,000 rupees from food platforms as restaurants cut back on operations. The Sensex and the Nifty failed to hold on to the intra-day recovery and decline for the second day in a row. Banks and auto stocks lead the decline. The rupee hits a fresh record low of 92.36 against the dollar before recovering in late trade. The National Stock Exchange gets ready to go public. The stock exchange appoints 20 merchant bankers and 8 law firms for its IPO. Also announces engagement with Rothschild and Company has drawn to a close. The Trump administration launches a fresh probe into alleged unfair trade practices by India, China, the EU and 13 other trading partners under Section 301. The move is aimed at replacing Trump's so-called reciprocal tariffs, which were ruled illegal by the US Supreme Court. Air India and Indigo seek temporary exemption from pilot duty hour norms of the aviation regulator to manage disruptions caused by the West Asia war. Sources say airspace diversions are stretching flight durations. Air India asked for a flying time of up to 11.5 hours against the current limit of 10 hours. Data has become the true wealth, says Chief Justice Surya Kant, as the Supreme Court agrees to hear a plea challenging the Digital Personal Data Protection Act. The petition alleges the act gives the government broad powers to seek data on public individuals. Well, let's go straight to the top story this evening. The West Asia conflict rages on as heavy airstrikes continue in the Gulf region. Now, Iraq has shut down oil port operations after strikes on 2 tankers. Indian government sources say that an Indian national was killed in the attack, which took place while both ships were near Iraqi territorial waters. Kuwait has said that its airport was targeted by several drones. The attack resulted in material damage, but no human casualties were recorded. A government facility in Bahrain was also hit by Iranian drones overnight. 1 person was killed as residential buildings in the country's capital were targeted. Residential areas in Dubai also attacked. Authorities confirmed a drone fell on a luxury apartment, sparking a fire that was later brought under control. Reuters reports that Citigroup and Standard Chartered have evacuated their offices in Dubai. HSBC has shut down all its branches in Qatar until further notice. Israel intercepted a barrage of Iranian missile attacks directed at its capital. Militant group Hezbollah said it had launched rockets and advanced missiles at northern Israel. Meanwhile, Israel continues its onslaught in Lebanon. Multiple explosions were reported in Beirut, with the country claiming that Israeli attacks have widened in the capital beyond targeting Hezbollah-controlled areas. Iran has set 3 conditions to end the war. The country's president has said that hostilities will cease only if Iran's rights are recognized, reparations are paid, and guarantees against future aggression are given. Now, the Strait of Hormuz continues to remain off limits for the 13th day. Iran reportedly attacked 6 tankers in the Gulf waters. President Trump has appeared to claim victory in the war, but later walked back on those comments. Take a look.
Now we're going to look very strongly at the Straits. The Straits are in great shape. We've knocked out all of their boats. They have some missiles, but not very many. I think we're in very good shape. The main thing is we have to win this. They win it quickly, but win it. And there are many people, I'm just watching some of the news. Most people say it's already been won. It's just a question of when. When do we stop? We don't want to let it regrow.
Well, that's President Trump, but it is important to point out that the Strait of Hormuz is inaccessible at this point in time. There is no movement of trade, and that is what is being reflected in oil prices, even though you've seen that record release coming in from the IEA as well as the US. We'll get to that in just a bit. But news coming in, inflation for the month of February accelerating to over 3%. Latha joins us now with the data. Latha, concerns there on inflation. This is only likely to look worse as the West Asia conflict rages on.
Absolutely. At the moment, if you remember, the first attacks on Iran was on February 28. So the February CPI does not show any indication at all about any such impact. It's come in at 3.21%. Our poll gave a number of 3.1%. So you could say it's a bit of a disappointment. Likewise, food inflation, food CPI was seen by our poll at 3%, but what we have here is a 3.47%. So food is quite clearly the one that's kind of surprised, and that's largely because of coconuts and tomatoes, we understand. That's among the few things that have become expensive, as well as a bit of vegetables. It's actually year on year, because there was a fairly low level of vegetable inflation year ago. We are seeing these bit of sparks. Core inflation, we as yet don't have. It's a calculated number that was expected to come in at 3.4%. We have to wait and see how those numbers will look at after we do the calculation. It's not something which the MOSPI gives us. But all told, I mean, there's nothing to worry about. We expected it to be 3.1. It's come in at 3.21%. The February inflation, the impact will genuinely show only in the March inflation, where we will have gas cylinders becoming expensive, LPG gas, as well as ATF fuel showing up in, travel and transport or in some such form. So we are still only less than half of the month through, so we do not know whether there will be more implications. Actually, Shireen, very interestingly, from March, it is not CPI but WPI which we may have to track, because the government may be able to control the prices at the pump, and therefore CPI, consumer inflation, doesn't increase, but wholesale price increases are bound to be there. So WPI may become a more important indicator starting from March, at least for some time, when global commodity prices would be rising.
All right, Latha, we'll have you back to decode the inflation internals with our experts in just a bit. But many thanks for joining us with the quick take. Now, the Indian government is said to be in talks with Iran amidst tensions in the region. Sources say India has requested safe passage for about 20 tankers through the Strait of Hormuz. 10 of these vehicles are carrying LPG and another 5 are transporting crude. MEA spokesperson Randhir Jaiswal has said the External Affairs Minister S. Jaishankar and Iran's Foreign Minister have had 3 conversations in the recent days. The most recent conversation focused on shipping and India's energy security, but he did not clarify whether India has been granted safe passage assurance by the Iranians. Take a look.
External Affairs Minister and Foreign Minister of Iran have had 3 conversations in the recent days. The last one discussed issues pertaining to safety of shipping and India's energy security. Beyond that, it would be premature for me to say anything. We have shifted several Indian nationals, including students and pilgrims, who were based in Tehran, to other safer locations and cities in the country. We've had several Indian nationals who have approached us, and we have helped them to cross over into Azerbaijan and Armenia, and for them from there to take commercial options of flying back home.
Well, that is the spokesperson for the Ministry of External Affairs, and this is the important question, whether there has been an agreement reached between India and Iran on the safe passage of ships, Indian-flagged ships, through the Strait of Hormuz. That's the question. Now, oil prices hovering around $100 a barrel after attacks on oil tankers in the Gulf dimmed hopes of an immediate de-escalation in the West Asia crisis. In fact, the International Energy Agency, which announced plans to release 400 million barrels of oil from its strategic reserves held by member countries, a record release, by the way, the move has done little to cool global oil prices. In fact, the proposed release is significantly larger than the 182 million barrels released in 2022, this after the Russian invasion of Ukraine. Now, of the total, the United States will release 172 million barrels from its strategic petroleum reserve. Here's the IEA.
This is a major action aiming to alleviate the immediate impacts of the disruption in markets. But to be clear, the most important thing for a return to stable flows of oil and gas is the resumption of transit through the Strait of Hormuz.
My administration, as you know better than anybody, is also working to keep the oil flowing. It's flowing all over. We knocked out, they want to drop some mines. But I'm pleased to report that earlier today, the International Energy Agency agreed to coordinate the release of a record 400 million barrels of oil from various national petroleum reserves around the world, which will substantially reduce the oil prices as we end this threat to America and this threat to the world. We don't want to leave early, do we? We got to finish the job, right?
Well, that's President Trump. And let's talk about the equity markets. The Wall Street continues to fall amidst global jitters. The Sensex and the Nifty failed to hold on to an intraday recovery that we saw, ending lower for the second straight day. The Nifty lower by almost 227 points, down 1%. The Sensex lost 830 points. The Nifty Bank down 1%. And the Nifty Auto Index down 3%. So the pressure really coming in there as far as the auto stocks were concerned. The rupee, meanwhile, recovered after hitting a record low of 92.36 against the dollar, finally closing at 92.19. Now, the National Stock Exchange is ready to hit the Wall Street with an IPO. The Stock Exchange has appointed 20 merchant bankers and 8 law firms for its upcoming IPO. The exchange has also announced engagement with Rothschild & Company as the process advisor for selection and appointment of IPO advisors has drawn to a close. So that's the big one. The much anticipated NSE IPO getting ready, appointment of 20 merchant bankers and 8 law firms. Now, panic-stricken consumers thronged outside LPG dealerships again in serpentine queues across cities for the third day. People across cities complaining that they're simply unable to make online bookings. Agencies say there is no supply shortage, but are silent on when portal issues will be addressed. Sources tell CNBC Awaaz that the government has extended the cool-off period to book a second cylinder in rural areas from 25 days to 45 days. The panic has also gripped commercial kitchens. Canteens of government offices, schools and corporate campuses have all trimmed down their menus to cope with the LPG rationing. Some restaurants have switched to using induction and kerosene stoves as an alternative. Now, the Gig Workers Association has sought a financial relief of 10,000 rupees per person as eateries cut back operations, even as crematoriums have been impacted, with many which usually run on LPG now switching to PNG. The rationing has led to black marketing of cylinders as well. Delhi residents tell us that hoarders are demanding as much as 3,000 rupees for a cylinder, which normally costs about 900 rupees. Here's a report on how people are coping with the LPG crisis.
I'm at the Bharat gas go down at sector 134 in Noida, where there is a long queue.
सुबह 8 बजे से खड़े हैं, सुबह 8 बजे से।
सुबह से खड़े हैं। सुबह 4 बजे से खड़े हैं। क्या बोल रहे हैं? 4 बजे से खड़े हैं।
पर्ची है, उसी को देंगे, नहीं तो नहीं देंगे किसी। ये कंपनी वाले खुद बुक कर लेते हैं, बुक कर लेते हैं, फिर उसके बाद सिलेंडर है।
गैस मिल रही है, नहीं मिल रही है?
गैस नहीं मिल रही, कहाँ से मिल रही है?
चावल ये खड़े हैं यहाँ पे, बार-बार लाइन आगे लगती है, फिर पीछे जाती है, फिर आगे लगती है, फिर पीछे जाती है।
तो क्या कह रहा है प्रशासन, क्या कह रहे हैं यहाँ पे एजेंसी वाले?
एजेंसी वाले क्या कह रहे हैं, ज्यादातर पर्ची वाले जा रहे हैं अंदर, क्योंकि हम लोगों का जब 1 हफ्ते से बुकिंग नहीं हो रहा तो हम क्या करें इसमें।
मैम, आज वाली जो बुकिंग है उनको नहीं मिलेगा, ये हमने कल ही कर दी थी।
तो कब की बुकिंग है आपकी?
हमारी तो 2 दिन पहले की है। हमें 2 महीने 3 लाइन थी, फिर 1 लाइन हुई है। हालांकि हमें भीड़ की वजह से सारा कंफ्यूज है। 1.5-2 महीना हो गया सिलेंडर भी लिया और हमको तो समस्या कैसे समाधान करेंगे लोग?
एजेंसी बंद कर दी है।
हाँ, एजेंसी बंद कर रखी है, बोले कब खुलेगा। और अब मतलब 27 फरवरी को अपने आप सिलेंडर बुक हो रहे हैं, हर महीने अपने आप बुक हो रहे हैं। हम ले नहीं रहे, फिर भी बुक होकर डिलीवर दिखा रहे हैं।
भाई आ चुकी है, ट्रक भरा खड़ा है, भरपूर मात्रा में सबको मिलेंगे।
तो बुकिंग क्यों नहीं हो रही है?
ये ऑनलाइन में कोई प्रॉब्लम आ रही है, उसकी जानकारी नहीं है।
अच्छा, ऑनलाइन सिस्टम में प्रॉब्लम है, तो सिस्टम क्यों नहीं चल रहे, कुछ बता रहे हैं?
इसकी कोई जानकारी नहीं।
Situation seems to be easing as the police says that there is enough supply available, but it is only a matter of IT issue because of which these things are cropping up, and they are trying to ease that out. Let's see how soon this matter actually settles for the consumers as well as for the agency owner.
In Mumbai today, we went around a couple of areas around Low Parel, Worli, Dadar, etc. And we've noticed that a lot more restaurants compared to yesterday have shut down. If you can see here in Low Parel, 2 restaurants behind me have shut down because they don't have enough LPG supply. A couple ahead also, smaller eateries have closed their doors for today. And, several have also started curtailing their menus. For example, Ramashray, which is a popular restaurant in the Matunga area, that also has curtailed its menu. City Bakery in Worli has been shut since yesterday. A couple of restaurants we spoke to yesterday also are closed today. But some are smaller eateries that, make vada pav, samosa and these type of smaller items say that they have moved to electric gas stoves. Currently, they're trying to manage with that, though the scale at which they were cooking has significantly come down. And some of the restaurants that are still open, we've spoken to them and they're telling us that they have maybe a day, 2 more left in terms of supply, and they will also have to close down eventually. So the situation continues to deteriorate in some sense. There is still no clarity on when commercial LPG supply will be available in Mumbai.
People here have told us that there are people from the gas agencies and from various other agencies who have these cylinders in stockpiles, and they are roaming around in the evening time on bicycles, on bikes and e-rickshaws and selling these cylinders in black. And as I told you, the prices go anywhere between 2,500 to 3,500 rupees.
खड्डा कॉलोनी में जयपुर में 3-3 हजार के खुला सिलेंडर मिल रहे हैं। इन सबको पता है, ब्लैक कर रहे हैं और आम पब्लिक को परेशान कर रहे हैं। हम लोग जो मिल रहे हैं वो क्या ऐसे ब्लैक में मिल रहे हैं कि ले जाओ 2700 में 3000 में सिलेंडर है।
आपको हर जगह मिलेगा। शायद हम बताने से क्या करेंगे, आप भी देखे होंगे। साइकिल पे लेकर मोटरसाइकिल लेकर के चलता रहता है।
This is the time of the holy month of Ramadan, and a lot of people depend on cooking on LPG gas cylinders, and a lot of people in this area are actually facing a lot of trouble because of the gas cylinder crisis.
Well, cylinder shortage, IT issues continue to weigh down on consumers. Time for us to head into a break, but up next, the Trump administration launches a fresh probe into alleged unfair trade practices by India, China, the EU and 13 other trading partners under Section 301. That and more when we return.
presented by Standard Chartered. Associate sponsor, Reliance Industries.
This is Network 18, and you're watching CNBC TV 18.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV 18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Welcome to Indianomics. The February CPI has come in slightly above expectation at 3.21% versus 2.74% in January and versus the CNBC TV 18 poll of 3.1%. The culprit may be food inflation. It's a tad higher at 3.47% versus our poll of 3% and the January food inflation of only 2.1%, so a slight big jump there because of the base effect. However, the February numbers are not impacted by the West Asian war since the first strikes on Iran began only on February 28th. The CPI and more importantly, the wholesale price index, the WPI, are more likely to be impacted in the months to come, as of course will be the current account deficit, the balance of payments and the fiscal deficit as well. Joining me to understand the economy from a 360-degree perspective are economists Anubhuti Sahai, the head of economic research at Standard Chartered Bank, Sakshi Gupta, principal economist at HDFC Bank, and Garima Kapoor, the deputy head of research at Elara Capital. That looks like a Women's Day celebration, albeit a few days too late. Ladies, thank you very much for joining me. Sakshi, for starters, I mean, the CPI has come in almost as expected. Most of you gave me a average of 3 to 3.2%, and it's come in at a higher end of the range. But would you worry that the CPI in the months to come, like in March and hereafter, is going to be much higher than all of your previous estimates.
Right, Lata. So, I partly agree with what you're saying. I mean, the February number is very, very comfortable, broadly in line with expectations. In fact, on a month-on-month basis, if you look at the headline print, food as well as core, all these indicators are actually showing a slower momentum, right? So, broadly, a favorable story, I mean, compared to the momentum that we saw in the month of Jan. Going forward, of course, there are various, vulnerabilities that can play out for the CPI print. That is, of course, assumed on the fact that, you continue to see the current conflict, being prolonged, which leads to a sustained increase in oil prices. I think that the bigger impact, of course, will come in on the wholesale side. But if oil prices remain elevated, we do see that, ultimately some of this impact will also start filtering through to the retail number. So what we are estimating is that if oil prices average close to $90 per barrel for FY27, right, then the impact on inflation, assuming that the government does come in and cut, excise duties and all those adjustments are made, the impact could be close to, 70 basis points to about 100 basis points. This is cumulative, including, what happens to fuel cost, what happens because of the indirect impact of, transportation costs going up. And let's not forget that gold prices are also inching up. So that also plays into the retail inflation number.
Oh, yes, absolutely. And even now, it's some 60% higher personal effects, largely because of the impact of gold. But Sakshi, at the moment, we have already seen, food cylinder prices being raised by the government, as well because of the lack of availability. I mean, we are carrying a lot of stories of about small restaurants and vendors have had to shut shop because of the lack of availability, and that will in turn have an impact on food prices as well. Availability always hits prices. So you said that 70 basis points is what you're expecting if it is $90. What was your number and what is it now, assuming $90?
Right. So our forecast for next year, we're keeping it unchanged right now at 4.2%, which assumes that oil prices don't average at $90, right? Which was
4.2, is it?
4.2% for next year.
Okay.
Yeah. 4.2% for next year, assuming that oil averages between $60 to $70 per barrel.
Got it. So another 70 basis would mean 4.9%. Okay,
Right.
got that. Anubhuti, I wanted to ask you if you all have parsed any of the moves already. Like I said, cylinder prices have gone up. ATF is already up. I mean, it's not subsidized. People have to pay that price. March CPI, is it already for you higher than what you had assumed before the war?
Absolutely, Lata, because we'll have to take into account the LPG price increase, which is 7%. That has to be penciled in, and plus the ATF. I don't think the price increases in the parallel markets will get captured in the CPI because the sources are from, are for the official sector. But all said and done versus our previous forecast at this particular juncture, and assuming there are no further price increases either on cooking gas or retail fuel, our sense is that headline inflation in March itself will be higher by at least 20 basis points versus our previous forecast, which was closer towards 3.5 to 3.6%.
Okay, no, I was not expecting that you will take the unofficial prices into consideration. But what I was saying is that we have a food and restaurants, category in the CPI, and it's possible that people will raise restaurant food prices, packaged food prices. So your 20 basis point higher than expected in March accounts for that as well?
No, it just accounts for increase in LPG and a little bit of increase in terms of, other related fuel products. If there is an upward price increase in, restaurant and hotel prices, which is highly likely, then we will see further upside pressure. But again, we'll have to see how long this whole conflict lasts and how much this particular sector is able to adapt itself to other sources of fuel in order to run with the business without impacting consumers' purchasing power.
Got your point. Garima, very quickly, whether you're changing your CPI estimates, what are they now and what will they be? But more importantly, how are you looking at wholesale price index, where, it's not just the fuel prices, but you are also going to see the impact of copper, aluminium, a whole lot of things, and other logistical problems that may come in. So wholesale price index forecasts.
The wholesale price index before this entire West Asian crisis started, we had projected a number closer to 2.8 to 3% for entire financial year. Now, the entire commodity basket is up, not just the base metals, but coal, coking coal, you could steel prices that are up, urea prices, phosphate prices, you name it, and almost all commodity derivatives are up. So we are looking at it for every 10% increase in a commodity basket, let's say benchmark to global commodity index, sensitively says that your WPI index should go up by more than 200 basis points. Now, so far, the commodity index has already moved up 10.7% benchmark compared to what it was earlier. So even at these price levels, even if you don't see a correction, we're looking at a WPI uptick of anywhere between 200 to 250 basis points compared to the previous forecast.
Okay. Well, first, let me estimate the positive impact of this. Sakshi, would you bet that FY27 nominal GDP is going to be better than the government's forecast of what, 10.8 they're saying, right?
Right. No, Lata, I think over the last 2 or 3 months, this is something that, I've been, even before, these tensions in West Asia started, my belief was that, the official estimates were a little conservative in terms of the nominal GDP number, right? So if I have a CPI inflation forecast of 4.2%, for next year and about 4% for WPI, which assumes that this conflict doesn't, is not prolonged. Even with that, I get a nominal GDP number which is closer to 11.3, for FY27. And clearly with the risk that we are discussing, if that kind of continues, then I do see a further upside to the nominal number.
Okay, further than even 11.3. Okay, that will be the positive. So their 4.3% fiscal deficit can be somewhat salvaged because of the nominal GDP not being as low as we feared when the GDP revised series was announced. Anubhuti, with that, let us come to growth itself. While inflation impact, all of you have forecast on CPI barely 20 basis, but maybe much more so on WPI, 200 basis, as Garima says. What is your, tentative impact on GDP? Are we going to see it hurt?
Yeah, unlike inflation or current account deficit, I think estimating impact on growth is far more trickier. Price sensitivities are easy to estimate, and that's what we are able to do when it comes to inflation. And if we go by RBI's own estimate, every 10% increase in crude oil prices leads to a 15 basis points downward impact on growth. And if we assume oil prices, say, at 110, or even say 90, there is a given chance of GDP being lower at least by 40 to 50 basis points versus our current forecast of 7%. Having said that, my bigger concern this time is not around prices, but availability of goods and goods itself. Energy is a very important component, as you very rightly mentioned at the beginning. Food and industry, outlet industry. If they are not able to secure supply of energy, the whole chain goes for a toss. It contributes close to 1% to GVA. Similarly,
if I may interrupt, I think you're going to say the same point. But, we have diverted some of the gas intended for, say, hot briquetted iron, which is run on gas, or ceramics clearly suffering. So won't that also add to the growth hit? What's your number? Anubhuti,
not really, Lata. When we are reallocating, we are trying to prioritize the sectors. There will be some sectors which will be loser, and these sectors were not supposed to be loser in the baseline scenario.
Yes.
LPG, if you're taking very simple example of LPG, we import 65% and out of which 90% comes from Middle East. There is no way we can substitute Middle East completely. LNG, again, 50% we import, but almost 65% comes from Middle East. And to secure supplies very quickly, is not possible unless, the government is able to fix some solutions. So in a situation of this current conflict sustaining, there will be few sectors which will be losers. Whatever you may do, in terms of substituting the lost supply. 100% substitution, in my view, is not possible. So the hit on GDP can be much more larger than what we are able to anticipate at this point in time if this conflict remains prolonged.
Okay, so you aren't yet giving me a number for that, right?
Yeah, we will have to see the duration and how much of supply can be substituted. But, from a 7%, we can easily move towards a 6.5%. That would be the best case scenario, in my view, assuming the supply remains secured.
I'll get that word from all of you, your best guess, even assuming 1 quarter of growth hit, not beyond that. But Garima, the more important question is, how does this impact corporate earnings, since you are both the head of research for both strategy as well as for economy at Elara? Are you all already driving down revenues or margins or both? Is there going to be a downside risk to earnings?
Clearly, I do see some downside risk. But remember, this conflict started, and by the time it started impacting the sources of energy flow, it has been somewhat the middle of March. So most impact is likely to be felt only for 15 days of March. The impact probably might be more prolonged if this war continues, will be more so for quarter 1 of FY27 than only quarter 4 of FY26. But having said that, remember quarter 3 had already started to show us uptick in earnings across the board. And in fact, we had started to see a double-digit volume growth for the first time in 6 quarters. That improvement across the board, whether it was large cap, small cap, or mid cap, is likely to get impacted. Our assumption says that if this continues for a prolonged period, the direct impact, notwithstanding the shortage of energy, will be one. But the other impact would also be through your flow through relating to your cost of borrowing, through your USD INR, through your rationing impact, and then the consumption impact, because you are going to take a hit in terms of your balance sheets as well. So net basis, we will be watchful of the numbers. We do think, as of now, we have not estimated the number, but we do think it is more a phenomenon of quarter 1 FY27 than quarter 4 FY26.
Okay, but you think quarter 4 FY26 gets away? We may not see any impact from the previous estimates you all have?
Not really. Some sectors, for example, who have been asked to ration or have been given specific quotas, for example, we heard about EMS. That's also likely to happen in terms of cost of gas. So let's say auto component. We're also seeing that in ceramics, or for that matter, sectors beyond that in terms of outside CGD, fertilizer. So there is going to be an impact, but that impact will not be as severe as people anticipate, because by the time it started to flow in, everybody was carrying certain inventories, which will help them tide through, let's say, 15-20 days of March.
Fair enough. Okay. I want more detailed analysis on what you all make of growth in FY27, at least Q1, but more importantly on the 2 other very important variables, the twin deficits, current account deficit, fiscal deficit, those questions after the break. Welcome back. You're watching Indianomics, and our economist panel today comprises Anubhuti Sahai of Standard Chartered, Sakshi Gupta of HDFC Bank, and Garima Kapoor of Elara. Ladies, thank you very much for your patience. If I can get a quick round of where you all estimate growth. Sakshi, your idea of how much is the hit?
So currently, Lata, we are estimating 7.2% GDP growth for FY27. We haven't changed this forecast as of now. I would anticipate, projecting a growth hit for the whole year to be between 20 to 25 basis points, because I'm also assuming that, look, in a scenario where, there is a prolonged conflict, then there's also going to be some counter, measures that will come in both from the government as well as RBI. So, in order to support growth. So I think 6.8 to 7% is where I would kind of project GDP growth then for next year.
Okay, so about 20 to 30 basis points. What would be your guess, Anubhuti?
Our baseline forecast is for 7% for fiscal year 27, and I would, put a range of 6.5% to 7%. As I highlighted, it's not only a question about price; it's also a question about securing supply of energy, which is important for most of the sectors. The other angle which we need to keep in mind is that there will be some loss in exports. We export almost 14% of our goods to Middle East, and bulk of it goes through the Strait of Hormuz, and no shipments are able to go from that strait. So I think those are the channels via which the growth hit can be much larger than what we are estimating at this particular juncture.
Okay. Well, now let's come to the Reserve Bank's move itself. Are you okay? Before that, Garima, your current account deficit estimates, do you think there is a hit over there? Where do you see the rupee?
Every 10 barrel movement that we're seeing in oil, we're seeing a current account impact of about $17 billion. Remember, we're currently talking about the current oil prices, but oil prices started to move much before the actual war or actual prices started in anticipation of this disruption. So we're kind of looking at a 20 barrel movement that took place before the crisis started and the movement thereafter. So I do think for every 10 barrel movement, we're probably looking at $17 billion impact. So thereabouts, I would think if oil remains here, we would see the current account deficit number move from 1% to effectively 2% of GDP.
It would be quite an ask. Then before I come to the rupee, let's check out what the Reserve Bank can do, since Anubhuti says there will be steps from them. Are you expecting a long pause, Sakshi, or do you expect the Reserve Bank to continue with this liquidity and long pause, or even move interest? If yes, which way?
Right. I think at least for the next, policy, or at least for the next quarter, I think the overall focus for the central bank would be to kind of maintain and control volatility, around the rupee, right? Of course, not target any particular levels, but at least ensure that, we don't see any sort of panic movements in the rupee happening. That's extremely important. Secondly, I would expect them not to do anything on the interest rate front at all. I think that they are likely to remain growth supportive and therefore sterilize, their operations on the FX side in order to maintain liquidity balances in the system, right? So I think it will be more a mix of their strategy around the rupee and also managing liquidity to make it or keep it broadly growth supportive.
Okay. Well, let me shift the question a bit. Instead of asking you all where you all see current account deficit, because the problem is we are not even able to fill 0.7% of our GDP current account deficit with capital flows. The problem is really capital flows. So let me ask you about your BOP surplus or deficit guesses. Anubhuti, are you expecting a BOP outflow in the current quarter and the next as well?
There's a very high likelihood, especially if you're looking at it from the portfolio investor's perspective. But the best case scenario in capital flow, especially from the FPI front, would be, absolutely nothing, neutral, zero. I think the hit would primarily come from the current account deficit. There is a high probability, Lata. I know we are talking a lot about the one particular quarter, the next quarter, because all of us are hoping that there would be a resolution to the ongoing conflict. But if this gets prolonged, then we can see third successive years of balance of payment deficit. As you very rightly pointed out, we were not able to fund even a 0.3 or 2.7% of GDP worth of current account deficit because capital flows, at least in our estimate, were negative in fiscal year 26 at minus $5 billion. Even if we assume, the BOP...
First 9 months is $30 billion, capital negative for FY26 also. So is this quarter BOP negative and is next quarter BOP negative? What's your best guess, Anubhuti?
BOP, this particular quarter, we are expecting, initially we were expecting a surplus, but we would expect a BOP deficit in this particular quarter, given that the import bill will be higher and FPI flows are likely to be flat. Initially, we were building in some FPI inflows to come in, though it won't be a very large deficit, given that services exports are doing exceedingly well. The next quarter, the seasonality turns against the balance of payment dynamics as usual. So we are likely to be hit both on the current account deficit front as well as on the capital flows. But whether the capital flows are positive or negative would very crucially depend on whether this Middle East conflict continues going into the June quarter too.
BOP has another problem. As soon as the war ends, we will have an AI battle upon us. And there is a big fear that software exports, even if not services exports, because GCCs are still coming in, software exports can have at least they can be flat. They may not grow. So we have a problem over there as well. So now give me your guesses on the rupee. I won't ask for a very long period since nowadays even 24 hours is a very long time. But your March end numbers, Garima?
I think rupee, if the conflict continues and oil continues to oscillate between 90 to 100 as is, I think you will see rupee crossing 93.50.
90? Sorry?
93.50.
Okay. Sakshi, what are you working with for March? I'm just asking 3 weeks away.
My range is 92 to 93, Lata, given the amount of intervention we have seen from the RBI. So I think I think it would be unlikely for the rupee to cross 93 in the next 2 weeks. However, as we move into April, if this is continuing, then my forecast for the rupee moves on to a much higher range. I think between 93, 95 levels is a range that we should look at for the next quarter then.
Okay. Anubhuti?
So pretty much in line with what our other two guests have highlighted. Next 2 weeks, obviously the pressure remains on weakness side, but we were forecasting even before this Middle East conflict started, rupee to be at 93 by end of December, and we were probably one of the most bearish on the street. And with this whole story turning around, even if this conflict resolves, our view is that some of the production facilities might be damaged and might take much longer to come back. And if that's the situation, then as I highlighted before, there is a possibility that instead of our baseline scenario of plus $5 to $15 billion of BOP surplus, we might end up being flat to slightly negative. And if that turns out to be the case, then our current forecast of 93 by end of December will be clearly under risk, even if this conflict gets resolved.
Okay. Well, those are difficult scenarios. Let's hope that we don't have to see the war prolonged that long. I'm still more worried about capital flows than I am about the war. Since, as Garima points out, there could be an earnings issue in the first quarter as well. And capital's FPI flows are going to chase earnings. They're not going to chase GDP growth. And that is a very big worry. Thank you very much, Garima, Sakshi and Anubhuti, for giving us an understanding of what we should be prepared for in terms of a bad scenario in the coming quarter. We wrap up on this edition of Indianomics. Thanks for watching.
Hello and welcome to our special broadcast on West Asia conflict and its cascading impact. I am Ashmit Kumar. Now, the war in West Asia has already led to significant economic disruption globally, and the ripple effects are being felt in India as well. The government's decision to ration LPG supply for some sectors has triggered fears of a shortage across cities. While several restaurants have shut down temporarily or curtailed operations, consumers are thronging gas agencies as online bookings fail. For many customers, there has been no relief despite standing in long queues. They blame gas agencies for indulging in hoarding and even black marketing. As per CNBC Awaaz sources, the cool-off period for booking cylinders has been extended to 45 days from 25 days earlier. In rural parts of the country, Delhi residents, meanwhile, allege that hoarders are demanding up to 3,000 rupees for a cylinder that usually costs around 900 rupees. In some parts of the country, police forces had to be deployed as irate customers thronged agencies, leading to a law and order situation. Meanwhile, offices, schools and hostels, canteens have begun trimming their menus. Omelette and dosas have gone off the menu in Infosys campuses. Food economy is the biggest hit. Several restaurants have trimmed their menu or shut down on a temporary basis. Many have switched to alternate cooking fuels like firewood and even induction cookers. The Gig Workers Association has sought compensation of 10,000 rupees from food platforms as restaurants cut back operations. Speaking, meanwhile, at the Parliament today, Oil Minister Hardeep Singh Puri has said that India is navigating what he described as the most severe energy disruption in recorded history.
This is not the moment for rumor mongering or fake narratives. India is navigating the most severe global energy disruption in recorded history. Crude supply is flowing, gas is prioritized for homes and farms, LPG production has been stepped up by 28%. Consumer prices are held far below what makes markets and regional competitors and dictate. Schools are open. Petrol is on the forecourt. Every citizen, regardless of political affiliation, has a stake in that. India must stand united behind the energy warriors, behind the institution managing the crisis.
A very large portion of our oil and natural gas comes through the Strait of Hormuz. The pain has just started. Restaurants are closing. There's widespread panic about LPG. Street vendors are affected. And as I said, this is only the beginning.
I'm at the Bharat gas go down at sector 134 in Noida, where there's a long queue. People have been waiting for many days. And now today they see some hope, that they see that there is some supply coming, and they are hopeful that they will get their supplies today. कब से खड़े हैं यहाँ पे?
सुबह 8 बजे से खड़े हैं। सुबह 8 बजे से।
सुबह से खड़े हैं। सुबह 4 बजे से खड़े हैं। क्या बोल रहे हैं?
कंपनी वाले अपने आप बुक करते उठा लेते, कस्टमर को नहीं देते हैं।
31 तारीख को हम सिलेंडर लिए थे, 31 जनवरी में। अभी ये लोग ने 20 तारीख को हमारा सिलेंडर मतलब डिलीवर कर दिया, लेकिन हम लोगों को सिलेंडर नहीं मिला। परसों हम
किसी और को डिलीवर कर दिया।
हाँ।
मेरे घर से ही 12 किलोमीटर पड़ता है एजेंसी का गोदाम। कल हम यहाँ जब आए तो हमको बोला गया कि आपके पास ओटीपी नहीं है, ओटीपी हो आएगा तब आइएगा लेने। हम ऑफिस में गए, वहाँ से ओटीपी गिरवा लिया, आया तक आज अब गैस खत्म हो गया। हम ले तब अब कब मिलेगा, तो कल सुबह में आइएगा। आज 3 बजे भोर में हम आए हैं, लाइन में लगे हैं, सिलेंडर भरा हुआ है गाड़ी में, और उसके बावजूद मना कर दिया हमको जो नहीं अब गैस नहीं बचेगा। तो आज या तो हमको गैस दे, और नहीं तो हम यही आत्महत्या करेंगे, नहीं तो इनके गाड़ी में आग लगा के जाएंगे।
महीना से पहले में सिलेंडर उठाते हैं, अब महीना से बाद हो जाता है, फिर भी सिलेंडर नहीं देता है, नाटक करता है। तो अपना घर से देता है, बाप से देता है, पब्लिक को दौड़ाता है। गरीब आदमी देखिए, व्यापार बेचने कमाने खाने वाला आदमी से अपना पैसा देते हैं, कर पकड़ते हैं। जब दाम बढ़ा दिया फिर भी तो नहीं दे रहा है। अब विलेज करता है, ठीक विलेज करने के लिए हो जाता है।
गैस तो मिल रहा नहीं है, शायद कल दुकान बंद रखना पड़ेगी। नहीं मिला तो 20 रुपये की लकड़ी कहाँ से लाके चलाएंगे? बहुत महंगी लकड़ी है और लकड़ी मिलने को भी तैयार नहीं है। ये मिली है 22 रुपए किलो से।
Well, it's day 3 of a disruption across Mumbai's hotels and restaurants, in fact, across this country as well, because of a shortage in commercial LPG supply. Now, in Mumbai today, we went around a couple of areas around Loparel, Worli, Dadar, etc. And we've noticed that a lot more restaurants compared to yesterday have shut down. And some of the restaurants that are still open, we've spoken to them and they're telling us that they have maybe a day 2 more left in terms of supply, and they will also have to close down eventually. So the situation continues to deteriorate in some sense. There is still no clarity on when commercial LPG supply will be available in Mumbai. But it is important to remember domestic LPG supply is still intact, especially in cities like Mumbai.
Well, joining us now to take this discussion ahead is with us Narendra Taneja, energy expert, and Sheikh Salahuddin, General Secretary of the Indian Federation of App-Based Transport Workers. Mr. Salahuddin, coming to you first, we've seen the statements that you have issued as a part of your association. Give us a sense of the impact that the gig economy workers are experiencing. We've been hearing from restaurant owners saying that they will have to shut operations. What is the immediate impact for you as well as for the gig workers operating with these restaurants with platforms such as Swiggy and Zomato?
Yeah, obviously last 2-3 days little bit affected. Now we hope upcoming 2-3 days large of affected, because already started the problems are facing the delivery boys. Not only delivery workers, Swiggy and Zomato, now we have to started the problem from the ride hailing, cab drivers and auto drivers onwards. Because you can see the LPG stations, CNG stations also, gas not available. Some places gas filling stations available, but take the charges very high. You know, the 72 rupees CNG cost has now 92 rupees. This is not good. Immediately 10 rupees has increasing in within 2 days. This is the big impact. Now again the gig workers is the alternate source from the ride hailing side. No one alternate, that the petrol vehicle only alternate. You shift from CNG, LPG to petrol, but petrol cost also very high. But platform companies, no one can come forward to increases to be high from the workers. That's why drivers are suffering the lot of problems from auto and cab drivers from ride hailing aggregator side. And other side,
Mr. Salahuddin, if I can just come in,
we have to create the awareness from the the delivery workers to move from the e-commerce side, because e-commerce little bit access. But I know very well about all the restaurants, little bit small warehouses, home kitchens, and the street vendors like Swiggy and Zomato attached with them. Those all are already shut down. This is the big impact. The workers are facing the lot of problems, but we try to find out how to problem will be resolved from Telangana Gig and Platform Workers Union and Indian Federation of App-Based Transport Workers. We are trying back to back create the awareness from the workers, go and transfer immediately from
Mr. Salahuddin, if I can just come in, from the feedback that you've been getting, from members of your association, can you give us some indication, some statistics with respect to how many restaurants have been shut down? What is the experience of gig workers in terms of reduction in the number of daily orders that they're looking at?
Approximately, I don't know how many restaurants shut down in Pan India, but approximately in our notice, 20 to 25,000 small and medium restaurants already shut down from who was the daily wages as working from city outskirts of the cities and cities in mid of the cities. Every day, the roadside street vendors also. This is a big impact. The big restaurants has managed from the coal and everything, but again small vendors not possible to restaurants vendors is to do this supply chain.
Mr. Salahuddin, if you can come in on your set of recommendations that you've given the government in terms of resolution of this issue, and what your expectations are in terms of support from the platforms as well. We're given to understand that you've sought for an amount of 10,000 rupees from individual platforms as well. Throw more light on that.
I think that not good 10,000 asking, but yeah, we are asking to kindly job security at the same time, kindly support with the Swiggy and Zomato workers because these workers long time in your platform. Now a time to you have to give the support from the workers. And another, the especially cab drivers, ride hailing, Ola, Uber, and Rapido. And same thing, prices should be platform companies increase because CNG and petrol, diesel prices will be high. That's why you can increase. That's why you can immediately demand and supply should be increased. That's why, because otherwise,
Right, Mr.
drivers are
Salahuddin. Right, Mr. Salahuddin. Let's also get Mr. Sukhdev Singh Sidhu. He's joining us. Mr. Sukhdev Singh Sidhu is the president of Punjab Marriage Palace as well as the Resort Association. Mr. Sidhu, give us a sense. We're also hearing about the impact this is having in the midst of the wedding season. How are your plans getting disrupted due to the gas shortage? Are you having to rely on black marketers for gas supply? What are you doing in terms of addressing this gap?
Okay. Yes, you are right. You have rightly said. We are in the middle of the wedding functions. There are around 5,000 to 6,000 marriage palaces and resorts busy with the wedding functions. The guests are at your doorstep, and we don't have any cooking material, gas. And in Punjab, we cook food with the gas only. And once the wedding is on, all the agencies are working there. Guests are at your doorstep, and you don't have food to serve to your guests.
Are you seeing cancellations, Mr. Sidhu?
Becoming very difficult.
In the midst of the wedding season, in the middle of the wedding season, are you seeing cancellations of programs, of events, of weddings going forward as this?
Cancellations are possible only before 1 month before the wedding. You have printed your cards. Right. You have paid advances to all agencies. He may be caterer, he may be tent wala, he may be sound wala, he may be food cook and decorations. There are about 15 agencies involved in the wedding function, and you have paid them advances. And more than 75% of the stand paid, and they have already ordered for the materials for your wedding. So they can't be got refunded.
Mr. Sidhu, any specific items that you're no longer able to cater to or serve as a part of these wedding programs that you'll have to now exclude due to lack of gas supply?
You see what is there in the wedding. It is only your food, drinks, snacks. You serve in the food, and people come to eat and sing and enjoy. Without food, you can't enjoy the wedding. If food is not cooked, the wedding cannot be celebrated.
Let's also get in Mr. Taneja, who's joined us as well. Mr. Taneja, thank you for joining us. Again, Mr. Taneja, we're getting initial reports, unconfirmed reports, with respect to tankers crossing the Strait of Hormuz, heading towards India. Do you see this as perhaps a turning of a curve where we may see perhaps greater certainty, or will there have to be diplomatic gesturing that India will now have to overcome to secure safe passage out of Strait of Hormuz?
Well, I would think it's a bit too early to say anything, with confidence or in a conclusive manner. We saw a few tankers, the Chinese tankers, being allowed by Islamic, guards to move northward. And we saw a couple of Indian tankers also were allowed yesterday. But look, I mean, the Strait of Hormuz is, guarded by Islamic Revolutionary Guards. And my sense is that they probably have their own way of looking at the things. I mean, Foreign Minister of Iran has been saying for many days now that the Strait of Hormuz is open, it's not closed, it's not shut down. Yet we find that, the Revolutionary Guards, Iranian Revolutionary Guards, Islamic Revolutionary Guards, they keep sending radio messages to every single tanker or ship in that area that don't dare to cross. If you did, we're going to hit you. And we saw that yesterday. So I think if we have to go more by what's happening on the ground, on the horizon there, and vis-a-vis, especially the Islamic Revolutionary Guards, then the diplomatic statements coming out of Tehran. Because the situation there seems to be very different right now. It appears that there are multiple, power centers. Probably that's part of the strategy to decentralize decision-making. But those responsible in the Strait of Hormuz, they probably are taking the call based on the ground reality over there.
Well, that's the situation that's unfolding before us. We'll, of course, continue to get our viewers the latest on those developments with respect to tankers bound for India, crossing the Strait of Hormuz. We'll, of course, seek out more details from the government. But that's all that time that we have. It's a break that we're heading in for. But don't go anywhere. We'll discuss how India can navigate the maritime challenge amidst the West Asia crisis. Former Indian diplomat Anand Trigunath joins us on the other side. Stay tuned.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central,
providing sharp market intelligence for wealth creation with a commitment to doing it right.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
presented by Standard Chartered. Associate sponsor, Reliance Industries.
This is Network 18, and you're watching CNBC TV 18.
The conflict in the Middle East is having significant impacts on global oil and gas markets, with major implications for energy security, energy affordability, and the global economy. IEA countries have unanimously decided to launch the largest ever release of emergency oil stocks in our agency's history. This is a major action aiming to alleviate the immediate impacts of the disruption in markets. But, to be clear, the most important thing for a return to stable flows of oil and gas is the resumption of transit through the Strait of Hormuz.
What does it take to build India's largest startup platform? CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV 18, weeknights at 7 p.m. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart?
Hello and welcome to this special show. I'm Ashmit Kumar. The West Asia conflict continues to escalate with fresh airstrikes and drone attacks across the Gulf, raising fears of further disruption to global energy supplies. The Strait of Hormuz remains effectively off limits for the 13th day after Iran reportedly targeted multiple oil tankers in the Gulf waters, keeping markets on the edge. What we're given to understand now is that we are hearing from the Petroleum Ministry, we're hearing from senior officials within the government. Let's go across to those visuals from the National Media Center.
Sharma, Joint Secretary, Ministry of Petroleum and Natural Gas, to brief on the energy security related aspect. The remarks by Ms. Sujata Sharma.
So good evening, everybody. So today is the 13th day of the war, and the Hormuz for the commercial shipping is closed. This is very important in the context that we do take a lot of import from the Strait of Hormuz, although after the intervention of the government, as on today, more than 70% of our import is coming, as I have told you yesterday also, is coming through the routes other than Strait of Hormuz. So as far as the crude is concerned, the situation is quite comfortable, and I told you yesterday also that we use almost 55 lakh barrels of oil every day. One more thing that I will like to bring to your notice is that we are the 4th largest refiner in the world, and this is something which is giving us a lot of comfort in terms of the availability of the products like petrol and diesel. As you already know that on 9th of March, we have Ministry of Petroleum and Natural Gas has issued order under Essential Commodities Act, which has directed all the refineries to maximize the production of LPG. And as a result of that, the production has increased. Yesterday, I told you 25%. Now, it is 28% of our domestic production. So that is the increase. We have a very vast network of retail outlets. Almost 1 lakh retail outlets are operating in the country, and majority of these are with public sector oil marketing companies. And no dry out has been reported on any of these retail outlets. So regarding natural gas, some of the imports were affected because of the force majeure clause, but the alternate arrangements have been made. And other than that, for the demand side management, both to do the demand and supply side management, the control order has also been issued. And regarding that, it was briefed yesterday also. Now, let me come to the supply of LPG. I mean, you know that we import almost 60% of our LPG, and most of it, almost 90%, comes from Strait of Hormuz. So it's a difficult situation, but the government is making all efforts to ensure that the supply to the domestic consumers is ensured. As I already said, that the refining LPG production in the refinery has enhanced. We have almost 25,000 distributors throughout the country, and we deliver almost 50 lakh cylinders on daily basis. On the distribution side also, no dry out has been reported, but there is a manifold increase in the booking because of the panic. We urge the citizens to avoid panic booking, and all efforts have to be made to conserve the fuel wherever possible during this period of global uncertainty. Regarding non-domestic LPG or the commercial LPG, as already told, we have prioritized certain sectors like hospitals and educational institutions. And for rest of the consumers, a 3-member committee of the executive directors of the oil marketing companies has been formed. They have received certain representations. They have gone through it, and a major decision has been taken. And it has been decided that some commercial cylinders will also be released, but here the role of the state government is going to be very important, and state government have been requested through the oil marketing companies to identify the list of the beneficiaries so that the delivery of the cylinder, commercial cylinder, can be made on a priority basis. And also, this is important because we want to avoid hoarding or black marketing. Regarding this is one side of the picture, but the effort is to make other fuels also available to the consumers. And so, alternate fuel options are being activated to ease pressure on LPG and gas channels. On quarterly basis, Government of India does an allocation of kerosene to the states, and every quarter we are making an allocation of almost 1 lakh kiloliter. Today the order has been released, and another 48,000 kiloliter of kerosene will be released to the state governments. And here again the role of the state government is very crucial in terms of identification of the beneficiaries and also the distribution. Other than that, Ministry of Coal has also issued a letter yesterday, and the directions have been issued to Coal India Limited and Singareni to allot higher quantities of coal to the state so that supplies can be made to the small, medium, and other consumers. Ministry of Environment, MOEFCC has also advised the state pollution control boards to permit for the duration of this crisis period the use of biomass, RDF pellets, kerosene, or coal as alternate fuel for hospitality and restaurant segments for 1 month, which would enable a wider range of establishments to switch and free up the LPG for priority consumers. The senior officials of oil marketing companies are in touch with all the state governments, and they have been directed to brief the state government on daily basis on supply situation, priority sequence, and enforcement framework. District level committees are being established to monitor the supply situation and to stop diversion. Thank you.
Thank you. I now request Sri Rajesh Kumar Sinha, Special Secretary, Ministry of Shipping, to brief the media.
Thank you. Good afternoon, everyone. The number of Indian flagged vessels operating in the Persian Gulf region remains unchanged. The number was 28 yesterday. It remains 28 today. Of these 28, 24 are located on the west of the Strait of Hormuz, which has 677 Indian seafarers, and 4 vessels are on the east of the strait with 101 Indian seafarers on board. All Indian vessels and crew thereon are being actively monitored for their safety and security. Authorities, ship managers, and recruitment agencies are closely coordinating with the Indian embassies and local authorities to ensure safety and render medical assistance. This continues even today. Advisories issued on precautionary measures to safeguard Indian seafarers, Indian flagged vessels, and maritime trade operations issued by DG Shipping on 28th February 2026 remain in force. Major ports have been advised to coordinate with agencies like Customs and DGFT to consider relief in port charges and submit daily action-taken reports to the Ministry to ensure seamless logistics support during this period of crisis. Government has taken coordinated measures across infrastructure, financial facilitation, energy security monitoring, and vessel safety operations. Dedicated 24-hour control rooms are operational both in the Ministry and in the Directorate General of Shipping. The DG Shipping is also maintaining constant contact with ship owners, operators, and the families of the seafarers to provide timely updates and necessary assistance. There have been maritime incidents involving Indian crew on foreign flagged vessels. Of these vessels, there were 78 Indian seafarers. Of these, 70 are unhurt, escaped. 4 sustained injuries last few days, but are stable. Unfortunately, there have been 3 casualties, and 1 seafarer is missing. Ministry continues to closely monitor the prevailing maritime situation in the Persian Gulf, the region, and has strengthened monitoring and preparedness measures in view of the evolving situation in that region. Regular interaction with the industry and stakeholders is being maintained to provide all assistance, and government remains fully committed to ensuring safety and welfare of Indian seafarers and protecting India's maritime interests. Thank you.
Thank you, Rajesh. Now I request Sri Randhir Jaiswal, Additional Secretary, Ministry of External Affairs, to brief.
Thank you, sir, for giving me the floor. Let me, ladies and gentlemen, update you with developments as far as Ministry of External Affairs is concerned. External Affairs Minister, he spoke to the Foreign Minister of Indonesia some time back. The 2 leaders exchanged perspectives on the West Asia conflict. They also discussed issues of bilateral importance and cooperation. Coming to our community in the GCC countries and the West Asia region, our mission, as I had said in my press briefing a little while ago, as also yesterday here, our mission continues to be in close touch with them and is helping them with information regarding commercial flight options and other needs that they may have at this point in time. More on that will be given by my colleague, Additional Secretary Gulf. As you know, we have around 9,000 Indian nationals in Iran. We also have several Indian students who are part of our community there. The embassy in Tehran is helping Indian nationals to leave Iran who want to leave the country via Armenia and Azerbaijan, availing the commercial flight options that are available from these two countries. Our embassy in Tehran is helping Indian nationals with visa facilitation, as also international land border crossings. Several of our nationals have taken advantage of this option and have come back to India. We urge other Indian nationals who wish to leave Iran to take advantage of this handholding that is being done by the embassy, and our embassy has also issued an advisory in this regard. To update you, our colleague from the Ministry of Shipping has already updated you with the casualties in this ongoing conflict. Let me add a little more to that. As he said, that we've lost so far 3 Indian nationals, and the 4th Indian national is missing. All these 4 nationals were part of crew on-board merchant ships plying in the area. Our embassies in Oman and Iraq and our consulate in Dubai are working with local authorities to have their mortal remains transported back to India at the earliest. Let me also add that this is also the reason why India strongly condemns the attacks on merchant ships from any quarters. The latest casualty of an Indian national happened on board ship Safe Sea Vishnu, which is a Marshall Island flagged vessel. This happened close to Iraq. There were overall 28 crew members, of which 16 were Indian nationals, but we lost 1. So 15 Indian nationals have been rescued and they have been taken to Basra. Our embassy in Baghdad is in touch with them and is offering all assistance. The 1 Indian national who passed away, we convey our deepest condolences, and we'll see how best we can have the mortal remains transported from there to India. As far as people who are injured, over 24 Indian nationals have been injured in this conflict so far. Several of them have recuperated and returned home after being in the hospital for treatment. Our embassy across the GCC region has been in touch with these people. Few of them continue to remain in hospital, and 1 or 2 of them are serious as well. Just to update you that the 2 fatalities that we've had earlier was all the fatalities that we have so far have happened on board merchant ships. I just gave you the details about Safe Sea Vishnu. Let me also tell you that this particular merchant vessel, Skylight, which came under attack, where we lost 1 Indian national and 1 continues to be missing. There, the 8 members who were on board, their travel documents have been, and necessary formalities have been completed. And the embassy in Muscat is in touch with the company so that other requirements can be fulfilled and they can come back home. So that arrangement is in process. The other ship which came under attack was MD Vyom. There we lost 1 Indian national, and 16 of them, there were 17 in total Indian nationals, 16 of them have since been, they have returned back home. So that was an update from our side. My colleague would like to add more. Asim, would you like to take over?
Thank you, Randhir. Good afternoon. At the beginning, I would like to reiterate that the well-being, safety and security of the large Indian community residing in the Gulf and West Asia region remains our utmost priority, and we to this effort, we are constantly monitoring the current situation and are also closely in touch with the local host governments in all the concerned countries. Our missions are issuing regular advisories on a daily basis, sometimes twice in a day, and the advisories inter alia provide various details, including the local information which is shared by the host governments. The host governments have been very proactive in reaching out to our missions, updating them about the current situation, anything which is of importance for the community, any precautionary steps or any such related details. So we are regularly updating that. We are also regularly updating our operational helplines. We are updating the availability of flights and also keeping our community informed about the coordination mechanisms which have been put in place by our missions and consulates, especially with the local host government. The Ministry of External Affairs has a dedicated control room which is addressing many of the queries. We are also in close touch with all the state governments and governments of union territories to update them, and they have been in touch with us. Whatever information we are receiving on a real-time basis, it is being shared, and our missions are immediately reaching out. The helplines of our missions are working 24/7, including through various media channels and also through other social media applications. As I mentioned earlier, the local governments, the missions are in local touch with them, including the civil aviation authorities, the Ministry of Foreign Affairs, and other concerned agencies of these countries, which are keeping us informed about the current situation. On the measures which have been taken, the notable measures which have been taken by our missions and consulates, especially for stranded Indians, the short-term visitors and Indians who were in transit. Most of them have been able to leave. For example, in UAE, the flights have been ramped up and currently flight availability is there. In all other countries also, we are monitoring it on a daily basis and we keep them informed on a regular basis. Where required, they are being provided logistical support, including in terms of accommodation, transit visas, or facilitation of visas from neighboring countries where there are partial flights are not available or airspace is closed, and they are then being assisted for visas. For the resident communities there, our missions in different configurations and geometries are engaging with the community on a regular basis. We have a very vast network of community organizations across these countries. As you are aware, we have a very large diaspora, and these community organizations are also in close touch with our missions, and they are also supporting in our efforts to disseminate information. And I must add that it is important that the information is credible and authentic, and to that extent, I think we need to exercise caution. I will like to update you on the current flight situation and airspace positions. As far as information available with us, we have almost around 130,000 passengers who have returned to India through various flights which are operating. Non-scheduled commercial flights are also operating. From UAE, regular flight operations are taking place from all the airports there, and a number of operators are working from there. Flight availability has increased much more, and they are regularly available. From Saudi Arabia today, Air India and Indigo are starting operations from Riyadh. Other foreign carriers were already operating from Riyadh, and from Jeddah and Medina already we have regular flights. In fact, for Umrah passengers also who are going to perform Umrah, they are regularly going and returning. So in Saudi Arabia, on the ground, all flights are available. From Qatar, Qatar Airways has started flying. We had 5 flights, and today again 2 flights are coming, and I think operations are being ramped up. From Kuwait, they are working from a nearby AQI airport in Saudi Arabia. We are hopeful that from there also the Al Jazeera Airways, they will start operations to India, but we have facilitated movement of passengers from Kuwait via Saudi Arabia. From Bahrain, Gulf Air is operating from Dammam, and they have also made arrangements for people to get transit visas and go directly. So I think they will also be ramping up operations in the next few days, and in Oman regular flights are available. So overall the flight connectivity is improving and flights are available, and in most of these places we have worked out modalities and mechanisms for people to travel. One of the incidents which has happened today, my colleague has already updated you about the incident on MT Seaface Vishnu, which was conducting loading operations off Khor al-Zubair post near Basra today. And out of the 28 crew members, 16 were Indian, and there were 16 Indian nationals. Unfortunately, one Indian national lost his life, and we expressed our deepest condolences for that. But I must mention that our mission has reached out to them. They are in touch with them. We are trying to reach out to the families of all the crew members also, and they have been safely rescued, and we will continue to render all assistance to them. And finally, I should mention that our missions and posts are innovating. They are trying to take steps which are, which basically to update our communities on a real-time basis. And we continue to monitor this current situation. We have our helplines are constantly open, and as an abundant caution on the media front, especially, I think we need to exercise caution, especially on generation of fake content and other reports which are not credible. So that is what I have to share with you today. Thank you.
Thank you very much. Now I request Senthil Rajan, Ministry of Information Broadcasting, Joint Secretary, to brief.
Good afternoon. And just as our colleague from Petroleum Ministry had pointed out, that on a daily basis, almost 50 lakh cylinders are being delivered by all the oil marketing companies, and it is being delivered across the country. So there is an important need that should not be any. We have an appeal to all the citizens that there should not be any panic booking. Though there is some concern, but still all steps have been taken to ensure that supply is maintained. And as she has already mentioned, there has been no dry out, and so the citizens need not panic. And we appeal through this media that please do not panic book. There is no need for panic booking of cylinders. That is number one. Number two, as far as the steps that are being taken, as we have already Petroleum Ministry has outlined, but it is also important that the state governments do the needful at the ground level to take action. So the district level monitoring committees will play a very important role in ensuring that this distribution happens in a timely manner and in a very regulated manner. So we appeal to all the state governments to ensure that the district level committees are put in place and they all monitor the distribution of LPG cylinders. The third part is regarding rumor mongering and fake news being circulated on social media. We appeal to all social media users to not spread misinformation and fake news. This is very important in this time of point. And all social media users may only push and post credible content, which is their verified content. We also appeal to all TV channels which are playing out visuals of certain places to not to replace the same visual again and again, but if you are using some visual at some point, it should be since it's a very constantly evolving situation, the visuals need to be date and time stamped, because some visual playing of a small incident playing throughout the day on a channel, and it looks as if there is a total panic situation across the country. So we appeal to all the TV channels to play visuals with date and time stamp so that we know when this issue or any particular issue from the ground has happened, so that there is credibility to the data that the visuals that you are playing. And lastly, I think also we also appealed yesterday also the state government needs to take action against black marketing and people who are hoarding. There have been some, the state governments have already started initiating action, but we feel that in the current situation, this has to be further strengthened.
Thank you, Senthil. We will take a few questions now. So I would request you to please introduce yourself and your organization's name. So first is 190 from the center. Yes, here, 190.
Hello, I'm Sahil from ENI News Agency. My question is related to what steps is the government taking to ensure that household LPG supply is not affected, and from where we are sourcing, if we can also brief us on that.
So that's also.
See, LPG supply in the domestic market depends upon the management of both demand and supply. And the government is taking action on all the fronts. As far as the supply is concerned, we are putting efforts and we are trying to increase the domestic production of our LPG. At the same time, wherever the imports are possible from wherever, that is also actively happening. So that's one part of the thing. And the second part of the thing is the management. I mean, how you will manage your demand. So in that case, we have the booking period has increased from 21 to 25 days for urban households. That is one. Second important thing is the prioritization of the households. So it is ensured that there is no shortage of supply for the domestic households. That is second. Third important thing is there was a request that certain, commercial cylinders also should be supplied. So that also is reviewed, is under consideration. And in fact, the detailed discussion has happened with the Chief Secretary of Delhi government. And it has been decided that the oil marketing companies will be releasing some commercial cylinders also, 19 kg cylinders also. But then the role of state government or the union territory is very, very important to ensure that the distribution happen in a transparent manner, in a prioritized manner. So that's another point. And one of the most important point is that what are the other alternative fuel options available to the consumers? So if we have to free the LPG for the prioritized sector, what are the options to the other people, the commercial people? So for that, as I have already read and I have informed you that kerosene release has happened. The coal supplies, it is ensured that the coal supplies are there. And the MOFCC also has released the order whereby they are. MOFCC has also released the order, thereby allowing the use of these fuels for, by the commercial establishment. For example, hospitality and restaurant. I think this will give lot of relief. Thank you.
271 from left side.
Good evening, ma'am. Danish Anand from NDTV Profit. You have mentioned that the OMCs will be supplying 20% of the commercial cylinders. So how will the state governments decide that which should be the priority? And second question is that there are a lot of reports around people unable to still book cylinders online and offline.
See, I will take the second question first. Regarding the booking, I will say that it is because the time limit is there. You cannot book your cylinder before 25 days. That may be the reason why some people are not able to do it. That is one. Second thing is, state governments are the best judge to identify and to prioritize the consumer in their area. So whether it has to be like, we have already prioritized that educational institutions should be supplied. They should not be cut. And the hospitals, the supply has to be maintained. Similarly, the state government, the district magistrates can also prioritize who are the consumers to whom the supply should be made.
Right side, 187.
हाय सर मैम, दिस इज मानव फ्रॉम रिपब्लिक भारत। मैम, हम विजुअल्स देख रहे हैं देश भर से, रेस्टोरेंट जो छोटी इंडस्ट्रीज हैं मुंबई में, बेंगलुरु में, वहाँ पर जो नॉन डोमेस्टिक सिलेंडर है उसकी कमी काफ़ी हो रही है। क्या कोई ऐसा नंबर हमारे पास है कि कितने छोटे इस्टेब्लिशमेंट्स प्रभावित हुए हैं? साथ ही सरकार इसको कैसे टैकल कर रही है?
I don't have the number, but how we are tackling, I think I have just answered that.
39.
सर, मेरा नाम अनुवेश रथ है, मैं जी बिजनेस से हूँ। सर, मेरा सवाल यही है कि क्या ड्यूरेशन जो एलपीजी सिलेंडर्स का है उसको बढ़ा दिया गया है, क्योंकि कई जगह ये बोला जा रहा है कि उसको बढ़ा करके 40 दिन तक कर दिया गया है। वहीं पे एमईए से मेरा ये सवाल है सर, जिस तरीके से ये खबरें चलाई जा रही हैं कि स्ट्रेट ऑफ हॉर्मुज से अब भारतीय फ्लैग शिप को पास करने दिया जाएगा, ऐसी कोई बात है? क्योंकि कल ही हमारे फॉरेन मिनिस्टर ने बात भी की है और लगातार बातें चल रही हैं, बट ऐसी कोई क्लैरिटी अगर आप लोग दे सकें।
देखिए, आज जो सिचुएशन हम देख रहे हैं वो हमने रिसेंट पास में कभी नहीं देखी है। सो स्ट्रेट ऑफ हॉर्मुज बंद होने से उसका इम्पैक्ट हमारे डोमेस्टिक सप्लाईज पर है। अब इस सिचुएशन में व्हाट आर द बेस्ट सॉल्यूशन अवेलेबल टू अस सो दैट वी एंश्योर द सप्लाईज, एट द सेम टाइम we stop diversion and hoarding has been exercised by the government. So for urban consumers, yes, the booking days is 25 days, cycle. And for rural consumers, since yesterday night, it has been increased. Now the booking is possible after 45 days. Yes.
Well, that was a briefing by senior government officials across ministries, Ministry of Shipping, External Affairs, Petroleum and Natural Gas, INB, giving more clarity on how the situation is being addressed. But speaking of the energy crisis that we're looking at, the U.S. Energy Secretary Chris Wright has said that the Navy, the U.S. Navy, is not ready to escort tankers from the Strait of Hormuz just yet. But he said that the Navy escorts are quite likely by the end of this month.
It'll happen relatively soon, but it can't happen now. We're simply not ready. All of our military assets right now are focused on destroying Iran's offensive capabilities and the manufacturing industry that supplies their offensive capabilities.
Do you think by the end of this month, the U.S. Navy will be escorting some of those ships through the Strait?
I think that, yes, I think that is quite likely the case. But again, I'll be over at the Pentagon later today. But that is what the military is working on.
Well, there you have it, the U.S. Energy Secretary Chris Wright there. With that, we're heading into a very short break. More news and updates will continue on the other side.
Presented by Standard Chartered. Associate sponsor, Reliance Industries.
This is Network 18, and you're watching CNBC TV 18.
The conflict in the Middle East is having significant impacts on global oil and gas markets, with major implications for energy security, energy affordability, and the global economy. IEA countries have unanimously decided to launch the largest ever release of emergency oil stocks in our agency's history. This is a major action aiming to alleviate the immediate impacts of the disruption in markets. But, to be clear, the most important thing for a return to stable flows of oil and gas is the resumption of transit through the Strait of Hormuz.
What does it take to build India's largest startup platform? CNBC TV 18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key news makers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV 18 weeknights at 7 p.m. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro